should be on the table.
I don't think they're going to do 50. I think it is justified.
The risk is that the Fed ultimately won't deliver as much as they should, and that kind of reinforces the slowing that we've already seen.
This is a big question for later this afternoon. Can this Federal Reserve meet this market? At the last time we got a news conference and forecast, which was earlier in the summer, they were looking for 2 rate cuts in 2025. This market is looking for 3, and it's looking for a whole lot more in 2026. The bar for this Federal Reserve is really quite high following these really disappointing payroll reports.
Yeah, especially given that they are still dealing with a dual mandate that is very much in conflict, and that they're dealing with a highly politicized environment where there clearly is an incentive, at least by the administration, to cut rates. My question is, how much will that actually increase the pace of lending at a time where financial conditions already are pretty loose?
Let's get to the small business world. Liz Everett-Chrisberg, the head of the Bank of America Institute, writes the following. Tariffs remain a hindrance to small business profitability and have continued to rise since the start of the year. Liz joins us now for more. Liz, good morning.
Good morning. Thank you guys for being here.
Thanks for having us.
Great to have you here.
Thanks for having us.
Oh, yeah, great coffee.
She approves of the coffee, and you want to come back, right?
Well, I love the noises. It's great. This is great.
OK, I'm pleased with that.
We can go.
Let's deal with this. Of course, the biggest small business lender in the country.
Yes.
17th consecutive quarter. Congratulations for that.
Yes.
What are you seeing in the small business world right now? Do they need lower interest rates?
So what we're seeing, and by the way, as you know, the largest small business lender for the 17th quarter in a row, we can see the activity because we're providing these small businesses with capital. But what we're seeing is that profitability is actually continuing to grow, and it's relatively stable. So it was up about 0.5% in August, same way that it was in July. But we are seeing that despite kind of the tariff pressures, and hiring is also a bit of a challenge, and we're starting to see hiring pull back. So one of the things that we see in our data from a spending perspective, what we measure is we measure the payments that small businesses are making to hiring firms. And that has been a pretty good indicator of what's going on with the labor market. And in August, we saw that drop by 6%. On an absolute basis, it was the lowest level of payments we've seen since we started this series back in 2023. So you're seeing small businesses kind of pull back on their hiring, particularly in retail and services firms, financial firms, insurance firms. But there is one area of small business where we're seeing hiring fees go up, and that's manufacturing and construction. Why is that? Very likely has to do with some of the changes in immigration policy. If you look at the percentage of construction workers who are not native born, it's relatively high.
Do you think that's the start of something bigger? We've talked about this low-fire jobs market for a long time. We're trying to work out which way it breaks. Can it maintain the sort of status quo? Does it have to break one way or the other?
So here's one of the things. Let's go look at our consumer data and understand what that's showing us about the labor market. Surprisingly, given what we're seeing in the non-farm payroll numbers and whatnot, we're actually seeing wages continue to increase across all income groups. So higher, middle, and lower income groups, you're continuing to see their wages increase. Higher income wages increase 3.6%. That is the highest level we've seen since November 2021. But lower income consumers, lower income household, their wage growth is up less than 1%, the lowest level of absolute growth that we've seen since we started this series back in 2016. So you're seeing a bit of a difference in kind of a tale of two cities in terms of different levels of wage growth, of income growth, kind of across the spectrum.
When we talk about a tale of two cities, it seems to be divided into some of the large caps and the small caps, or it has so far this year. This idea that even as the likes of United see a reacceleration in consumer demand, are some of these smaller companies seeing the same? Is their optimism increasing heading into year end?
I do think that we are seeing payments away from hiring. They are continuing to spend. And really where we're seeing a big investment is in their technology spend. So technology spend for small businesses was up 10% last month. Now think about that. What does that mean? That means that these small businesses are investing. They're looking at AI as ways to kind of improve the productivity. But that may also impact their hiring plans, right? That's across the board, small businesses, large businesses, you're seeing that as well.
Well, I wonder then, if rates do go down, how much do you expect borrowing to increase? Or what kind of rate cuts would it take for a lot of these small firms to borrow more? And what would they invest in?
That's a good question. You know, one of the things that we do is we look at the data as it's happening. So what we could look at is what they have been investing in, and I think technology is probably where it's going to go.
So this actually goes to the question that John was asking, the low hire, low fire churn.
Yeah.
Is this the new normal in terms of invest in technology, see if you can do it with a bot, see if you can do it with an AI agent, and if you can't, then I guess you got to bring a body in?
Well, I think one of the bodies that we're seeing not come in is younger workers. So if you look at the unemployment rate for households, we're seeing the biggest growth in households getting unemployment being the younger consumers. So recent college grads, Gen Z, their unemployment, number of households with unemployment was up 11% in August, right? Now, it's still off of a relatively low base, but for those younger consumers, are they getting into the workforce? Low hire, low fire means that if you already have a job, you're continuing to get paid. But people getting into the workforce, that may be a bit of an issue. So something that we're paying attention to.
Have you got any thoughts on what's behind that? What's holding them back? What's holding back the hiring?
Well, I think it's companies are looking at where they can get efficiency, looking at, where a little uncertainty, do we need to bring on new people, or can we just continue with what we're doing, what we have right now? Is AI going to make that more efficient? So if you've got a job, continuing to see pay increases, but if you're trying to get into the market. Now, the other thing that's interesting is we're seeing many fewer people change jobs. That's one of the things that really drove the wage growth through the pandemic, because people could switch jobs and get a lot more money. At the peak, they were getting north of 20% to switch jobs. What our data is showing us now is actually we're down almost 25%, more than 25% in terms of the number of people who are changing jobs. So you don't have that benefit of pushing up your wages by changing jobs, fewer people changing jobs, and those who are only getting about a 7% average pay bump. So you're not getting 20% to move jobs, you're only getting 7%, fewer people are doing it. That's kind of keeping people where they are.
This labour market's not as tight as it once was, maybe. No. Perhaps that's what that speaks to.
It's not as tight as it once was, but it's also not falling off of a cliff, right? Higher wage workers, 3.6%. That's growing more than their spending, which is also relatively strong.
Yeah.
But it's more than inflation too.
Could we talk about bank balances?
Yeah.
What are you seeing at the moment? I always
Your
enjoy going
favorite
through the consumer
statistic.
checkpoint. Yeah.
Yeah.
How are things doing?
So the financial picture continues to be solid. If you cut the data by income, by generation, everybody has more money in their accounts, inflation adjusted, than before the pandemic, with one exception, and that's the traditionalists, which are the generation above boomers, and you would expect to see them kind of pulling down on their savings. But not only do people have more money in their accounts, you're also seeing pretty healthy credit card behavior, meaning fewer people are carrying a balance. And those that are carrying a balance, the ratio of their credit card debt to their income is actually coming down. And again, it's because of the labor market, their wages are up.
Nothing is screaming cut interest rates 50 basis points, based on that conversation.
Well, and if you do cut by 50 basis points, what it strikes me is, where is that investment going to go? Back into tech. So tech is the new economy, and any kind of additional investment, that's where it's headed.
Liz, it's good to see you.
Great. Thank you guys for being here.
Hey, thanks for having us. We appreciate it. Liz Everett-Chrisberg there of Bank of America Institute. Up next on the programme, we'll catch up with Savita Subramaniam, the Equity and Quantitative Strategy Head. We'll speak to Eric Schimpf and Lizzie Hunt of Merrill Wealth Management, and Wendy Stewart of the Global Commercial Banking Unit. From New York City, this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live. something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
As long as the Fed is in motion towards lower rates, I don't think that there's a reason to sell.
It's hard to short a market in front of the Federal Reserve cutting interest rates.
The risk is that, at some point next year, the Fed says, look, we have to actually hike.
I do think that these Fed cuts are getting increasingly priced in.
The market's still trying to weigh, is something really breaking?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
We are live from #1 Bryant Park, the home of Bank of America, right here in New York City. Good morning to all. The second hour of Bloomberg Surveillance starts right now with equity futures on the S&P 500 pulling back by not even 0.1%. Just a little bit of softness this morning. Some mild moves yesterday. Treading water going into the big one later on this afternoon. The Federal Reserve decision at 2 p.m. Eastern Time. 30 minutes later, a news conference with Chairman Powell. We are all focused on one thing, not just the size of the cut, it's the amount of guidance this chairman can give.
Yeah, and potentially how many dissents there could be. The expectation is there could likely be 3 dissents from Stephen Myron. Of course, we also are expecting the other 2 dissenters from the previous meeting at a time. That would be the greatest number of dissents going back to 1988, just to give you a sense. So, yes, we're looking for guidance from Jay Powell, but looking forward, what does that mean in terms of his tenure and how much this is a fractured FOMC?
At some point, his guidance doesn't matter. His guidance matters up until May of next year. After May of next year, it's about someone else. And maybe the clue comes from someone else. Governor Myron stepping into this meeting at the very last minute is going to offer his views on where he thinks policy should be. That's going to be a massive focal point for a lot of people in this market.
Yeah, where's his dot? Does he have a dot, considering the fact that evidently you have to submit your dot on Friday before the meeting? And he was nominated and actually confirmed just days ago. So we're looking at the potential for his dot to not even get included. But if he does suggest that we do see something like a 100 basis point rate cut, that would be appropriate in his view. If he sees rates going down to 1%, do people take that as a guide, or is that the outlier? Does that mean he's a credible replacement for Jay Powell, or even for Lisa Cook, or even for some of the others? Or does this mean that really this is sort of something that's sort of pie in the sky?
Credible in the eyes of who? In the eyes of this market? Credible? Or in the eyes of the President of the United States, isn't this the ultimate audition to stay on the Federal Reserve for a whole lot longer?
Well, this two go in hand, right? The person has to be credible for markets for the person to be tolerable to the president. And this goes to the question of what is the Fed's response function if inflation starts to pick up? And this goes to the conflict in the data that we've seen where the economy doesn't seem to be falling off a cliff, but it is still that low higher, low flyer type of churn dynamic that's giving some people anxiety about the fragilities that are baked in.
We spent about 60 minutes so far with the team here at Bank of America on the trading floor and putting together a picture of the way they view the world right now. Yes, we've seen a step down in activity in certain places, particularly on hiring, but it might be a mistake to anchor your whole view of this economy just around one data point, which is headline payrolls, because there's a lot of things happening elsewhere that speak to an economy that's holding up okay.
Balances in terms of consumer bank accounts, just fine. Retail spending exceeded expectations. Yesterday, the United CEO came out and said that he sees an economy that is re-accelerating. How much can this continue? How much does this hinge on just how much retailers and other companies can pass along price increases? These are some of the questions that the Fed has to wrestle with. It is a difficult moment, but right now, bond traders just betting that rate cuts are coming and potentially more as well.
Equity traders too.
Yeah, exactly.
Equities close to all-time highs. Futures this morning down by around about 0.1%. Coming up this hour, big lineup over the next 60 minutes for you. We'll catch up with Amy Lizauer on the shifting balance of power between CEOs and investors. We'll speak to Eric Schimpf and Lindsay Hans on why this is neither a bull nor a bear market. Plus Wendy Stewart as investors navigate tariff uncertainty. We begin this hour with stocks hovering near record highs ahead of today's key Fed rate decision. Savita Subramaniam, the head of US equity and quantitative strategy, writing the following: it is difficult to be outright bearish on risk assets with signs of profits continuing to accelerate alongside a Fed that is more likely to ease than hold short rates. Savita plus Jill Carey-Hall, the head of US small and mid-cap strategy at Bank of America, joins us now for more. Guys, good to see you both.
Great to be here.
Thanks for being here. Savita, I want to start with you. A central message of your research for a long, long time: never underestimate the resilience of corporate America.
That's right.
Is that a mistake people have made too many times this year so far?
Yeah, I think we even made it after Liberation Day in thinking that, we were going to see companies not being able to guide, not being able to navigate this really complicated environment. And what we saw was corporates handling this with aplomb. And essentially, they continued to guide on earnings. We saw no paucity of information. We heard a lot of companies talk about their tariff mitigation tactics, which I think was interesting because they've seen this before. They went through this in 2018. Obviously, this is a little bit more extreme, but companies know how to manage. They just need a plan. And I think that was what we were heartened to see.
It's hard to have this conversation about 25 or 50 from the Federal Reserve. At the same time, the equity market is close to all-time highs. And you and the team here at Bank of America are essentially forecasting an acceleration in earnings for 2026. Can you make that make sense to people at home listening to this?
Well, yeah, we're actually forecasting a slight deceleration, but a broadening out of earnings. And what I think is really noteworthy and what investors need to pay attention to is the idea that the 493 is actually back in the black. These are companies that are making money. So it's not just tech all the time, which has been the story for the last few years. I think what's also interesting is that tech companies are spending, and they're spending on everything. They're spending on power grid, which is actually positive for overall economic growth. It's positive for commodities. And I think that's the message we're giving investors today. What's really thwarted broadening this year, I think, is just this bomb of tariff uncertainty that was dropped on April 2nd, and we're at a point where clarity has improved vastly around that issue.
Not just the 493, the 2000. And I am wondering, Jill, yes, we have seen a complete outperformance from the Russell 2000 of late, and you actually increased your expectations for some of these companies after being pretty sour on them earlier this year, especially after Jackson Hole. How much is this entirely predicated on what the Fed does, rather than what Savita is talking about, which all sounds lovely, but it's been in effect for quite a while?
Right. Well, I think the Fed has certainly been one of the biggest drivers
drivers of the Russell 2000 over the last year or two. Some of the biggest rallies and sell-offs we've seen have been around Fed expectations or data that feeds into that. So I think, the expectation of cuts coming is certainly more positive for the Russell and should lead it to outperform near term. But I think also what investors have been focused on, perhaps more so than usual, has been the profits backdrop, because a year ago, everyone was expecting that by mid-2024, small caps would have come out of their profits recession, that earnings would have broadened out and been outpacing large caps, and that just kept getting kicked out and kicked out. And we finally saw small caps come out of the profits recession this earnings season. We saw a big beat by these companies. We saw much better guidance. So that's been a positive sign. I mean, the sales data, the top line growth was a bit more lackluster relative to large caps. So that's something to pay attention to as we go into the next earnings season. But the fact that profitability is finally recovering and speaks to that broadening out of earnings is a positive.
Is the pop on the heels of a potential Fed rate cut because of just simply a valuation story, that lower benchmark rates make it more attractive on a relative basis? Or is it that actually they will borrow more, that they can do more that they aren't doing now, whether it's engage in M&A, whether it's engage in acquisitions, whether it's engaging in hiring plans?
Right. I think it's a bit of all of that. I think, but for small cap companies, they have a lot of debt, much more than large caps do. They have a lot of refinancing risk. They have a lot of debt that's coming due over the next 5 years. So there's a big focus on their interest costs at a time when their earnings have already been struggling for several years now in this profits recession. So, the Fed is likely a bigger driver than usual, given that focus, given their leverage profiles right now. So combine that with some of the positives we're seeing on the profits backdrop, and I think that's a positive near term. Now, the sustainability of the rally, I think, will depend on revisions, those top line trends, the manufacturing recovery. Small caps tend to be very sensitive to the ISM manufacturing indicator, which has struggled to get back above 50. So a lot of these factors will be what we're watching to see how sustainable this rally in small caps could be.
We had a guest that came on the program a few weeks ago that said to Lisa, can you name a company on the Russell 2000? Very few people can. When they buy the Russell, what are they buying? What's the concentration risk around, say, small caps relative to Savita's World Large Caps and the S&P 500?
Right. Well, there's some sector skew, certainly, in terms of more biotech. There's a lot more non-profitable, non-earner type of companies within the index, whether it be in biotech, small cap software, regional banks, REITs. There are some of these areas that are bigger within the Russell. But I think what's important is that there are still risks to the index. There are a lot of, like I said, non-profitable companies that's elevated versus history. So I also think it's a very good environment to pick stocks within the index. Our analysts here cover over 900 small and mid-cap U.S. stocks. So, amid all of these uncertainties, whether it's tariffs, whether it's how sustainable is this profits recovery, if you can focus on companies that, have better earnings revisions, have stronger margins, there are a lot of beaten down stocks within the Russell, and small caps overall are trading at these big relative discounts to larger companies. So it is a good environment for stock selection. We've seen the interest there. We saw a big uptick in attendance at our recent mid-cap conference. We've seen investors buying small-cap stocks this year.
Well, when you broaden out, this sort of complicated backdrop goes to Savita, your recent change, or both of your recent change in the outlook ahead. You only see a 6% gain from here until 12 months out, until the same time next year, to about a 7,000. That's far below where a lot of other people are. Why not higher, especially given the expectation for earnings growth to truly reaccelerate?
Well, I mean, here's the problem. The ballast of the S&P 500 has been tech, and tech earnings are slated to decelerate. I mean, these companies are really big. It's harder to grow as fast. These are companies that are spending more money on CapEx, so they're returning a little bit less capital than they used to, doing less buybacks. So I think that's the other side of the story, is the theme around AI. And I think what we would need to see a much higher return and even a positive surprise in earnings at an index level is continued AI monetization, big surprises akin to what we saw in the second quarter. And it's harder and harder to forecast that as we move forward and these companies get bigger and we're more deeper into the AI monetization cycle. So our analysts are bullish, but we are still seeing a deceleration in that area of the market. And then the other kind of simple fact that we all know is the market tends to anticipate earnings recoveries. We've seen some great returns this year. I think that's in anticipation of what's to come. And, you know, typically in the best earnings years for the S&P 500, the market actually posts kind of, you know, meh returns. So I don't know if we're going to see another blockbuster year of returns, but I do think that earnings are going to broaden out, and that's going to be an exciting story.
Given the focus today, anticipating the Federal Reserve decision, how relevant is that to your world?
Look, I mean, I know everyone is obsessed with the Fed, but I think that long rates are much more important for equities, and we've talked about this. So, you know, short rates have actually done very little to stymie large cap company performance because their balance sheets are healthy, they have less floating rate risk, they learned their lessons during the financial crisis and really managed their debt risk. So I think the long end is more important. And here's where it gets complicated. If the Fed is cutting, but inflation has not been, you know, sufficiently managed, I think that's the risk. If the long end, you know, absent yield curve control, the long end, I think, is really, you know, potentially more dramatic for the S&P. So that's what we're watching.
Is that something you're focused on, the risk of a repeat of what we saw last year when the Federal Reserve cut interest rates and the long end actually sold off and yields rose by, I think, about 100 basis points?
Yeah, we had a real steepening. I mean, I think that's good for certain sectors and bad for others. One reason we're overweight financials, you know, energy, some of the more inflation positive sectors that are geared to inflation. Those are sectors that can do well in that environment as long as this is not a disorderly increase in the long end, which is what, you know, we all worry about, especially on this desk.
The good news is, so far through September, long end rates have started to come back in. Yields are a little bit low. We've seen a bull flattening through the curve through September at least.
And part of it is because of what Savita just said. As long as we don't get yield curve control, well, that's actually kind of a big caveat.
It's a question into 26.
And it's a question of exactly how much this Federal Reserve is willing to push, particularly on that long end, especially because of the focus on the housing market.
Savita, Jill, you're two of the very best. We appreciate your time.
Thank you.
Thank you. Savita Subramaniam there and Jill Carey-Hall of Bank of America. If you are just joining us, welcome to the programme. Equity futures on the S&P, just a touch softer. Let's give you an update on stories elsewhere. With your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Republicans will hold a rare midterm convention ahead of next year's elections. President Donald Trump posting on Truth Social, the convention will, quote, show the great things we have done since the presidential election of 2024. Trump said details of when and where the convention will take place were to be determined. Shares of Nvidia trading lower in the pre-market. The Financial Times is reporting China's internet regulator has told the country's tech companies to stop buying all of Nvidia's AI chips that were destined for China and terminate existing orders. The move comes as Beijing steps up efforts to boost its homegrown semiconductor industry and compete with the US. Microsoft is investing $30 billion in the United Kingdom as it builds out the country's AI infrastructure. The tech giant plans to build the country's largest supercomputer. The plan extends through 2028 and marks the company's biggest financial commitment ever in the UK. And that's your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, we'll catch up with Amy Lissauer, the Bank of America head of global activism and rate defence. That conversation up next. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
AI 가장 브리핑 시작하도록 하겠습니다.
This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers.
자, 2025년 9월 16일 자, 화요일 시장에 어떤 일이 있었는지 알아보고 금일 주요 일정 살펴보도록 하겠습니다.
9월 17일 장마감 AI 모닝 브리핑입니다. 간밤 미국 시장은 연준의 금리 결정을 하루 앞두고 숨을 고르는 모습이었습니다. 그런데 예상보다 훨씬 강력한 소매 판매 데이터가 발표되면서 시장의 셈법이 다소 복잡해졌는데요. 오늘은 이 이야기부터 집중적으로 파고들어 보겠습니다.
네, 시장의 모든 관심은 현지 시간으로 수요일 오후에 발표될 FOMC 결과에 쏠려 있습니다. 시장은 거의 97% 확률로 25bp, 즉 0.25%포인트 금리 인하를 확신하고 있는데요. 최근 연이어 발표된 고용지표 둔화가 이런 기대를 뒷받침해왔습니다.
그런데 바로 어제 이 기대에 찬물을 끼얹을 수도 있는 지표가 나왔죠. 8월 소매 판매가 시장 예상치를 크게 웃돌았습니다.
그렇습니다. 8월 소매 판매는 전월 대비 0.6% 증가해서 시장 전망치였던 0.2%를 3배나 뛰어넘었습니다. 변동성이 큰 자동차와 가스를 제외한 근원 소매 판매 역시 0.7% 늘어나 예상치 0.4%를 크게 상회했고요. 이건 미국 소비가 여전히 매우 견조하다는 명백한 증거입니다.
이게 왜 중요한가요? 연준의 결정에 어떤 영향을 미칠까요?
연준이 금리를 내리려는 주된 명분 중 하나가 바로 경기의 점진적 둔화인데 경제의 70%를 차지하는 소비가 이렇게 강하다면 금리 인하의 시급성이 떨어진다라고 해석될 수 있습니다. 물론 이번 9월 인하 자체를 뒤집을 정도는 아닐 가능성이 높지만 제롬 파월 의장이 기자회견에서 향후 추가 인하에 대해 매파적인 즉 신중한 입장을 보일 빌미를 제공한 셈이죠. 시장이 가장 주목하는 점도표, 즉 연준 위원들의 향후 금리 전망치가 어떻게 찍힐지가 더 중요해졌습니다.
결국 금리를 내리긴 하겠지만 앞으로의 속도 조절에 대한 불확실성이 커졌다는 의미군요. 만약 청취자 여러분이 연준 의장이라면 이렇게 강한 소비 지표를 보고도 예정대로 금리 인하를 단행하시겠습니까? 여러 고민이 될 것 같습니다. 다른 것이 이슈도 짚어보죠. 지정학적 리스크가 다시 고개를 드는 모습입니다.
네, 유럽연합이 러시아산 화석 연료 수입 중단을 가속화하겠다고 발표했습니다. 폰데어 라이엔 EU 집행위원장이 트럼프 대통령과 통화하고 경제적 압박 강화를 논의했다고 밝혔는데요. 이는 에너지 가격 상승 요인으로 작용할 수 있습니다. 실제로 간밤 국제 유가는 예상보다 훨씬 큰 폭으로 감소한 미국의 원유 재고 데이터와 맞물려 상승했습니다. WTI는 1.2달러 오른 배럴당 64.52달러에 마감했습니다.
에너지 시장의 변동성이 다시 커질 수 있겠군요. 이제 개별 기업 소식으로 넘어가 보겠습니다. AI 관련 소식들이 눈에 띄네요.
AI 데이터 센터 전문기업 코어위브가 영국의 15억 파운드, 우리 돈 약 2조 5천억 원 규모의 투자를 약속했습니다. 엔비디아와 협력해서 AI 혁신을 위한 컴퓨팅 인프라를 구축하겠다는 건데요. 이는 영국 AI 생태계는 물론 파트너인 엔비디아의 성장 전망에도 긍정적인 소식입니다. 또 다른 사이버 보안 기업 크라우드 스트라이크 역시 엔비디아와 협력해 AI 에이전트 생태계 보안을 강화한다고 발표했습니다.
AI 분야의 투자가 계속해서 이어지는군요. 하지만 장밋빛 소식만 있는 건 아니죠?
맞습니다. 로이터 통신 보도에 따르면 엔비디아가 중국 시장을 겨냥해 내놓은 AI 칩 RTX 6000D가 수요 부진을 겪고 있다고 합니다. 알리바바, 텐센트 등 중국의 빅테크 기업들이 주문을 보류하고 있다는 건데요. 미국의 수출 통제와 높은 가격이 복합적으로 작용한 결과로 보입니다. AI 칩에 대한 폭발적 수요가 특정 지역에서는 온도차를 보이고 있음을 시사하는 대목입니다.
자동차 산업 쪽 소식도 짚어주시죠. 전기차 시장의 성장통이 계속되는 것 같습니다.
포드가 독일 코엘른 전기차 공장에서 최대 1000개의 일자리를 감축하기로 했습니다. 수요 감소 때문인데요. 2026년부터는 공장 가동을 단일 교대 근무로 전환한다고 합니다. 일본의 닛산 역시 배터리 조달 문제로 신형 리프 전기차 생산 계획을 절반 이상 축소했다는 소식이 니케이 신문을 통해 전해졌습니다. 전기차 시장이 캐즘, 즉 일시적 수요 정체 구간을 지나고 있다는 분석에 힘을 싣는 뉴스들입니다. 한편 테슬라는 모델 Y 차량의 전자식 도어 핸들 결함 문제로 미국 도로교통안전국의 예비조사를 받게 됐습니다. 문이 열리지 않아 탑승자가 차 안에 갇힐 수 있다는 우려가 제기된 건데요. 이는 차량의 안전성과 신뢰도에 영향을 줄 수 있는 이슈입니다.
헬스케어 섹터에서는 비만 치료제 관련 소식이 많았죠?
네, 일라이 릴리가 연말까지 경구용, 즉 먹는 비만 치료제 오르포글림론에 대한 FDA 승인을 받을 가능성이 있다는 보도가 나왔습니다. 현재 시장을 장악하고 있는 고가의 주사제에 대한 강력한 대안이 될 수 있어 시장에 관심이 뜨겁습니다. 이와 더불어 일라이 릴리는 버지니아주에 50억 달러, 약 6조 9천억 원을 투자해 신규 생산시설을 짓겠다라고 발표하며 공격적인 투자를 이어갔습니다. 반면 경쟁사인 노보 노디스크는 FDA로부터 경고 서한을 받았다는 소식이 전해지며 주가의 부담으로 작용했습니다. 구체적인 내용은 아직 공개되지 않았지만 규제 관련 불확실성은 투자자들이 가장 꺼리는 요인 중 하나입니다.
실적 발표 기업도 있었죠?
네, 건축 및 산업자재 유통업체인 퍼거슨 엔터프라이즈가 실적을 발표했습니다. 4분기 주당순이익 EPS는 3.48달러, 매출은 84억 9,700만 달러를 기록했는데요. 이는 월가의 예상치였던 EPS 3.01달러와 매출 84억 2천만 달러를 모두 웃도는 호실적입니다. 건설 및 유지보수 시장의 수요가 여전히 견고하다는 것을 보여주는 결과로 해석됩니다.
그 외에 주목할 만한 단신들도 정리해 주시죠.
월스트리트 저널에 따르면 부동산 투자회사 리듬캐피탈이 상업용 부동산 업체 파라마운트 그룹 인수를 곧 마무리할 것이라고 합니다. 스위스 최대 은행 UBS는 정부로부터 약 260억 달러, 우리 돈 36조 원에 달하는 추가 자본을 쌓으라는 요구에 직면했습니다. 한편 미국과 중국 간의 갈등 핵심이었던 틱톡은 미국 투자자 컨소시엄이 지분 80%를 통제하는 형태로 거래가 마무리될 전망이며 트럼프 대통령은 매각 마감 시한을 12월 16일까지 연장했습니다.
정말 많은 일이 있었네요. 자, 그럼 오늘 시장의 핵심과 다음 관전 포인트를 정리해 볼까요?
오늘의 핵심은 단연 연준과 소비의 줄다리기입니다. 시장은 고용 둔화를 근거로 연준의 금리 인하를 기대하고 있지만 예상보다 훨씬 강한 소비 지표가 그 기대를 일부 상쇄하며 불확실성을 키웠습니다. 이 상반된 두 데이터 사이에서 연준이 어떤 신호를 보내느냐가 시장의 당위 방향을 결정할 겁니다.
그렇다면 다음 관전 포인트는 명확하군요.
네, 바로 제롬 파월 연준 의장의 입입니다. 금리 결정 자체는 25bp 인하로 거의 굳어졌지만 이후 기자회견에서 파월 의장이 강한 소비 지표를 어떻게 평가하는지, 그리고 향후 금리 경로를 담은 점도표가 얼마나 비둘기파적인지, 즉 완화적인지 최대 관건입니다. 시장의 기대를 충족시키지 못할 경우 안도 랠리 대신 실망 매물이 출회될 가능성도 염두에 둬야 하답니다.
오늘 가장 인상 깊었던 이슈는 무엇이었나요? 저는 개인적으로 예상치를 3배나 뛰어넘은 미국 소매 판매 데이터가 가장 기억에 남습니다. 시장의 예상을 뛰어넘는 데이터가 나왔을 때 시장이 어떻게 반응하고 해석하는지를 지켜보는 것이 흥미롭네요. 장마감 AI 모닝 브리핑, 내일 다시 새로운 소식으로 찾아뵙겠습니다.
자, 여기서 개장 브리핑 마무리하고 금일 주요 뉴스, 개장 전 나온 뉴스 및 주요 일정 살펴보도록 하겠습니다.
I mean, it is sort of an awkward campaign, but it is notable to see how much you have seen an acceleration this time around. And I wonder whether this actually does push any companies to want to remain private, whether private companies face this in just a different way with private equity. But it definitely is an interesting moment, especially if M&A does pick back up.
There was some paralysis around the turn of Q2.
Yeah.
There certainly isn't anymore.
Which goes to the question of, are we really heading into a downturn? I mean, is this really what we're hearing from all of these guests?
25 or 50. That's the debate for the Federal Reserve.
Exactly.
This afternoon. Coming up, we'll catch up with Eric Schimpf and Lindsay Hans of Merrill Wealth Management. Plus, we'll touch base with Anne-Marie in London as President Trump arrives at Windsor Castle.
자, 전일 장 마감 이후 나온 기사 및 금일 장전 기사 몇 가지 확인해 보도록 하겠습니다. 자, 미국의 빅테크 기업들이 영국에 310억 파운드의 투자 약속을 했다는 소식이겠고요. 트럼프 대통령의 영국 방문에 맞춰서 마이크로소프트, 오픈 AI, 엔비디아 등 미국의 주요 기술 기업들이 영국에 총 310억 파운드 약 423억 달러가 넘는 대규모 투자 계획을 발표한 바가 있습니다. 자, 이번 투자는 주로 AI 시스템, 데이터 센터, 양자 컴퓨팅 등 첨단 기술 인프라가 구축에 집중이 되어 있고요. 주요 내용으로는 마이크로소프트의 300억 달러의 투자, 그리고 오픈 AI, 스타게이트 AI, 프로젝트 영국 도입, 엔비디아와 구글 등의 수십억 파운드의 규모의 투자 등이 포함되어 있습니다. 자, 영국 정부는 데이터 센터 인허가 신속화, 전력망 접근성 개선, AI 성장 구역 신설 등을 약속하며 일자리 창출과 기술 성장을 적극 지원할 예정이라고 밝혔습니다. 자, 이번 투자는 기술 성장을 통해 경제를 활성화하고 미국과의 관계를 강화하려는 키어 스타머 영국 총리의 정책과 맞물려 있으며 각국이 자체 AI 인프라를 확보하려는 주권력이라는 세계적에서 추세의 일환으로 볼 수 있습니다. 자, 그리고 월스트리트저널의 닉 기자 관련 기사이고요. 연준 관련된 기사입니다. 자, 분열된 연준, 파워 리더십이 시험대에 올랐다 라는 제목의 기사이고요. 자, 이번 연준 회의는 차기 의장 선출을 둘러싼 정치적 경쟁과 금리 인하 정책에 대한 내부 의견 충돌로 인해 수년 만에 가장 이례적인 회의가 될 전망이라고 보고 있다고 합니다. 자, 25bp 금리가 인하가 예상되지만 정치적 갈등이 복잡하게 얽혀 있다고 해석을 하고 있고요. 자, 파월 의장은 양측의 압박에 직면해 있고 트럼프 대통령이 임명한 인사들은 경기 둔화를 막기 위해 더 큰 폭의 인하를 주장하는 반면에 일부 지역 연준 총리들은 여전히 높은 인플레이션을 우려하며 신중한 입장을 보이고 있습니다. 자, 트럼프 대통령이 공개적으로 금리 인하를 압박하고 자신의 고문이었던 스티븐 미란을 연준의 이사로 임명하는 등 회의를 둘러싼 정치적 긴장감이 고조가 되고 있고요. 이번 회의에서는 1988년 이후 처음으로 3명 이상의 연준의 이사가 반대표를 던지는 이례적인 상황이 발생할 수 있습니다. 자, 이는 단순한 지도부 불신보다는 차기 의장직을 둘러싼 정치적 경제의 일환으로 해석될 가능성이 크다고 보고 있고요. 결론적으로 이번 연준 회의는 정책 결정뿐만 아니라 정치적, 역학관계가 복잡하게 얽혀 있어 회의 결정과 향후 정책 신호를 해석하기 매우 어려울 것으로 예상되고 있습니다.
Payroll reports. In the bond market this morning, your 2-year around 350. That number was closer to 4% after the last time the Fed last met.
There has been a shift in the reaction function of the Federal Reserve to prioritize the labor market that has been sluggish. A real question here is how much is the Fed underwriting risk and can they meet the expectations that the market currently has? And that really is going to depend not only on Fed Chair Jay Powell, but also on Governor Stephen Miron. It is hard to get my head around that. Stephen Miron, who is governor today, he was not on Monday. How much does he really push back against whatever the committee decides?
Having spoken to Stephen, Governor Miron, a few times, he doesn't strike me the kind of person who walks into a room and starts taking swings at everybody. He doesn't strike me as that kind of guy.
In a recent interview, he said he doesn't view himself as the smartest person in the room. He thinks that
자, 그리고 연준 관련 분석 기사이고요. 잠시만요. 자, 연준의 정책 전환 예고라는 이제 분석 기사 나온 게 있어서 이것도 짚고 넘어가도록 하겠습니다. 자, 연준이 수요일 한국 시간으로 목요일 금리 인하를 예상할 것으로 예상이 되고 있고요. 이는 관세로 인한 인플레이션을 우려하며 금리를 동결했던 기조에서 벗어나 최근 둔화되고 있는 미국 고용시장을 지원하기 위한 정책적 전환을 의미하고 있고요. 자, 최근 발표된 고용지표가 급격히 둔화되면서 경기 침체 우려가 커졌고 이것은 연준의 금리 인하를 압박하는 주요 요인으로 작용하고 있다고 확인이 되고 있습니다. 자, 시장에서는 25bp 인하를 유력하게 보지만 연준 내부에서는 의견이 엇갈리고 있고요. 일부 의원은 더 큰 폭의 인하를, 다른 일부는 여전히 인플레이션을 우려해 금리 동결을 주장하며 반대표를 던질 가능성이 있다고 확인이 되고 있습니다. 자, 이번 회의는 트럼프 대통령의 대폭 인하 요구, 그의 측근인 스티브 밀란의 연준 이사 취임, 리사 쿡 이사의 해임 시도 및 관련 법원 판결 등 연준의 독립성을 둘러싼 정치적 논란 속에서 회의가 진행이 되고 금리가 발표가 됩니다. 자, 투자자들은 금리 결정과 함께 발표될 새로운 경제 전망 그리고 파월 의장의 기자회견을 통해 향후 추가 금리 인하의 속도와 규모에 대한 단서를 찾을 것으로 보이고요. 이코노미스트들은 올해 총 2차례의 금리 인하를 예상하고 있습니다. 자, 그리고 미국과 캐나다, 멕시코, USMCA 협의 시작된 기사가 확인되고 있고요. 자, 미국, 멕시코, 캐나다 3국이 2026년 USMCA 무역협정 재검토를 앞두고 공식 협의 절차에 착수했다고 합니다. 자, 트럼프 대통령의 공격적인 관세 정책 속에서 USMCA는 신규 관세가 적용되지 않아 멕시코와 캐나다의 중요한 무역 방파제 역할을 하고 있다고 확인이 되고 있고요. 따라서 협정의 성공적인 연장은 3국의 모두 중요한 과제로 확인이 되고 있습니다. 자, 미국, 캐나다, 멕시코 3국은 올해 말까지 지난 5년간의 협정 성과를 평가하며 2026년에 있을 협정 연장 협상을 준비할 예정입니다. 자, 미국과 멕시코는 17일부터 공개 의견 수렴 등 공식 절차에 착수했으며 캐나다도 곧 산업계 협의를 시작할 계획이라고 확인이 되고 있습니다. 자, 그리고 현재 트럼프 대통령이 영국 국빈 방문을 잠시만요. 네, 증세 논란 위기에 몰린 키어 스타머 총리 정부의 절실한 자신감 회복에 기여가 되고 있다고 확인이 되고 있습니다. 자, 트럼프 대통령의 방문에 맞춰 블랙록, 구글, 블랙스톤 등 미국 대기업들의 수십억 달러 규모의 대규모 투자를 발표했고 원자력 등 에너지 분야의 협력도 함께 추진되며 영국 경제에 대한 신뢰를 보여주고 있고요. 자, 스타머 총리는 이번 방문을 통해 무역협정, 보안, 철강, 알루미늄 관세 폐지, 그리고 정치적 분위기 반전을 원하고 있다고 확인이 되고 있습니다. 자, 그 유가 관련 소식 확인해보고 금일 주요 일정 안내드리도록 하겠습니다. 자, 연준은 금리 결정을 앞두고 유가는 관망세를 보여주고 있습니다. 유가는 지정학적 리스크와 공급 과잉 우려가 팽팽히 맞서는 가운데 전날 1% 이상 상승했다가 소폭 하락하며 관망세를 보여주고 있습니다. 자, 우크라이나의 드론 공격으로 인한 러시아의 원유 공급 차질 우려가 유가 하락을 막는 요인으로 작용하고 있고요. 반면 오펙의 증산으로 인한 글로벌 공급 과잉 전망은 유가가 상승을 억제하고 있습니다. 자, 이러한 상황 속에서 투자자들은 연준의 금리 결정을 지켜보고 있다고 확인이 되고 있고요. 추가적으로 개인 기업별 뉴스는 올려드린 링크 통해서 확인해 보시길 바라겠습니다. 자, 이어서 금일 주요 일정 확인해 보도록 하겠습니다. 자, 36분 전 약 8시에 NBA 모기지 신청 지수 발표가 되었고요. 그리고 잠시 후 약 1시간 뒤 9시 반 8월 주택 착공 건수, 그리고 8월 건축허가 건수, 부동산 관련 지표 2개가 발표되고요. 그리고 10시 45분 캐나다의 기준금리 결정이 됩니다. 그리고 이제 확인되는 자정 이후 수정하겠습니다. 11시 반에 이제 미국의 EIA 원유 재고 발표가 있고요. 자정 이후 3시에 미국의 기준금리 결정이 있습니다. 그리고 3시 30분 FOMC 기자회견이 있고요. 금일 가장 중요하게 봐야 할 경제지표는 정오 이후 발표되는 3시에 미국의 금리 결정과 FOMC 기자회견으로 확인이 되고 있습니다. 자, 배당락 같은 경우에는 금일 salesforce.com이 있고요. 트레이딩은 금일 21시부터 진행하도록 하겠습니다. 자, 추가적으로 나오는 기사 및 주요 속보들은 링크 통해서 올려드리거나 속보는 라이브로 말씀드리도록 하겠습니다. 자, 잠시 후 21시 나스닥 정규 트레이딩 진행하도록 하겠습니다.
When you think about the power of being in the market, if you look at the period of 2020 to 2025, had you been in the market on the best 10 days, that portfolio is up 33% on average. Had you missed those best 10 days, you're up 18%. So just our advisors constantly, remind clients that. And the other thing about the accommodative Fed and, the cycle that we are probably entering into is our clients who are already borrowing from us, our high net worth and our ultra high net worth clients, despite the prior rate cycle we're borrowing, are only going to do that more. Clients want liquidity solutions. They want to protect their capital. They want to preserve it. They want to grow it. They want to pass it down. They want to transfer it. So they increasingly come to us for that. And that is a key asset and part of being Bank of America because we have access to a balance sheet that allows us to provide very customized liquidity solutions. You may have seen we announced the Merrill Lending Solutions Group last week, which is really to accelerate that growth.
Lindsay, you point to something that's really important, which is the competitive landscape and sort of the pitch. And right now, the competitive landscape arguably has never been more robust on every front, given how lucrative this can be and how much money there is in wealth management. Where are the biggest opportunities for growth for your wealth platform, given that you already have a pretty big footprint and a certain reputation?
Yeah, I mean, we think about our clients, what we know they want. They want big when it matters, but they want it to feel small and very personalized to them. So big when it matters is they want open architecture, full suite of traditional investments, alternative investments. They want access to lending solutions, and they want personal banking delivered at scale. And they want that to feel unique. They want their advisors to be their quarterback. So that is on a client-by-client basis. That's our biggest opportunity of how we deliver that to more clients. And Eric, maybe on
I think if you take, one of the things Lindsay mentioned was alternative investing, right? It's a segment of assets that has really become popular. We've seen a shrinking of the number of companies that are going public. Over the last 10 or 15 years, fewer companies going public. So a tremendous amount of private businesses and companies looking for investment and need in capital. As I was saying earlier, diversification works. Cash, equity, bonds. Well, we think across all risk tolerances, there's room for an alternatives portfolio as well. And so it could be a great place to see growth for our business, an opportunity for clients, cash on the sidelines, moving in. Our firm, proud of it. Merrill is probably the originator of sort of offering these things. And we probably bring anywhere from 50 to 60 new offerings on an annual basis. And just last week, we sort of announced a new offering for a really distinct, part of our population. Niche, unique, institutional-like, but direct to sort of the retail client.
Just build on that a little bit. Use the word diversification. What kind of diversification or alternatives actually offering right now? When we've been talking about private markets with a lot of people, particularly private debt, they've been talking about exactly the same kind of thing we're talking about in public markets, which is AI. Massive capex expenditure and getting exposure to those kind of investments. How much diversification is there?
Well, in the alternative space, there's plenty. There's private equity, private credit, infrastructure, You see the introduction of sports teams. I mean, professional sports, so a tremendous amount. I do think the artificial intelligence sleeve, very interesting for alternative investing, but I think also sort of interesting what can happen, in a wealth management business with the use of artificial
build on that,
intelligence.
and I'd love, Lindsay, your thoughts. I mean, how much is AI changing the way you do things, or how many advisors there are, or how the advisors deal with clients?
I mentioned earlier around our clients valuing the high-touch aspect of our business, but access to big breadth of solutions. So when you think about AI in a full-service wealth business, you think about it primarily on how do you make our advisors and their teams more productive to be client-facing and serve clients in a more personalized way. So how we can save time on tasks that really help prepare for client meetings, think about the post-client meeting process. That just gives advisors more capacity to be able to be face-to-face with people and really solving increasingly complex needs.
Because if I'm a high net worth individual, I'm not, but if I was, I would not want to speak to a robot, would you?
Right. That's right.
It depends. If the robot's really nice to me and brings me treats,
that wouldn't do. I'd want to know that additional work was there and being carried out by a human being.
All right. No, I think that's right. But what if that robot were really attenuated to who you were?
Would not make a difference.
What if it really brought you things?
I'd want lower fees. Wouldn't you?
Yeah, that's true. That's true. You automatically just assume that it's free. Do you know that they're now the digital employees or robot employees that are actually called employees in a lot of different
And they're in
places?
group chats and stuff?
Yeah.
Have you guys got any of this?
We
got
don't.
any of the chatbots on group chats?
No, we don't. I don't think you'd be surprised that the heads of Merrill Lynch believe that advice is best delivered by humans.
There you go. We'll leave it there. Guys, it's good to see you both. Thank you.
Great to see
Thanks
you.
for having us.
Thanks for being here.
Eric Schimpf there. Lindsay Hans of Merrill Wealth Management. Equities at the moment still just about negative by 0.1% on the S&P 500 as we continue to count you down to that Federal Reserve decision. Let's get you some news elsewhere with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Mortgage rates fell last week to the lowest level in nearly a year, spurring a surge of refinancing. According to the Mortgage Bankers Association's seasonally adjusted index, applications to refinance home loans jumped 58% last week and were 70% higher than the same week a year ago. Apple iPhone sales in China fell 6% year over year in the weeks leading up to the iPhone 17 launch. According to Counterpoint Research,
잠시 차트 보면서 설명해드리고 트레이딩 21시에 진행하도록 하겠습니다. 자, 현재 나스닥 선물 5분봉 차트를 보게 되면 24,250선 부근에서 등락을 반복하면서 단기적인 방향성은 잡히지 않고 있는 모습으로 확인이 되고 있습니다. 자, 볼린저 밴드 기준으로는 밴드 폭이 다소 축소되면서 변동성 둔화 구간에 재진입하고 있고요. 상단은 24,276, 하단은 24,250선 정도로 다소 좁아진 모습이 확인되고 있습니다. 자, 조금 전 급락성 음봉이 출현하면서 하단 밴드에 살짝 이탈했지만 재빠르게 회복을 하면서 하단 지지 확인 중으로 확인이 되고요. 아직 명확한 방향성은 나오지 않았기 때문에 추세보다는 박스권 대응이 유효해 보입니다. 자, 특히 단기 지지선은 24,240선, 저항선은 24,275선 부근으로 확인이 되는데요. 이 구간을 뚫어내는 강한 캔들이 나온다면 추가 방향성, 전개 가능성도 엿볼 수 있다고 판단이 됩니다. 자, 현재 거래량이 눈에 띄게 증가하지 않고 있는 만큼 현재로서는 관망을 좀 더 해보는 게 좋다고 판단이 됩니다. 자, 그리고 금일 자정 이후 3시에 미국의 금리 결정이 발표가 되는데요. 거의 25bp 인하를 확정하고 있습니다. 자, 금리 인하 시엔 단기적으로 상승할 수 있지만 장기적인 방향성을 확신할 수는 없고 연준의 스탠스와 시장 컨텍스트에 따라 방향이 바뀔 수 있는 점 참고 부탁드리겠습니다. 자, 거의 대부분의 시장은 현재 연준의 25bp 금리 인하를 선반영하면서 시장의 움직임을 보여주는 걸로 확인이 되고 있습니다. 자, 하지만 금리가 발표되고 나서 단기적으로 상승할 가능성이 높은 점은 자, 무시 못할 금일의 중요 관점 포인트로 확인이 됩니다. 자, 잠시 후 21시 나스닥 트레이딩, 정규 트레이딩 이어나가도록 하겠습니다. 자, 그리고 선반영이 되었기 때문에 차익 실현, 매도 물량 나와줄 수 있는 점도 참고해야 할 부분 중에 하나라고 판단이 됩니다. 자, 금일의 공탐지수 확인해보면서 조금 더 코멘트 이어나가보도록 하겠습니다. 자, 최근 중립을 유지하다가 현재 탐욕 단계에 들어왔고요. 공탐지수는 57로 확인이 되고 있습니다. 자, 연준의 금리 인하가 물가가 안정되었기 때문이 아니라 경기 둔화 우려로 금리를 인하하는 경우 자, 공포 심리로 시장이 하락할 수 있는 점도 자, 무시할 수 없는 시나리오로 확인이 되고요.
This headline right here, amazing to think about. We're talking about weakness in the labour market, the Federal Reserve cutting interest rates by anywhere between 25 to 50 basis points later this afternoon.
개인적인 견해로는 시장이 충분히 선반영이 되었다고 판단이 되고 시장에 혼조세가 날 가능성이 없다고 판단이 됩니다. 하지만 금리 인하 발표 시에는 일시적인 상승 나와줄 수 있다는 개인적인 판단이 됩니다. 자, 시나리오별로 흐름 예측 한번 해드렸고요. 조금 더 지켜보고 나스닥 정규 트레이딩 일정 이어나가도록 하겠습니다.
Big push for the last something like 10-15 years.
Yeah, how representative is this of corporations around the country versus a Bank of America specific push, given the type of people they want to attract and also the way that he's organizing the business?
Brian Moynihan, the chair and CEO of Bank of America, on this and a whole lot more in just a moment. Let's catch up with Wendy Stewart of Bank of America with this to say, contrary to expectation, companies are still exploring international expansion. Companies are purchasing other companies to expand their geographic footprint. Wendy joins us now for more. Wendy, good morning. It's good to see you.
Good morning. It's great to see you all.
Thank you for having us. That line is going to be quite a surprise to a lot of people. After April 2nd, I would have thought everyone just sort of hands off, stepped back and didn't want to do a thing, particularly internationally. Why do you think that hasn't been the case?
Well, so this has been an interesting year. And, when we think about the volatility that our clients have faced, they're also looking at how to turn that into a strategic advantage. And in global commercial banking, we've talked about the volatility and the economic uncertainty, and we've called it the T's and the I's. Clients are facing tariffs, trade, taxes. If you think about interest rates, inflation, immigration policy, and yet through that, they still want to grow. And whether that's growing domestically, growing internationally, growing organically, or growing through acquisitions, our clients are focused on growth. And one way to do that is internationally. And, I'll give you two examples of companies that have done just that. We had a client that was based in the Midwestern United States, and they were looking at filling a geographical gap that they had. And they didn't have any exposure into South America. And so they acquired a company this year in Brazil, and they did it for a couple of reasons. It was a good way to close a strategic gap. They wanted that geographic footprint, and they were able to get closer to the clients. And so a lot of people would think, well, why would they do that this year? But again, they are looking at how to take the volatility that exists and turn that into a strategic advantage.
How are they financing some of this growth? More broadly, not just that example. What does loan growth actually look like at the moment? Have things picked up?
So loan growth has been a pretty good story for us. It has been for many years, and this year it has continued. And so in that example, clients going to use debt to finance some of it. They'll use cash to cover some of the cost of that acquisition. And we're there to provide that financing. And, we've seen, no surprise, but earlier in the year, we did see a spike in revolver utilization. So if you think about clients getting ahead of the tariffs at that time in the spring, they weren't exactly sure what would happen. And so, they were building inventory. We also have seen a lot of good lending opportunities for just regular corporate purposes. And some of that has been M&A.
How much easier has it been for you to compete given the reduction in some of the regulatory overhang? And we've heard about this from a policy perspective. Does that really increase your ability to expand the lending book?
So, for us, what has happened with the regulatory environment or not, frankly, hasn't really impacted our ability to lend or not. We have been following our responsible growth mantra for many years. And from a client selectivity perspective, with the type of company that we cover in commercial banking, the regulatory environment hasn't impacted that so much. These are strong companies. They've got strong cash flow. And so we just haven't really seen that impact our ability to help those clients.
How much would it take in terms of Fed rate cuts for the clients that you work with to really accelerate some of their lending?
So, it depends on the company. It depends on the industry. We have clients obviously very interested in what happens later today. But it's not only impacting lending, it's also really impacting our corporate treasury teams that work with clients. And so if you think about what they're having to contend with, one has been around interest rates, and not just in the United States, but around the world. And so when you think about what's happened, in many cases, rates have come down where central banks have cut. In some cases, central banks have held rates flat. In a couple of cases, central banks have actually increased rates. So how do you manage all of that? And what we're seeing is another way that clients are taking that kind of volatility globally with their cash flow and turning it into a strategic advantage by managing it very effectively. And we're helping them with that in a variety of ways.
FX risk has to be another consideration. We've seen a lot of dollar weakness in a year where I think a lot of people expected dollar strength. How have they pivoted to handle that situation?
So a couple things. We saw clients do a lot in terms of onshoring, reshoring, nearshoring, call it what you want, over the last couple of years. And they did that to reposition their supply chains. And so as a result of that, they have been able to manage through some of the challenges that supply chain gaps have created. But it has created volatility with interest rate and FX risk. And so for FX in particular, what companies have done is to say, okay, how am I going to manage that? And what we're helping them with is looking globally at all of that exposure and then putting a net hedging investment strategy in place so that they can manage that effectively.
This has been one of these surprises of 25 so far. We came into the new year and we were looking for certainly tariffs, and we got tariffs, that's for sure. But as a consequence, we were looking for some dollar strength, and it didn't come. Dollar weakness was the feature of this story that I think was widely anticipated coming into the new year.
And to your question, and I'm still sitting here thinking about it, how do companies deal with this? Well, how much do they buy, say, an outpost in another country and just have no currency differential? I wonder how much that accelerates international purchases given the sort of extra risk that is potentially an easier hedge by just being there.
Based on what Wendy said, we've certainly seen a lot of that so far in 25. Wendy, it's good to see you.
Thank you very
Thanks
much.
for being
Nice
here.
to see
Wendy
you too.
Stewart of Bank of America. Just how much of a difference will a 25 basis point rate cut make later on this afternoon? How much of a difference will 50, 75, 100 make to some of these clients?
It depends on exactly what the trajectory is, but it sounds like maybe quite considerably, but it depends where on the curve this goes, right? If this does unleash a rally like we've seen over the past couple of weeks in the long end of the yield curve, well, it could be quite a bit, and I think that has also been the surprise, at least of late.
We've been here for 2 hours now.
Yes.
I haven't heard a really, really strong case for a reduction of 100 basis points of the Federal Reserve based on the economic activity that this company is tracking.
Put another way, everyone who's come on the show has talked about an incredible reacceleration going on and stability, as well as corporate flexibility in the face of a lot of uncertainty.
In just a moment, we'll catch up with the man himself, the chair and CEO of Bank of America, Brian Moynihan. Plus, we'll talk about the latest data with Aditya Bharve, and we'll catch up with the Bank of America co-president, Jim DeMar. From New York City, this is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates a complementary diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there are something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times, it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We continue to expect that we'll see the 25 basis point cut delivered this week.
The Federal Reserve opinion is 3% is neutral. My view is 4% is neutral.
The big debate there is, do they show one more cut after September, or do they show two more cuts? And I think it's going to be a very close call.
The risk is that the Fed ultimately won't deliver as much as they should.
I don't think anyone would be completely shocked by, a more dovish bias here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is the third hour of Bloomberg Surveillance live at #1 Bryant Park, the home of Bank of America here in New York, anticipating a decision that I feel like we've been anticipating for a long, long time from this Federal Reserve, ever since we got that jobs report in early August for the month of July that really started to spook not just the market, but the FOMC. There's been an expectation this Federal Reserve will cut interest rates. As we arrive here at the meeting for the second day in Washington, D.C., as that meeting concludes, the real question is not if, the question is just how big.
And what do they indicate, given the changed composition in the Federal Reserve, even though, as we've just been talking with people at Bank of America, it doesn't seem like this economy is falling off a cliff by any means, right? So if that's the case, what exactly is the incentive? What's the trigger point? What's the understanding of neutral? And this is the reason why we also get a statement of economic projections today. It could be very interesting, not only what they say, but what the dispersion of views are on that committee.
Some real questions, just how much that SEP is actually going to change. Unemployment really hasn't shifted that much at all over the summer. And this is a Federal Reserve that doesn't forecast payrolls. It forecasts unemployment. The expectation for a lot of you, I know, is that the dot plot shows an additional rate cut. So the two that were already in the previous round of forecasts. But beyond that for 26, I'm not sure how much this Fed can offer this afternoon beyond just risk management, or whether this Fed wants to be that aggressive.
Mark Cabana, earlier here at Bank of America, was talking about how there's this third mandate that suddenly is taking more oxygen out of the room, which is the idea of rate stability or moderate long-term rates. How much does that become a new third mandate that requires some additional tools by the balance sheet on the Federal Reserve that gets recognition and discussion today? And that actually could be the reason why people are jumping into the long end before, I don't know, something like yield curve control.
It's a better behaved bond market so far. Yields are down on the session by about a basis point on a 10-year maturity. Let's get the next hour set up for you. Coming up, we'll catch up with the Bank of America Chair and CEO Brian Moynihan on the latest leadership shake-up and a whole lot more. We'll speak to Aditya Bave as we break down the latest economic data, and Bank of America's new co-president Jim DeMare as we count down to that Fed decision later on this afternoon. We begin this hour with a leadership shake-up at Bank of America. Brian Moynihan recently naming Dean Athanasia and Jim DeMare as co-presidents. The firm writing in a statement, quote, Athanasia and DeMare will drive company-wide initiatives focused on long-term growth and returns and oversee Bank of America's 8 lines of business. I'm very pleased to say that joining us now is the Bank of America Chair and CEO, Brian Moynihan. Brian, of course, in London, and we're here in New York. You're actually in our home and we're in yours, so thank you, sir, for making that happen. Brian, let's get to this leadership shake-up because we've got a lot to talk about. 8 lines of business, 2 very prominent individuals in this bank, at this institution. How do you and the team plan to split up responsibilities?
Well, it's good to talk to you both, and thank you for coming to our great corporate headquarters. Hopefully they're treating you nicely out there. Look, this is a recognition of 3 teammates, Dean and Jim and Alistair, and the contributions they made to our company, and bringing Jim and Dean to help me leverage across the businesses. And there's a lot of initiatives we conduct across the company, our growth work streams, our operational excellence, our AI initiatives and things, and I've asked them to come help me. Meanwhile, it also frees up space for that talent group, and you're talking to a lot of them today, whether it's Lindsay or Eric or Wendy and others that continue to drive those 8 businesses for us and own the business, own the responsibility for P&L, and there's a lot of talent at that level. So the idea is to bring them to help leverage my time, leverage the company's time, leverage the company-wide initiatives, and then let that talent that drives those businesses keep making great progress.
Brian, there is an obvious, perhaps uncomfortable question. Some people might have responded to this and just thought, is Brian setting up for succession? Or is this just about changing how the company's ran?
Well, long term, we have one of the duties that I and the whole management team owes the board of directors is a series of candidates that have the experience to run this company over time. I'm not going anywhere in the short term, but in the medium term, but it takes a while to set that up and get people used to the size and scale of this company. So you all report all those ins and outs of succession, but the reality is we're a team and we're driving for it. There's a lot of talented teammates, and the board will have to make a decision someday based on the facts and circumstances at the time.
Brian, you talk about some of the new initiatives and looking forward to the bank, the Dean and the Jim that will be of the future partnering together. I'm wondering what you're hoping they can accomplish, whether it's the AI initiatives or beyond. What kind of projects you're hoping that they will spearhead?
Well, we have a lot of things going. For the last year, we've been working on some work streams to help drive expense efficiency and implementation of new technologies, and at the same time drive growth, how we take risk and continue to look at our risk parameters. And so what I'm asking them is and they've helped drive those while they've been doing their old jobs, and I've said, come do this full time, and that'll give us more leverage across the platform. Our company has a great reach. We have, we're all over the globe, and Bernie Menz and the team here out of London run all the international businesses for us. We're in a lot of countries, a lot of teammates around the world. We just announced 1,000 more more teammates that we're building out here in UK, and they could help the company drive that and put the key of the top big company like ours is to work the seams, work the business connections. And so Jimmy and his capabilities as he works with the wealth management group and Lindsay and Eric on the clients that we have, especially in the the higher end clients that he has relationships with who are hedge fund operators and things like that. So there's a lot of initiatives, but it's really about revenue growth, organic revenue growth and expense efficiency, and also thinking through how technology applies. And it just gives me more power at the top of the house to join us, and these teammates have done a great job.
I imagine it's going to be United Front at the Investor Day in November, the first one in some 15 years. You mentioned the CFO, now Executive Vice President Alistair Borthwick, said this: the most important thing from our perspective is we feel like we've got an opportunity to close a relative value gap. Brian, can we talk about that relative value gap? Where do you think that comes from? What is it that you think perhaps investors don't fully understand?
Well, if you look at the company, you have a great organic growth engine. So we'll do 1 million new checking households, and our average checking balances are 3 times, 4 times the industry norm, and we're building that up. What we're trying to showcase is what Bank of America is an organic growth machine on a very steady compounding basis. So if you look at the projection for our earnings growth rates by the street, they're faster than the average company as the balance sheet reprices and things go on. But what we're really trying to showcase is to put on the table basically the metrics that we run this company by across the 8 lines of business and how they work together, and then the international piece, and then AI and some of the other things we work on, the payments business, which is embedded in the lines of business but is a separate business. It really showed 3 things. We have a competitive position that no one else has. We're we just announced yesterday the largest small business lender. We have a competitive growth rate in the organic growth that's there, and then because of our the dynamics of our NII lift, which it will be growing, as we've told people, 6 to 7% this year, you're going to see the EPS keep kicking in and the operating leverage come into the business, and the return on tangible common equity keeps moving up. And that's what we lay out. But it gears off that good core organic growth with the right risk that we drive this company by.
Brian, as John was just mentioning, this is the first in 15 years. Why now? What changed for you? And is this going to be a new annual thing?
I think we have 35 analysts that cover us. We spend time at all the conferences. We spend time individually. But think about it, putting on the table where the company stands right now as we see after the pandemic and after the interest rate changes and after inflation fights and all that stuff, we see that people putting on the table where we are in organic growth and how it works together is critical. And I think, you should expect us to do it more often. We have a lot of connectivity to the people who actually own our stock and talk to them all the time. But this is a chance to sort of lay it all out so everybody can see it together. And to look at some of these initiatives that are unique, like our employee banking investment initiative, our continuum, our Merrill Edge through Merrill Lynch and the private bank, and the ability for us to take a customer literally from their first bank account their entire life, and no matter what happens to them on an individual side, or a small business forming today that becomes the largest company in the world, or an individual trader that builds up a capability and becomes a hedge fund manager. The idea of these continuums and things like that are really important. And so we hope to put that on the table and make sure people see it, and then we'd annually update it, but sort of put a baseline on the table.
So, Brian, it seems like you're moving toward a greater degree of transparency, or at least availability, at a time where the president is talking about potentially moving from a quarterly reporting system for public companies to a 6-month reporting season. Do you think that would be helpful for you as a business manager if you had to report less frequently in terms of filing?
In the end of the day, we run the company along the principles of responsible growth and how we run it. So it won't change how we run the company. It may change how often we have to talk about it. And inherently, if you do it 2 times a year versus 4 times a year, you'd save some money and some effort. But my guess is our investors are going to demand from us more constant reporting. So we'll see it all play out. It's an initiative that was talked about over the last several years. If it's going to get done, it has to be done the right way. So it remains in place. And we look forward to what comes out of the SEC in the process. But on the other hand, we are very transparent in what we do. We put a lot of information out there, things like our digital capabilities that no one else reports on, quite frankly. And again, with the Investor Day, we'll be able to show that and really challenge people to say, look, if this is what's going on, if you've taken a company that had 300,000 people 15 years ago that has 212,000 people today and applied that technology, just think as we start to apply AI more fully. We already have Erica, 3 billion customer interactions, but as that applies more fully, you'll see the ability for us to continue to manage the headcount in the company well while the revenue keeps growing. And so I think we'll report on that more often than every 6 months is my guess based on the demand of our investors.
Lisa, I imagine some CEOs might welcome this.
Yes.
Even if some investors don't.
They might welcome this, but will they be allowed to actually follow it by their investors? And that, I think, is what Brian is alluding to.
I think investors will demand much more transparency. Brian, I want to talk about an initiative close to your heart. The news that we got about 15, 25 minutes ago, that you're increasing the minimum wage to $25 per hour. I remember a very early conversation with you, and this is something you're very proud of. This has gone up from, say, 15 several years ago. Can you talk to us about why you've maintained this commitment to driving the minimum wage higher at Bank of America?
Sure. So let me set two things up. One, over the course of today and tomorrow and yesterday, we've announced a series of initiatives. One is to locate 1,000 new teammates in the UK that will work in our operations group, and that was announced by Bernie and Tom Scrivener. A second one is to recommit to our military hiring at Bank of America, 10,000 military veterans over the next 5 years. We've done this from time. We have about 20,000 working to increase that. Another is to increase 8,000 people from community colleges to present an opportunity at Bank of America to further their career and get into skills-based training. That's a doubling or tripling of what we do today. And then the 75 branches that we're deploying and the teammates there. Then the third piece is the minimum wage. And so we started on a travel a number of years ago with the view that we want teammates to come to Bank of America with a career mindset. So join us. So today we're announcing $25 an hour, which is $50,000 for a starting salary across the country and higher in some places where the prevailing wages are higher, obviously. But what that gives a teammate a chance to join our company, spend their whole career here, and support their families. So not only is it the $25 an hour minimum starting wage, it's the benefit structure, which is a full 401k match, a full benefit cost that for the teammates in the brackets of $25 an hour, we basically dropped their premium coverage in healthcare in 2012 from $500 a month to $250 a month for family. Have never raised it to provide great health care for them, and then our child care benefits. So it's a package. So where's that payback for the investor? Where that pays back to the investor is the turnover rate when we started this program in the high volume operations groups and the branches was 20%. It's now down to basically 10% or so, even below that. That stability and that career mindset allows us to do a much better job for our clients. And what you've seen is the attrition of teammates has gone down, you've seen the attrition of customers gone down, and you've seen our customer scores dramatically improve over the last 15 years due to this relentless pursuit to be a career employer. So yes, we're very proud of the $25 an hour, but there's an economic benefit for the shareholder, and there's a great positioning for the teammate at the same time.
Brian, I wonder also what it says about the situation, the current environment. It's very strange that we're going into this decision with the Federal Reserve talking about 25, 50 basis points of rate cuts and maybe more. Your team has talked consistently throughout this morning about the amount of resilience they see in the US economy. Pay hikes like this aren't the kind of things you would typically see in a recession. What's your sense of just how tight or weak, loose this labor market actually is right now?
Well, I think if you think of 23 summer, the Great Resignation, it was very tight. Then it loosened up, and it's more imbalanced now. So our turnover rate in our company is running about 8%. Even in places like tech programmers, of which we have 30, 40,000 of them, we're running in double digits is now in 3-4%. And what that shows you, the bid in the market's different, which then shows you people are being more careful at headcount. And you heard some of my colleagues talk to you about that. So I think the unemployment rate is still low, but I think businesses are being much more careful in managing their headcount for a number of reasons. One is to get by understanding how all the policies are coming at them fit together. I'm talking about U.S. businesses mainly. And then secondly, they're also making sure that they're careful, and I heard some of my colleagues talk to you about this earlier. As you think about this application of technology, we know what this does. We have half as many people working in the consumer business than we did a decade plus ago. We have half as many people working operations. We know that as these technologies can apply to our legal department, our finance department under Alistair, our risk department teammates, we know that if we manage the headcount carefully, we will do it. So we look at headcount very carefully and say, don't hire people unless you really need them. Not because we're trying to save money, because frankly, from a human management capabilities, we don't want to have people who won't be able to have a career here. So we just hired 2,000 plus kids from school. So we brought in all those new talent. We'll hire these 10,000 veterans. We'll hire these 8,000 people from community college. But each month we get the right to make a decision on whether we're going to hire about 1,300 to 1,500 people, and we're just managing that very carefully. So I think we're an example of what's going on in the broader labor market. You heard Wendy and my colleagues talk about it. All the companies are trying to manage this and make sure they get the headcount right, because that is a major expense for a lot of firms.
Brian, about a year ago, you were talking to us about the ramifications of AI and the explosion of efficiency. And you said that you think that headcount could remain about the same at the bank, even as the business continued to expand just in total size. I'm wondering if that's shifted, if you still see that as the natural progression of the relationship between the adoption of machine-based learning and the relationship to your headcount.
So there are two things. Now, one, I think the time we were talking, we were probably closer to 216, 17,000 people, or 213,000. So I think we'll be managing this down. But remember, at the same time, we're managing out through operational excellence and efficiencies of applied technology. We are deploying. So we're adding, Wendy's added commercial bankers in all the markets, and Sharon and the team added business bankers in all the markets, and Katie and Lindsay and Eric adding financial advisors and private bankers. So we're adding front-end people, sales traders, et cetera, to keep building out our capabilities. And so there's a reinvestment going on. The key to that is really redeploying people and reskilling them. So when we bring these 2,000 plus teammates in who just joined us in the last month and a half, we have to be more mindful about training them along multiple dimensions than we might have been 2 or 3 years ago. So I think, yes, I think ultimately the human being content of our work product would probably come down. But if we manage it right, it'll be flat. The same amount of people, maybe down a little bit, but all paid more and all being applied to the highest value tasks where, frankly, the machines can't do the work. And that's the important thing. We know we know what this AI can do in today's world. Erica's been out there for 7 years, 3 billion customer interactions, 20 million customers using it all the time. We see what it could do. We took that and put it in our commercial business. We took that and put it in our internal process. We got other models to help in Jimmy DeMar's business in terms of a thing called Optimus and things like that. There's a lot out there, but what you're learning is it's still augmented intelligence, and that will be what's driving the near-term efficiency. So yes, I think the headcount management is one of the core tasks that managers have to take seriously.
I'm just wondering, Brian, as you train all of these new students, how do you make sure that they stay with you and don't go to some of your brethren across the way in the private asset sphere?
Well, we provide them a good opportunity, and look, they can go other places, but we've been able to retain enough that we're completely happy. And look, even for our clients, frankly, if they hire our teammates, it's not the worst thing that happens in all our businesses. But the reality is that we want these teammates to have a career mindset. In October, I'll celebrate our teammates have been with our company 50 years, 55 years, 60 years, et cetera. And you hear their stories, and their stories of I joined this company, I worked in a summer internship, I came, may even work part-time during college. I became a full-time employee, and I started doing this, and now I do that. And those are wonderful stories. And we have them tell those stories to our teammates to show you that you can have a long-term career at a company like ours, and that's what we want our teammates to come in with. They may not stay in trading or investment banking or corporate banking, but they'll have long-term capabilities here. And you've seen that even at the top of the house. Alistair was a capital markets head, and now he's the CFO, and so that goes on throughout the company.
They swear an oath of allegiance.
Yes, exactly.
Didn't you see them lining up this morning?
They came in.
Before they come in.
I promise on my cappuccino, which is very good, by the way.
Brian, I want to talk about the main event that takes place later on this afternoon. I'm not going to ask for your guess. I know how much you respect the team behind me and some of the official forecasts of the bank. I want to understand from your perspective, looking across the 8 lines of business, whether you see an economy, market activity that demands a rate cut from this Federal Reserve.
Well, you've had the benefit of all our experts, and we have the talented, extremely talented research team, and you also have some in line of business teammates talking about what they see out there. I think you have to back up. If you think about last year this time, the projected growth rates for our team was probably 100 basis points higher than it is today for 25. And so that deceleration of growth, their prediction that was largely based on a couple things. One, rates would stay higher because inflation was kicking in, the impact of the uncertainty in tariffs, et cetera, et cetera. All that's coming through the system now, so you're seeing some certainty fall into place in this. And I think also inflation was coming down, and I think so the tension the Fed has to deal with, and you've been picking at it all day, is the tension between a higher inflation rate and ultimately where Fed funds could settle in at. And so whether they do 25 basis points today or 50, people have to keep in mind, the growth rate in the economy was brought down, and now it's starting to go back up. So next year is predicted to be better than this year, and the year after is better than that. So you hear our teammates talk about the economy growing back out, and that then means we're on the other side of it. And so the Fed has to adjust to the inflation picture as it got more under control. They can come down. They came down 100 basis points already. It can keep coming down, but they've got to be very mindful of the inflation side. And so I think when the people get in the room and they see the data, they have to think it through. The big news is that you referenced earlier was the labor market's gotten softer, so that gave them concern. So I think the market believes and our teammates believe the cut rates. I think the
확인
key for
바랍니다.
people is deceleration in growth, and will the growth reaccelerate? You hear our teammates seeing that. We're seeing consumer spending strong and all those things, which would indicate we'd see an acceleration. Next year's better than this year. Unemployment is not expected to go up a lot, even though the employment picture may be softer. But the most important thing is the long-term interest rate scenarios, say 3% plus or minus on the Fed's fund rate, 4 to 4.5% or so on the 10-year rate, and a curve that's not inverted, that's normalized between that. The important thing is to get back to more of a normal environment, frankly, with maybe a little higher inflation, because the great debate about 2% is something you can get lots of experts talk about. A little higher inflation, a little faster growth, and then, frankly, that'll help with some of the debt carry and other things going on in the U.S. economy.
Brian, it sounds like next year you see the bigger risk as potentially a surprising bout of inflation and some sort of downturn. Is that correct?
Well, I think the question is how do you tolerate the inflation and the nature of it, what's come from. But, and I think that's the tension of all this, I think, is next year as you get to the second quarter, as these policies are now in place and are behind us, are you going to see the acceleration in growth and where our businesses start investing even faster? If you listen, I think if you ask Wendy about it, she would tell you her commercial customers that have lines of credit are still borrowing less as a percentage of their availability than they did in sort of the 17, 18, 19 timeframe, where rates have been moved up and the economy was growing. And so why is that? They're probably not seeing quite the opportunity, and so they're trying to sort this all out. And well, I've got the benefit and the honor of leading a company that has this talented team behind us, and all the talent and money we spend on research and everything. If I'm running a company that the three of us owned and it was a manufacturing company, I got to figure it out all myself. That tends to hold people back. So that would be the case for acceleration. And then the question is, if rates stay a little higher and the growth is higher, that's not a bad place for America to be.
Brian, just before you go, I wanted to sneak this in. One final question. Whose door do I need to knock for World Cup tickets? Who makes that happen here?
Well, you didn't bring David Tyree on, who's doing all our marketing and work. And so he's the guy that's got control of the tickets, but he does a great job for us. Look, our relationship with FIFA, we did the Club World Cup, which was sort of the warm-up, and next year, and you'll see us accelerate our efforts. We have great capabilities for our clients. But most importantly, this is a chance for America to showcase football, soccer as we call it. It's a case for these cities that are hosting to put on a great show. And I think I can see the enthusiasm building, and you're not the first person that's asked for tickets, John.
David Tyree. David Tyree?
Yeah, come on down.
Brian, thank you, sir. Appreciate it, as always. It's good to see you. Enjoy London. Brian Moynihan there of Bank of America. Let's take a step back and just think about this economy right now and what we've heard from this team in the last 2 hours and 30 minutes. It's not an economy or a market that's screaming for an aggressive rate-cutting cycle. I think that's the message that we've received so far this morning.
And the question is, do you still have that reticence that's pulling back the inflationary potential, given the fact that companies haven't been investing as quickly? And that's what I'm actually really excited to speak with Jim DeMar about, just the M&A cycle, just how much banking activity is continuing to accelerate as people get that confidence underfoot.
I imagine the phone's ringing for David Tyree as we speak.
Yeah, exactly.
Right? Yeah, I think he's going to be busier today than maybe he expected. OK, coming up, some housing data. We'll get the view on the economy and the latest economic data with Aditya Bave of Bank of America. From New York City, live from Bank of America, this is Bloomberg.
현재 약수익권에서 매수 진입 대응이 나오고 있습니다. 자, 목표 수익권까지 조금 더 지켜보도록 하겠습니다. 자, 그리고 3분 뒤에는 지표발표 약 2가지 발표됩니다. 자, 데이터 발표까지는 약 2분 남아있고요. 발표 후에 대응해 나가도록 하겠습니다. 자, 현재 1계약 기준 10만원 이상의 수익권 진입하였습니다. 자, 수익권에선 자율청산 사인드리고요. 자, 목표 수익권까지 조금 더 대응해 나가도록 하겠습니다.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
자, 지표 발표 나옵니다. 지표 발표 발표됩니다.
Equities just a little bit softer on the S&P 500. The open about 60 minutes away. Got a few things to do over the next 30 minutes. We've got to get you the latest economic data, but also
자, 예상보다 부진한 결과가 나왔지만 현재
Washington D.C. Let's head down to Tyler Kendall for
상승을
more. Hey,
보여주고
Tyler.
있습니다. 여기서 일단은 현재 포지션
good morning. Well,
수익
mortgage
청산하도록
documents
하겠습니다.
reviewed
자,
by
수익 청산
Bloomberg News and
사인드립니다.
out this morning show
수익
that the
청산
Treasury
후에
Secretary
진입 사인드리도록
Scott
하겠습니다.
Bessent entered into a
일단은
conflicting agreement
현재
obligating
발표된
him to occupy
데이터는
2 separate
굉장히
homes,
부진하게
one in
발표가
Massachusetts and
되었습니다.
the other in New York as his
완료되었습니다.
primary residences. This is from 2007. Both mortgages were signed on the
자,
same day
예상치
and issued by the same lender,
1365K였고요.
Bank of America. One property in Bedford Hills, New York, the other in
1307K,
Provincetown,
1307이
Massachusetts.
나왔습니다.
But evidence shows that the bank
자,
wasn't actually relying
건축
on
허가
these
건수
pledges,
같은
never actually
경우는
thought
예상치가
that Bessent was
1370였으나
going to occupy them both
1312로
as his primary
발표가 되었고요.
residence. And we did get a statement from one of Bessent's lawyers who
데이터
actually had
발표가 났기
power
때문에
of
조금 더
attorney and
지켜보고
signed these documents for
시장
him,
어떤
saying
영향을
in part
주는지
that Bank of
지켜보고
America was
이제 대응해
fully
나가도록
aware the
하겠습니다.
Massachusetts property
자, 2차
was not a
진입 비율
principal
대기하도록
residence, going
하겠습니다.
on to add there was, quote, absolutely nothing improper about Mr. Bessent's loan applications. And mortgage experts agree, telling us for this story there is no sign of wrongdoing on Bessent's part, but rather this could demonstrate how discrepancies on home loan applications aren't necessarily proof of fraud. And Fed Governor Lisa Cook's situation does appear at least partly similar, though not identical. Documents reviewed by Bloomberg News over the weekend show that on at least one of the properties it was listed as a vacation home, and that the lender in that instance did not expect her to occupy that residence as her primary residence. Of course, John, as you know, this is playing out in the courts and appeals court on Monday.
체결되었습니다. 확인 바랍니다.
The broader questioning of her firing ultimately plays out, but that court found that President Trump very likely violated her due process rights to defend herself against these mortgage mortgage applications. John, we are preparing for the White House to ready their Supreme Court appeal to that decision.
Tyler Kendall, appreciate the update. Tyler Kendall down in Washington, D.C. Going to keep it on housing, but the kind of data you might be more interested in, housing starts, building permits. With the latest is Mike McKee. Good morning, Mike.
Good morning, John, and it's not particularly good news for anyone in the home building industry. Housing starts dropped by 8.5% in the month of August, and the July 5.2% increase was revised down to 3.4%. So the housing industry weaker than we thought. The building permits forecast is even weaker than we thought, down 3.7% during the month. Instead of the 2.2% last month. It looks like at this point, builders are still on the sidelines and not moving, which has been something that President Trump has pounded on in terms of trying to get the Fed to lower interest rates. Mortgage rates have come down in the recent months to about 6.4%. But that's not where they need to be, according to builders. And if they get down into the fives, that might start people moving, and that might get the industry moving again. But that's going to take a little bit more than a quarter-point cut from the Fed.
Mike, we've got a full picture of the data now. The last real data point going into this decision later on this afternoon. This one highly anticipated. The meeting itself, the individuals involved. Mike, you'll be in the room. You'll be in the news conference. What are you focused on?
Well, I think the first thing we're focused on in terms of what Wall Street wants to know is what's the path ahead. We're expecting 25 basis points today. Obviously, any kind of 50 basis point move would be a big shock and positive shock probably to the markets, but that's not expected. So what are they going to do in October and December, and how many rate cuts do they anticipate next year? That's what's really going to matter to the people who are investing money. And then beyond that, of course, we have all the questions about how Stephen Myron fit in with everybody and whether or not there are going to be dissents and whether those dissents would actually mean anything. So a lot to look forward to, and it's not going to be an easy press conference for Jay Powell.
Not at all. This one's going to be awkward. Mike, appreciate your time. Looking forward to covering the story with you later on this afternoon. Let's keep it on the Federal Reserve, sticking with the economy. The senior U.S. economist here at Bank of America Securities with this to say, another cut in October may be on the table if the labour market were to weaken significantly further. But it isn't our base case. Aditya joins us now for more. Aditya, good morning.
Good morning. Thank you for having me.
Thank you for having us. 25 basis point cut expected later on this afternoon. How much guidance can they provide beyond just that?
I think that's going to be the key question. What does the dot plot show? So our base case is that the dot plot median will show only 50 basis points of cuts this year, so another 25 potentially in December. And the reason we think that it'll only be 50 rather than 75 is that if you look at the macro forecasts from the June SEP, they've actually aged remarkably well. Unemployment is on track to meet their forecast, so is inflation, and growth, if anything, will come in a little bit stronger. Obviously, you've already heard a lot about the risks of reacceleration here. So given that, and given that the dot plot median almost showed one cut back in June, even a little bit of a dovish move would still probably keep it at 2.
You talk about a dovish move. There's a question about the actual cut or the signal going forward. Not just the signal and the number of rate cuts, but something Mark Cabana, your colleague, talked about earlier was the idea of the third mandate, the idea of keeping rates moderate over a longer period of time as one of the 3 pillars of the Federal Reserve. If that were adopted, how much would that change your outlook as an economist?
So moderate is not a clearly defined term. So we'll have to see if going forward, potentially different group of people at the Fed have a more specific definition of moderate. But for now, what I see is an economy that's probably pretty close to the neutral rate. You look at where stocks are, you look at the fact that productivity might be picking up, and I don't think there's a clear case here that the economy is screaming for rate cuts.
If that's the case, why isn't inflation more of a concern? Why aren't we seeing that baked into market expectations just a bit more?
So you are actually seeing inflation fixings showing a little bit of a pickup in inflation. Our core view has been that it's not just about trade policy, it's also about underlying inflation. And underlying inflation for us is stuck around 2.5%, and we think it'll remain that way going forward, which is why even as the tariff effects roll off next year, we only have the core PCE going down to 2.6%.
There was quite a difference between July Chair Powell and Jackson Hole Chair Powell. And I understand there was a big payroll report in between, but there was a difference in approach in how he anchored his view around the labour market that got my attention. He anchored his view around the labour market, around the unemployment rate in July. And then we got to Jackson Hole, and clearly he was spooked by the step down in payrolls growth. You've been focused on measures of slack, and now traditionally that's something the Federal Reserve and monetary policymakers would be focused on too. Have you seen a significant deterioration in measures of slack alongside this monster step down we've seen in payrolls growth?
So what Powell said in July, which was viewed as very hawkish by markets, was that even if payroll growth is zero, if the unemployment rate isn't increasing, then that's where break-even is, and the Fed doesn't really need to be concerned about that. And what we wrote at the time was it's one thing to say it, and it's another thing to walk the talk when you actually see the data. And that number, that 258,000 downward revision, I think it spooked the Fed. And yes, there's been some deterioration in signs of labor slack. You can look at the ratio of vacancies to unemployed workers. You can look at the labor market differential from the Conference Board. All of those are showing some increase in slack, but it's been relatively moderate.
Spooked them into what? I think that's what we're wrestling with today. Spook them into a 25 basis point risk management decision, or spook them into, we need to come out and convey to market participants today that this is the journey back towards neutral. And we think neutral is around 3, and we're looking to get there quickly.
The committee is going to be divided on that question. And the key question that will get answered today is, where does Powell land? Is he on the side of we need to do a little bit, but we don't need to do a lot? Or is he on the side of we need to go all the way back to neutral? We're in the first camp, but we'll learn more today.
How much are you going to take true signal from whatever Governor Myron has to say? How much is he the new lodestar, in some ways, of the committee in 2026, if not today?
I think it'll depend on how much the committee changes next year. That's still an open question. We don't know how many seats will be available on the board. We don't know how much turnover potentially there'll be amongst the regional presidents. So that's, I would say, very much an open question. But for this meeting, we know that Governor Myron will be an outlier.
Aditya, it's good to see you. Aditya Bava there of Bank of America Securities, looking for a 25 basis point reduction later on this afternoon, but raising some big questions about just how much more this committee can offer beyond that.
This, to me, is the ultimate question. How prevalent is this inflationary risk in markets? And how realistic could it become should you get some sort of outsized move or outsized indication of what they're planning to do next year?
Throughout the whole of this morning, there's been a pretty consistent theme. Fairly resilient economy relative to maybe some of the spooky headlines around payrolls growth. And the real risk, perhaps not the base case, but the real risk that we get a re-acceleration through next year alongside some sticky inflation.
One of the most important conversations was around the retail sector I found this morning, which is the true test. When they raise prices later this year into the fall, into the winter holiday season, how much do consumers push back? How much do they allow those to keep going? And if that's the case, that they continue to adjust to higher prices, that's a very different inflationary backdrop.
There's nothing easy about this afternoon.
No.
Maybe cutting 25 basis points is an easy decision to make, but there's nothing easy about the kind of guidance you can provide in a moment like this.
Do you think that Jay Powell can just get up and say, look, we're going to cut 25 basis points. We don't really have anything else for you. We don't know more than you. Thanks so much, guys. Peace.
Just start rolling up the statement and start throwing at him.
Exactly. And people ask questions. I don't know.
Yeah.
Do you know?
It's going to be a lot of questions. Where's Stephen Myron?
Yeah.
Let him lead the news conference. We want his thoughts on things.
That would be interesting.
OK. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief with our top headlines. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. House Republicans have unveiled a stopgap spending bill to keep the U.S. government open past an October 1st shutdown deadline. The measure would keep agencies operating through November 21st and provide new funding for security. The bill needs at least 7 Senate Democrat votes to overcome procedural hurdles, but does not include healthcare policies that Democrats have demanded. President Donald Trump announced a deal to keep TikTok running in the U.S. According to the agreement, which is yet to be finalized, U.S. companies including Oracle, Silver Lake and Andreessen Horowitz would take an 80% stake in the social media app. China's ByteDance would own less than 20%, satisfying a 2024 U.S. law that required the Beijing-based company to divest. StubHub is going public. The ticket platform priced its IPO at $23.50 a share, raising $800 million. The offering values the company at over $8.5 billion. StubHub will begin trading on the New York Stock Exchange today under the symbol STUB. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for this morning. Up next on the programme, we'll catch up with the Bank of America co-president, Jim DeMar, as we count down to the Fed decision later on this afternoon. Live from New York City this morning. Good morning.
예상 추이 탈 확인되어서 손절 사인 드리도록 하겠습니다. 자, 손절 사인 드리도록 하겠습니다.
주문 청산이 완료되었습니다.
텔레그램 아이디가 없다고 나오신다고 하셔가지고 이 부분 확인 후에 다시 대응에 나가도록 하겠습니다.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
자, 진입사인 이어서 드리도록 하겠습니다. 진입사인 드립니다. 자, 매도 진입사인 드리도록 하겠습니다. 매도 진입 상대야.
체결되었습니다. 확인 바랍니다.
271.00입니다. 271.00. 자, 매도 진입 사인 드렸습니다. 실시간 대응 이어나가도록 하겠습니다.
That was Brian Moynihan, the chair and CEO of Bank of America. I think we should sit on those comments just for a few beats. I think they're important. We're going into this Federal Reserve decision later on this afternoon. People are looking for a rate reduction and some aggressive guidance into 26. And you've got the CEO of one of the biggest banks in this country, one of the biggest lenders to companies across this nation, talking about the prospect of growth picking up next year and inflation remaining sticky. I think that's something to keep in mind going into later this afternoon.
Especially, and let's build on that, this idea that rate hikes didn't necessarily put the brakes as much as people had expected on the economy. How much will rate cuts cause a spur to that reacceleration, really add some fuel to the growth that potentially could already be there in the form of more borrowing, more mergers, more activity more broadly?
We can continue this conversation as we count you down to that Fed decision later on this afternoon. I'm pleased to say that we're joined by Bank of America's newly appointed co-president, Jim DeMar. Jim, it's good to see you.
Great to see you.
Is it Jim or Jimmy? I'm always confused. Brian called you Jimmy.
You can call me whatever you like.
We're going with Jim.
Either's more than acceptable.
Jimmy, congratulations. Congratulations.
Thanks very much. Appreciate it.
It's fantastic to get some time with you. I want to start by talking about markets before we talk about the operational stuff. I've lost count of how many quarters that you've seen growth in the markets unit. What are we on now?
13 as of the last,
13
as of the
14.
second quarter. Earnings are coming soon. We have to wait till those come out, but we indicated at the Barclays conference last week, and when Brian spoke before, mid-single digits for the market. So, knock on wood, we should be at 14.
Where's that growth coming from, and just how crazy was the start to Q2?
Yeah.
25.
Yeah, I think for us it's been a story of having the additional financial resources to help clients execute what they want to execute, because markets have grown considerably in size and market value. And taking a step back from that, for us, our equities business, it's been a huge focus for us the past 4 years, investments in financial resources plus people plus technology. And then within the FIC kind of sector, if you will, the rates business has been a place where we haven't done as well as we think we can, and we've seen a turnaround.
현재 약수익권에서 대응 이어가고 있습니다. 매도인이 현재 약수시간
a lot
대응
of
중에 있습니다.
anticipation, as you mentioned, great deal of variance in terms of not necessarily this meeting, but what the next 6 to 10 months brings us.
John alluded to it, and I think it's a really important point. There's a tension between
밴드 하단
this push
이탈하면서
for the Fed to ease financial conditions, given the fact that financial conditions, at least you could probably tell us, but other people have told us, seem pretty easy.
Yes.
They seem like pretty free-flowing, and people can go out and borrow money if they need to. Can you square that circle for us?
I think what we've done a very poor job of is talking about financial conditions based on size of companies or individuals themselves. We've broken it down. You had Liz on this morning. We're talking about small business and what's going on there. Smaller businesses and on the lower end of the economic kind of scale, if you will, for individuals, they're more sensitive to short-term rates and floating rates. So, yeah, if you're a large corporation, you've had easy access. The markets have been very favorable. You issued you refinanced debt back in 2021. And you locked in some very low rates. Homeowners did the same. Mortgage rates were below 3%. And again, if you're a smaller business and you relied on floating rate debt and you don't have access to the broader capital markets, this will be a relief. So I think that's a story that people should focus on.
So I guess that another way of saying this is when the Fed started hiking rates, people were surprised that the economy didn't just tumble into recession. Are we going to be surprised by if the Fed cuts rates, how little it helps boost growth? Or do you think that it will boost growth substantially, that we will see M&A pick back up, that we will see borrowing increase even more?
I think we're going to have to, again, bifurcate it and take a look at different parts of the economy and see who's benefiting. But to your point on M&A and activity, for all the pessimism and climbing the wall of worry, I don't, there's a lot of activity happening across a lot of sectors, whether it's, tech, energy, utilities, power, data, financial services. We just saw, an M&A activity, and, there's more discussions on that. Healthcare, I don't know. Equity prices are high. Credit
Look at how this
tight,
market's priced.
and people and companies are making money.
So where on earth are we going? The Fed's about to juice the whole thing. How are you thinking about things? You've seen so many cycles. What is this? What is this moment?
Well,
the Fed's spooked by payrolls.
It's a very different one. That's for sure. There's some information we put out recently that showed, when the Fed is cut, almost I think it's been every single time, and I don't remember the exact number, but into a strong kind of equity market, we continue to get a rally for the next 12 months. So that's there. We'll get
Rally's
to the
one
stats,
thing, though, but can I just push this point? I want to understand from your perspective whether it's something more than that, whether some kind of great misallocation of resources is building here. I can't think of many times where I've met investors who are incredibly aggressive about the capex spend of a handful of companies.
Yes.
It's sent the equity market to all-time highs.
Yes.
And the Federal Reserve, again, is about to come out later on this afternoon and juice the whole thing by even more, potentially. I understand what they're responding to. It's the payroll story. I want to understand the consequences from a market perspective, just how dicey things might get further down the road.
Again, I think we have to see a considerable drop in longer-term rates to really get that traditional impact. We had an inverted curve for an extended period of time, which everybody indicated should indicate a weakening economy, which we didn't see. And to your earlier question, I don't think we ever had in history fiscal and monetary policy at odds, and that's what we had. I mean, everybody talked about, well, rates are up 400 basis points. Well, we also had the largest spend by the federal government, in history. not only in absolute dollars, but as a me. So
현재 거래량이
the policies weren't
관계로
aligned.
길게 보고
We talked about it a
하겠습니다.
bit then.
현재 매도
2 years later, 3 years later, we're talking less about it. But I think it's going to be, is this going to be inflationary? I think people have to also think about fiscal policy and what's going to happen there relative to what the monetary policy is.
There's also the idea of deregulation, which we've seen quite a bit, and that's one reason why people have been very optimistic on the banking space. Does that allow you to take more risk and compete more significantly, say, with some of the private asset managers that have really made more headway into the space?
Yeah, I think for us and for the industry on regulation, it's more about clarity, which is one of the things that we've talked about a great bit, whether it's stress testing, some things on SLR, GSIB. Those are all things that I think play an important role in regulation and in a safe environment. But a lot of questions around were they too restrictive and compounding as opposed to kind of catching the bubble or the balloon from squeezing out in another direction. I think one of the in the broader economy, I think there's a lot of regulation that's occurred that we're less familiar with because we're not in that environment. But if you go across
장기적으로 봤을
the
때는
country
현재
in many
관련주
industries, the
상단에서
excitement is around
대부분
less regulation
팬들이
there.
위치해
I
있고요.
think it's going to be less about us, quite frankly, and more
중심선까지는
about for the broader economy.
I wonder how much we keep talking about the dollar as the backdrop here and how much it's been weakening. And I wonder for you, as the head of capital markets, co-president of a bank that has America in its name, how much more difficult it is for you to compete globally at a time where there's a real question about U.S. policy, about the dollar, and about what the relationship is going to be.
Yeah, it's certainly, it's certainly a topic, meaning the dollar. Look, we're a global business. Yes, we are. We are Bank of America. We have a dominant, position in the U.S. We've grown our, international business, which I didn't highlight when we're talking about areas of growth, but international is a focus for us, not expanding beyond where we are, but just being more meaningful in the regions that we are. And, we just look at it and say we have global capabilities and, we can transact and warehouse risk where we need to, for clients. One of the big, I think, misunderstandings or where it's not thought through enough, it's going to take some considerable time for this to occur. We're looking at, weakness in the dollar, 10%, 15% versus its peak. We're still the largest capital markets to invest in, and you just have to keep that in mind.
I wanted to finish by talking about you.
Yeah.
You've had a pretty tight remit for quite a while.
Yeah.
Are you excited about the prospect of stretching your legs a little bit, having a look at other business lines?
Yeah, I mean, I've been in the markets business 35 years in different, capacity, but I've always had interaction across the firm, whether it's been investment banking or corporate banking or whatever it may be. And I think if you take a look at, these areas of where Brian talked about organic growth and where we can do it, I think there's some considerable opportunity for us to be more consistent in our delivery. We did it in the markets business. I tried to de-emphasize FIC versus equities and think about markets and how we can deliver for clients. And I just view this as an expansion, of that and trying to help everybody bring that to fruition because, ideas are great. Execution is everything.
Does that mean spending less time with these guys? Are they going to miss you?
I'm going to miss it. I've sat on a trading floor for 35 years.
Yeah.
It's a great thing. It's been a great experience. It's given me a lot of opportunity. We have a lot of talented people that, as I said in the meeting we had earlier in the week, I know everybody's saying congratulations. Now the next question is, what about me? Which is for everybody else in the room. What does this mean for me? And, we're going to be making those decisions over the next couple of weeks. But we're pretty excited about it. Team's pretty excited about it. And response has been very good.
We'll give you some space to figure that out. Jim, I know how much you love the markets business, and thanks for spending some time with us. We appreciate it.
Great to see you guys.
Jimmy DeMar there of Bank of America, the newly announced co-president. Very cool.
Yeah, very cool at a time of incredible transition technologically, but also economically at a time when the markets continue to keep grinding higher.
That does it for us. A special thanks to everyone here. Thank you very much, and excuse us for all the noise. You get your home back. We'll be back a little bit later on this afternoon, 1:30 Eastern Time, a Bloomberg surveillance special. The Fed decides from New York City at #1 Bryant Park, the home of Bank of America. You've been watching Bloomberg Surveillance.
현재 정오점 부근 냈기 때문에
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with
주문
it, given
청산이
that some people
완료되었습니다.
are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
282.75입니다. 282.75. 자, 매수 진입 사인 드립니다.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Willow Beck. We're going to talk about how sports is eating entertainment. Check in on the state of the movie business and get an update on LA after the fires from Rick Caruso and Irving Azar. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Futures are unched on the S&P ahead of the Fed meeting. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a policy pivot. The Federal Reserve prepares to deliver its long-awaited rate cut today to support a shaky labor market.
Deals and diplomacy. President Trump's UK visit kicks off with Microsoft, OpenAI, and other American companies announcing plans to spend billions on tech infrastructure.
And documents show Treasury Secretary Scott Bessent made the same kind of contradictory mortgage pledges that President Trump has been using to try and fire Fed Governor Lisa Cook.
Matt, a little bit of breaking news just crossing on Eli Lilly. So let me take you to the share price reaction, because we were down about 0.7% in the pre-market. This is actually better than where we just were. We were down more than 1%. It's a new study released finding that Eli Lilly's oral GLP-1 pill helped participants lose an average of 9.2% of their body weight. Shares are still off, though, because that is below an 11% weight loss from an earlier study. Matt, it's also worse than their shot, also seemingly worse than Novo Nordisk pill as well.
Yeah, and we've got commentary from the C-suite. Coming up on the program, China's internet regulator has told the country's biggest technology companies to stop buying all of NVIDIA's artificial intelligence chips and terminate their existing orders. This, according to an FT report, but it adds to a number of instances, Danny, this year where the Chinese Communist Party has tried to get domestic companies to quit buying NVIDIA chips.
And it may be signals that they're ready to do that chips in Asia and China are advanced enough to replace some of that. But Matt, we need to start with the top story, and it is the Fed's expected rate cut today. Bank of America Chair and CEO Brian Moynihan spoke to Bloomberg in the last hour. Here is what he's expecting to hear this afternoon.
The tension the Fed has to deal with, and you've been picking at it all day, is the tension between a higher inflation rate and ultimately where Fed funds could settle in at. And so whether they do 25 basis points today or 50, people have to keep in mind, the growth rate in the economy was brought down, and now it's starting to go back up. So next year is predicted to be better than this year, and the year after is better than that.
Michael McKee, Bloomberg's international economics and policy correspondent, joins us now from Washington. So, Mike, aside from the relationship fireworks that we can only speculate about in this meeting with Stephen Myron and Lisa Cook, both on the board, what do you expect from Jerome Powell in terms of policy?
Well, Matt, those relationship fireworks are actually going to be one of the more fun things to watch. But let me start with a public service announcement you're going to have to watch. The Fed decides on Bloomberg TV at 1:30 Wall Street time this afternoon, because this is going to be the most complicated, interesting meeting we have had in years. Markets are expecting a 25 basis point cut, but they also want to know what's next. Do we see a cut in October? Do we see a cut in December? What about 2026? What's the path forward? That's the key question in terms of monetary policy. Inflation or employment? What are they focused on? That was the Brian Moynihan question you just heard. And then who and how many dissent. And that's going to be really interesting to look at, even if it doesn't mean a whole lot for policy right now, because the Fed is extremely divided here. There is a possibility we get 3 dissents in favor of 50 basis points. It would be Stephen Myron, who just joined the board, of course, from the White House, Mickey Bowman, and Chris Waller. They might dissent for 50 basis points. And at the same time, we might have 2 dissents in terms of no cuts at all. Jeff Schmidt and Alberto Musalem, who've made it plain they don't think there should be cuts at this point. Now, the question about all of that is, at least on the 50 basis point cut team, how much of that is because they really think the economy needs 50 basis points, or how much of that is because they're playing to an audience of one who happens to be in the United Kingdom right now, because he is considering all 3 of them for the possible job of replacing Jay Powell as chair of the Fed. So how much weight should we put on these dissents? It's going to be a tough meeting to decipher, and it is not going to be a lot of fun for Jay Powell at his press conference this afternoon.
Hey, Mike, quickly, because we're also going to get the dots this meeting. Stephen Myron wasn't a governor as recently as Monday. Will his dots, will his estimates, will they factor in this time?
It's going to depend on him and whether he submitted anything. The Fed would put in his dots and his summary of economic projections forecasts for the economy if he brings them. Last time we had a situation like this, Lael Brainerd came to the Fed shortly before a meeting and did not submit any estimates. So we don't know exactly whether we're going to get a Myron view or not.
체결되었습니다. 확인 바랍니다.
Great to get your take on this. And obviously, we're going to be talking to you all day. And we will tune in to watch the Fed decide this afternoon. Michael McKee there in Washington, where he'll be in lockup, I guess, until that decision is released. In tech, China's internet watchdog has instructed companies, including Alibaba and ByteDance, to terminate orders for NVIDIA chips crucial for AI development, this according to the Financial Times. But as I said earlier, we've seen a number of cases so far this year where through one regulatory arm or another, the Chinese Communist Party has urged domestic companies to stop buying NVIDIA chips. Bloomberg technology co-host Caroline Hyde joins us now on set to talk about this. And is it finally going to happen? Are they finally going to quit?
It feels as though the sentiment is of confidence coming from China, that they think they have the local domestic supply to say, no, we don't need your H20s, and now we don't need your RTX 6000Ds either. These were specifically based on Blackwell architecture designed for the Chinese market, particularly in manufacturing. This was about digital AI twins and the like. This was another type of chip other than the H20. Now, we know the H20 had been limited by the US government. Now they're allowed back in with a 15% cut for the US government. But already Bloomberg have been reporting out that companies such as Alibaba and the big Chinese domestic players had been lent upon by the Chinese government not to buy them. Now this is another type of chip that they're saying, please don't buy these either. In fact, really enforcing that they shouldn't. And any of the testing needs to stop. Any of your orders needs to be unwound. And in fact, Jensen Huang is over in the UK right now. He's been in front of the press. He's been talking. In fact, Bloomberg has his own reaction, saying, of course, he's disappointed by the ongoing issues between China and the US. He says we can only be in service of a market if the country wants us to be there. And so clearly this is development that he's going to be sitting down at the banquet with President Trump tonight in the United Kingdom and trying to bend his ear around.
It's a great point because the timing of this is so interesting because also not only are these negotiations ongoing, or is this back and forth ongoing, but TikTok too? And it seems like on that front there has been progress.
Look, the relationship between China and the US in the future really hinges on technology, whether it's yours or mine use of social media, or whether it's the ability to generate billions and billions with AI GPUs. And I think TikTok looks as though the framework is there. We're sort of piecing together what it really looks like. Silver Lake's involved. Andreessen and Horowitz is involved. Oracle, we understand, is involved, but probably taking a smaller chunk in terms of actually owning equity. But this is an infrastructure provider. This is about giving it cloud offering. This is about, of course, managing Project Texas, where it protects data from the US and other users from access by the Chinese government. But all of this is about really the ins and outs. Will we get a whole new app? That's what we seem to be understanding, according to people familiar. But you and I, if we're on TikTok, I know Matt isn't, but we'll have to move onto a totally different app, but the license is there for the algorithm. And I think that was a key question. Will we have access to the secret source? And many felt that China was going to say, no, you can't, but maybe they're going to license that. So that's a big compromise on the side of China. But what's the price point? We knew it was maybe $30 to $40 billion was talked about, but valuations have gone nothing but up and to the right. So maybe it's a little bit more than that. And really, how much and what Chinese players still do they own? Maybe less than 20% is what's being talked about in the market. But as the White House has time and time and said again, this is pure speculation until it's announced on Friday between that talk.
All right, well, we're going to learn all the details on your program later today and throughout the week.
Can I say lovely tie?
Thank you. I've got, actually, can you zoom in here? I've got from Van Eck here. It's a Jerome Powell tie.
And
he's holding the 60-40 portfolio there.
The suggestion that he holds 60-40 is in the fate of Jerome Powell's hands.
I don't know why they made it like that, but it's just a fun
diversification.
That's what we gotta remember.
Tie. We look forward to Bloomberg Tech. I know you shortened the name. I just like to say the whole thing for nostalgic reasons. Caroline Hyde co-hosts that with our buddy Ed Ludlow. Now, U.S. companies pledging to spend tens of billions of dollars on technology infrastructure in the U.K. as President Trump's two-day visit to the island nation kicks off.
자, 금리 인하가 선반영된 것이 완전히 반영된 거 아니기 때문에 계량후에 상승세가 나와줄 가능성이 높습니다. 조금 더 지켜보고 실시간 대응 이어나가도록 하겠습니다.
We're having trillions of dollars coming because of the tariffs. They'd like to see if they can get a little bit better deal. So we'll talk to them.
38만 원 손실권에 있습니다.
Joining us now from Windsor Castle is Bloomberg Surveillance co-host Anne-Marie Hordern. It's like you belong there, Anne-Marie. What a fantastic 11th century palace. What do we know about the deals, really, which have got to be the biggest headlines for us?
Absolutely. We are talking about tens of billions of dollars, just $30 billion alone when it comes to Microsoft and their investment in the United Kingdom to building out AI data centers. You see all these companies lining up, like Sam Altman with OpenAI. And as Caroline Hyde just said, NVIDIA's Jensen Huang also going to be part of this trip. And what the United Kingdom is looking forward to is trying to become an AI hub, an AI data center hub when it comes to building out infrastructure in Northern England. And this is really critical, especially at a time right now for this prime minister when we thought that potentially refining, as the president put it, of the trade deal would be on the table. The UK wanted to put forward bringing the steel tariff from 25% to 0%, as well as maybe an exemption. I know something may be important to you, Matt, Scottish whiskey, but that seems to be that the UK is just capitulating and they're not even going to discuss it. So really for them, the big win is going to be AI. After all, of course, all the theater that's taking place today inside the castle walls, the evening will start to feel a little bit more business-oriented because the president's going to be flanked by all these executives for the state banquet, and then tomorrow he'll be sitting down in earnest with the prime minister.
Anne-Marie, we're looking forward to catching up with you throughout the hour as those events unfold. That's Bloomberg's Anne-Marie Horjorden reporting from beautiful Windsor Castle.
By the way, when I drink...
Yes.
It's bourbon because I am a redneck at heart, right? I'm from the great state of Ohio.
Well, now bourbon costs you less, too, so that makes sense versus a whiskey that you have to import from abroad.
Absolutely. I'm saving money and true to my roots here. We want to look at futures as we approach the Fed decision. We hit again an all-time closing high yesterday, and you can see futures on the S&P and the NASDAQ are unchanged. It looks like the small caps may benefit even more from this, as the large caps have already had a significant rally since the first cut. If you believe that this is the same cycle, right?
Right. I guess that makes a difference. Is this a new rate cutting cycle that we're embarking on? But at a 1/3% gain, if small caps can gain again this week, they've been rallying since that poor July jobs data. But Matt, it's really because treasuries have come down so much. We're talking about 4% on the 10-year yield right now. When it was only a couple weeks ago, we were saying that long-end bonds yields were remaining stubbornly high. It's completely different going into this Fed decision.
Yeah, it's fascinating. It's also brought mortgage rates down. We're going to talk about that throughout the program. I just want to point out quickly that Bloomberg Intelligence looked at all cutting cycles in the past and found that across all of them, you get an average 15% gain on the S&P. Now, we've already had a 17.6% gain since the first cut. So if this is the same cycle, maybe that's run its course. But if it's a new one,
guns go off.
Off to the races.
Off to the races. Okay, coming up on the show, Treasury Secretary Scott Bessent once claimed to occupy 2 primary residences at the same time. That might sound familiar to you. We're going to have that Bloomberg scoop coming up next on Bloomberg Open Interest.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
현재 매수 진입권 실시간 대응 중에 있습니다. 저조한 거래량으로 대응의 시간이 좀 소요되고 있습니다. 본장 개장까지는 약 15분을 앞두고 있고요. 본장 개장 이후
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey.
일부 시장에 선반영은 되었지만 완전히 반영된 것은 아니기 때문에 개장 이후에
Check in on the state of the movie business.
충분한 상승이
We get an
나올
update on
거라고
LA after the
생각해서
fires from Rick Caruso and Irving Azar. You should expect news interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now. You should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
For bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Let's get now to high interest. It's a look at what's making headlines around the world. Lyft is partnering with Waymo for the first time to offer robo-taxi service in Nashville starting next year. The partnership will help it better compete with Uber, which has robo-taxi services, at least in Austin. Lyft has been playing catch-up with Uber and making driverless vehicles available to its customers. BlackRock's Rick Rieder is revamping his fixed income empire around new investment strategies and artificial intelligence. The move comes as the unit's leveraged finance business moves under an executive team from the firm's newly acquired HPS Investment Partners, and the move underscores the growing clout of the private financing team. It's a key business for BlackRock as it expands in private and alternative credit and competes with Blackstone and Apollo. Treasury Secretary Scott Bessent once agreed to occupy two different homes as his principal residence at the same time. That's according to documents seen by Bloomberg News. It's the same kind of contradictory pledge that President Trump has been using to try and oust Fed Governor Lisa Cook. Danny?
Let's get more on that story and bring in Bloomberg Washington correspondent Tyler Kendall, who joins us now. Tyler, what do we know at this point?
Yeah, hey, Danny. Well, Matt really outlined there this breaking news this morning from Bloomberg News, which reviewed these mortgage documents, finding that the Treasury Secretary had entered into conflicting agreements obligating him to occupy two separate houses, one in Massachusetts, the other in New York, as his primary residence. This is from 2007. Both mortgages were provided on the same day by the same lender, Bank of America. One property is in Bedford Hills, New York, the other in Provincetown, Massachusetts, part of a broader $21 million financing package. But evidence shows that the bank wasn't really relying on these pledges, never actually expected the Treasury Secretary to occupy them both as his primary residences. And we did get a statement from one of Bessent's lawyers. In fact, he was the one that had power of attorney and signed these documents for Bessent, saying in part that Bank of America was fully aware the Massachusetts property was not a principal residence, and adding that, quote, absolutely nothing improper happened here when it comes to Mr. Bessent's loan applications. Mortgage experts agree, telling us for the story there is no sign of wrongdoing on Scott Bessent's part, but rather this could demonstrate how discrepancies when it comes to mortgage applications don't necessarily amount to fraud. It's showing some pretty striking similarities here, though not identical to the case against Fed Governor Lisa Cook, who also is being accused of listing primary residence on two of her mortgage applications, though a document reviewed by Bloomberg News over the weekend shows that she did list one of them as a vacation home. So perhaps showing us a similarity here that the bank or the lender was not thinking that she was going to use that as a primary residence. And Cook's lawyers have argued that she didn't have any intent to mislead anybody when it comes to her applications.
Right. It's important to point out that it looks like in both cases, the lender was aware that at least one of these homes for each person was not a primary residence. But this seems like it's happening all over the place, right? ProPublica has reported that many members of the Trump administration, Sean Duffy, Lee Zeldin, and others, aside from Bessent, have at one point or another claimed more than one residence as a primary residence in mortgage documents. Meanwhile, the president and his allies have accused a number of people, including Letitia James and Lisa Cook and others of the same thing. So it's like a back and forth, but it seems like everyone's doing it.
집중 부탁드리도록 하겠습니다.
Right,
자, 본장 계장까지 현재
piece from
진입권
ProPublica that we're
대응
showing
이어나가도록
also
하겠습니다.
highlighting
매수
the allegations
진입권
against the Labor
본장까지
Secretary
대응
Lori
이어나가도록 하겠습니다.
Chavez DeRemer, who we did hear a statement from her lawyer saying that she did follow the law there. But you're exactly right, Matt. This continues to come up, and particularly from the Trump administration against those political adversaries like Letitia James and California Senator Adam Schiff. But I would point that that is why when we are hearing from the courts, particularly around Fed Governor Lisa Cook's case, this idea of due process is going to keep coming up. We had heard from the appeals court earlier this week that allowed Cook to retain her seat. They didn't rule on this issue of whether or not President Trump had sufficient cause to fire her, but they did rule saying that he very likely violated her due process rights to defend against these mortgage fraud allegations. And I think that's going to be a really important thread for us to continue to follow here as more of these instances come to light.
All right, Tyler, thanks very much for the reporting. We're going to have more on this story in the next hour, by the way, with Pulitzer Prize-winning Bloomberg News reporter Zach Miter. He'll join us to talk about the details. Coming up, Ron Temple of Lazard joins us, and he'll talk about the broadening out of earnings that we've seen and risks from the Fed cutting with stocks at all-time highs. I've heard at least one analyst say this is a Fed cut because they can, not because they have to. We'll ask Ron about that. This is Bloomberg Open Interest. In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
If the Fed is cutting, but inflation has not been, sufficiently managed, I think that's the risk. Short rates have actually done very little to stymie large cap company performance. Absent yield curve control, the long end, I think, is really, potentially more dramatic for the S&P.
That was Bank of America strategist Savita Subramanian. Now let's get the view from Lazard's chief market strategist, Ron Temple. Ron, thanks for joining this morning.
Pleasure
Great to see you.
Thanks.
It's a market that is priced and positioned for a dovish cut. Is today going to be a sell the news Fed decision?
Honestly, there are so many things we're going to have to parse through today. It's going to be a really interesting day for those of us who are kind of Fed geeks. But basically, I'm going to look for the size of the rate cut. I'm really interested in the possibility of a three-way vote split in terms of some voters saying no cuts, some saying 25, some saying 50. Want to see where the dot plot lands. Want to see what the long-run neutral rate for the Fed funds is pegged at in the summary of economic projections. And then, you know, pity Chair Jay Powell. Somehow in the press conference, he's got to navigate conveying the views of three different camps of potential voters. So I think there's a lot to see there to decide then how to react. I mean, I guess the thing I'm most worried about are any signs of a politicization or a gradual decrease of Fed independence. Because to me, in the longer run, that's much more important than whether we get 25 or 50 today. What the market should be focused on is this Fed still singularly focused on achieving its dual mandate and focused on the data, not any incoming political noise from the left or the right?
Right. Although the bond market hasn't shown that any investor really cares about that because it's been so politicized already. We'll continue to talk about this. Ron Temple is going to stay with us. We have the opening bell up next, and you can see that futures are still unchanged here at 6668 on the S&P. NASDAQ futures unchanged at 24,520.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
1 시간 시작되었습니다. 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 1 시간 시작되었습니다.
We are moments away from the start of trading on this Fed day. This is Bloomberg Open Interest. I'm Matt Miller, watching very little change in terms of futures right now. This is unusual, right? Traders often sit on their hands and wait for the actual decision to come out, turn off the algorithms so that they can interpret it themselves. AI is getting better, so maybe they do that less and less. You hear the opening bell ring at the New York Stock Exchange. Look at here, Eric H. Baker, founder and CEO of StubHub, ringing the opening bell on their IPO day. We'll be talking about that later in the program. And then, Danny, you were right. He is wearing pink. It's like an orange pink in terms of the blazer. Dan Ives there ringing the bell for 8Co Holdings. That's a company that he advises there. He's got a lot going on, this tech analyst. He's got an ETF. He's got a clothing line that he's showcasing there, 8Co, and of course his day job at Wedbush.
Yeah, his day job and also TV appearances. He joins us a lot, and we're looking forward to the next Dan Ives appearance as well. Something that Dan Ives himself might be commenting on this morning when he's done opening the ringing bell. Look at this moving list. Up 12% this morning. Partnering with Waymo to offer robo-taxi services in Nashville starting next year. And as part of this partnership, this will also construct a fleet management facility with charging capabilities. Bad news for Uber, who's also been trying to roll out robo-taxis as well. Those shares down 1%, Matt.
All right, so that's the I guess the ride-hailing scene. Let's look at the big kahuna. China's internet regulator has told the country's biggest technology companies to stop buying all of NVIDIA's artificial intelligence chips. That means they won't be able to buy the Hopper or the Blackwell or the H2O or whatever they've got, and terminate existing orders as well. This, according to the Financial Times. Investors aren't taking it too badly right now. The shares are off, but only 1 1/3%. It's a big move, because the company is so heavily weighted. So you may see it weighing on the indexes, but it doesn't look like such a huge drop compared to how far they have come. We are back right now with Lazard Chief Market Strategist Ron Temple. And let's talk about that, how far they've come. Ron, what do you think about the fact that, Torsten Slok put out a slide showing how overexposed investors are to AI and these mega cap tech companies? Is that going to be a problem?
Longer term, it's increasingly worrisome. But if you look at where the earnings growth has been in the market in the second quarter, S&P earnings up about 11%. If you took out the broadly defined tech sector out of that number, earnings growth was only about 3.25%. And by the way, if you took financial services out, you're basically at a zero. So if you think about where you've been able to get earnings growth, it's been in this part of the market. One of my concerns is longer term, how sustainable is that growth? And a couple of firms have been highlighting this lately. You have this massive CapEx and the hyperscalers trying to ramp up their investments in AI. But basically, that's all recognized as revenue today, but the expensing is amortized over multiple years. So the more we spend, the better off we are. But if you never get a return on that investment, it's going to be a problem. Or if the return on the investment is 7 years from now, it's a problem. So I am worried about the concentration in the market. But I don't think that necessarily means you move out of cap weighted into equal weighted. I think you just really want to be careful on your security selection.
It's so interesting you say that because Bank of America's investor survey earlier this week talked about this idea that more investors are rewarding companies for capital expenditures versus taking care of their balance sheets.
Right.
Does that continue on, or does that change at some point? Do we start to get worried about how much spending these giants are doing?
Well, it's interesting. If you go back a few years ago, part of the whole story of why tech was doing so well, it was capital light, high margins. And now the exciting part of tech is incredibly capital intensive. And so, again, there's a bit of a worry there that if we think back to 99, 2000, we loved that people were pumping money into CapEx and, fiber optic cables and servers. At some point, we realized that maybe that wasn't the right approach.
I think about it a lot, dude. Cisco. I mean, they were paying so much, everyone was, to lay cable, and it turned out not to pay off until like 7 years later.
Yeah, I mean, the hard part of all of this, though, is I don't think any of us would disagree that AI is going to be revolutionary and you want to spend the money because you'll get returns. The question is, how long can it last? And I wish I were smart enough to make that call, but I do think it's probably wise to pull a little money off the table.
Well, okay, there's the argument that maybe it's like the .com and it's like laying cable, but then there's the other argument that this is railroads, that this is infrastructure, not only that the U.S. needs, but every country needs, and if you don't have it, you're going to be left behind. How do you decide between which of the two poles we're standing at?
I think that's where you basically go through stock by stock and you figure out which one is most likely to have that pole position to be in the lead in this area, which one is being most careful about their capital allocation while dumping the right amount of money into it? It's a hard question to answer. Unfortunately, I can't give you that answer right now because I don't know it.
What sectors do you like outside of tech? You know, if you look at the S&P 493, and obviously there are a lot of tech companies in that, but if you look at the rest of the S&P, where do you see the most opportunity?
Well, honestly, where I see the most opportunity might be in non-US equities at this point. Tech US looks great. I do think in the near term you could have some beneficiaries from rate cuts. You've already mentioned this earlier. I believe small caps actually are a beneficiary of rate cuts, so there could be a positive opportunity there. But when you really start looking outside of that kind of tech longer-term story, and then more recently financial services, more of a cyclical deregulation credit cycle story being better than expected on the credit cycle, you know, I think right now a lot of the parts of the market, the old economy parts of the market, are most negatively affected by tariffs. They're most negatively affected by immigration policy changes. And so when I think about this, I think the best opportunities for investors right now may well be outside the U.S., and I would highlight emerging markets in Japan at the top of that list, partly because those equities, I think, have upside, but also because I think the dollar has meaningful downside. And from a total return perspective, investing unhedged outside the U.S. could be a good place to put that next dollar capital.
I know you have been talking about this, Dana, but I just want to point out quickly on the small caps. I keep falling back on this BI piece that Michael Casper and Nathaniel Wellenhofer put out this morning, showing that small caps are the biggest beneficiary of rate cuts. If you go back across all the cutting cycles, large caps have averaged a 15% gain, small caps have averaged a 17% gain, and so obviously this time could be different, but
well, I guess the key for that, though, and Ron, I'm sure you see this too, that small caps do well if it's not a recession. Yeah. If you're cutting into a recession, it's completely different for these companies that, again, don't have the buffer of all of the AI spending. So if these cuts are being done because it's a labor market, or we get hints that it's going to be something like a 50 basis point cut, that those might be the come, and small caps continue their round.
And Casper and team pointed out that in rate cut cycles where we weren't going into a recession, small caps have rallied 19.6%.
That's chunky.
So even stronger.
I think this is more of that scenario. By the way, I'm not worried about recession risk. If anything, to me, the whole debate for the Fed is, you know, what if unemployment really doesn't go up very much? And again, that's a whole other topic we could spend a lot of time on. I think recession risk is quite low. The reason small caps do so well, by the way, is they have twice the debt to capitalization of large cap, and about 40% of small cap debt is floating rate. Only about 10% of large cap debt is floating rate. So you get an immediate benefit that's magnified. And if recession risk is quite low, this is positive for those small cap companies. The risk is, though, I think the economic outlook is not one that's getting better necessarily in the next 2 years. My view, quite strongly held, is that because of the decrease in immigration flows to the United States, potential or sustainable real GDP growth is downshifting, not shifting higher. So in the past, economists would say we can grow 1.7 to 2% per annum. I think that might be more 1 to 1.5%. And if you look at one last data point from the Bureau of Labor Statistics, year to date, the labor force of foreign-born workers in the United States has decreased by 1.1 million people. In the prior 2 years, we had 3 million immigrant arrivals. That's fewer customers, fewer workers, less output. And so it's a really tough thing to navigate right now, which I think is why there's so many questions around what the Fed should and will do.
Well, I wonder just quickly why everybody is writing off the chance that we could be heading into a recession. Yesterday, we were talking with Tiffany Wilding at PIMCO, and she said big companies aren't passing on tariff costs because they're just firing workers instead to support margins. And small companies are just going out of business, right? If you look at small private companies, bankruptcies are rising to record highs. Joe Brusuelas, an economist that I've been talking to for 20 years, pointed out today that heavy truck sales are falling, and that does often indicate a recession.
No, there are definitely signs of weakness in the economy, but layoffs have basically remained very low. So the data is not showing layoffs. We are seeing weakness as hiring rates. Companies don't want to hire anyone. We see this with the recent college grads in particular. So there are signs of weakness. But I guess when I look at it, the consumer balance sheet is in a great place. If you look over the last 5 years, consumer net worth is up about $67 trillion. It's an enormous number. Corporates have very strong balance sheets for the vast majority of them. This is an economy that's in a pretty good place. And so the risk of recession, I don't see any of those typical early signals, or not, at least not enough of them, to be losing sleep at night. And I think the markets agree. If you look at credit markets, credit spreads are very tight. Markets are quite comfortable.
Mad tight.
Tightest, I think, since the 1980s, late 1980s, somewhere around there.
But that's a demand story, right?
Yeah. Oh, there's so much money flowing into that. Ron, this has been so fantastic. Please come join us again soon. That's Lazard Chief Market Strategist Ron Temple. All right, a quick check on where markets stand right now. If you look at your move screen, this is an equity index that is little changed. Maybe that changes after 2 p.m. when we get the Fed decision. Tech on the top and tech on the bottom. Apple leads us higher in terms of points. On the bottom, maybe it's more interesting to look at how poorly NVIDIA is doing today, down 2.3%, dragging down the index with it on that FT story that China is banning chips. Elsewhere for the sector, it looks like the inverse at this point yesterday, and that is you look at tech and consumer discretionary are down. Infotech down because of NVIDIA. We also had General Mills earnings that maybe flagged some weakness, people looking at buying smaller sizes and making food at home. Consumer staples, though, up 1%, Matt.
All right, when we come back, we're going to talk about Oracle stock surge. Analysts are concerned about a potential bubble. We'll ask Jefferies analyst Brent Thill what he thinks. This is Bloomberg Open Interest.
When we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Let's look at some of the top calls this morning, the analyst action that we are focusing on. First up, Berenberg downgrading Eli Lilly and Merck. For Lilly, he says that the obesity upgrade market cycle has plateaued. And on Merck, the analysts cite a looming patent expiration for a key drug in 2028. Zillow, that gets upgraded to a buy at Bernstein thanks to improving revenue and potential tailwinds for lower rates. Finally, Workday gets upgraded at Piper Sandler following its Investor Day event. The analysts say the company is becoming more relevant in the AI era. Those shares surging this morning after Elliott Management also says that Workday has made substantial progress in recent years and takes a stake. Let's stay with tech. And Oracle is among the consortium of TikTok buyers that will keep it running in the U.S. Shares of the stock have been climbing so quickly on earnings and AI deals that some analysts have started to worry that it is maybe in a bubble with a price-to-earnings ratio in the 40s. Let's discuss this with Jeffrey analyst Brent Thill. He has a buy rating on Oracle on the stock. Brent, great to see you this morning. And look, this is a company that was once sort of viewed as a sleepy growth tech player. How much has your view changed of Oracle as it's become serious on both the world stage politically and on AI?
Yeah, I mean, we think Oracle's in a really good spot. They're inflecting on the OCI, their cloud business. We continue to believe that Oracle remains the biggest market share gainer in these cloud wars. If you think about it, it's really been the Amazon, Microsoft, Google show, and Oracle was sitting at about 3-4% market share. And now that market share is effectively, we believe, will increase the most rapid relative to all the other hyperscalers. So yes, is this a overweight contract with OpenAI, and given the breakup that Microsoft and OpenAI are somewhat going through, and are they a beneficiary? Absolutely. How long will this last? I think is an open question, but we still see a pathway for Oracle to get to $20 of earnings power. You put a 20 multiple, and that's $400 in the stock. Some are saying they can get to $30 of earnings power. Again, put a 20 multiple on it, and you're much higher. So in any situation, I think Oracle has really proven that the momentum's on their side. We're at the beginning of this AI build out, and I don't think there's anything that you would call in a bubble right now. We think, again, this is going to take several years to play out, and we continue to think that Oracle remains in a really good spot in terms of the biggest market share gains relative to their peers. It is not a zero-sum game. Microsoft, Amazon, and Google are also going to win. So we wouldn't say that this is just Oracle winning. Oracle's just, by definition, has the lowest market share. So they have the fastest market share gains and the fastest growth across the industry right now. And that inflection is going to drive accelerating growth into next year. And investors love accelerating growth.
First, I would point out, Oracle's only trading at 44 times next year's estimates. And like, I keep coming back to this, but Costco trades at 53 times next year's estimates. Brent, what about getting hold of the GPUs? How much of this success is about Oracle managing to get hold of a big share of GPUs? You say it's not a zero-sum game, but there's only so many to go around, and Jensen Huang has to say to Microsoft, Amazon, Google, Oracle, and others, like, you get this many, you get this many, you get this many, and now we're out.
Matt, if I told you you had $300 billion of capacity to build in your Jensen, are you going to give me those chips? The answer is yes. They have the biggest contract of anyone. I mean, no one's seen a $300 billion deal. If the Wall Street Journal's article's reporting is correct, Oracle says it might be smaller and it might be over a longer period. But whatever the number is, when Oracle added $317 billion of incremental backlog, NVIDIA is going to get them the chips. And remember, Larry and again, Musk and that whole ecosystem of tech leaders are very close. So I don't think there's going to be an issue in terms of them getting what they need to get. Is there capacity constraint across the entire industry? 100%. Is everyone getting what they want? Probably not. But given I think they're going to be favorites here. And when you bring that level of backlog and that level of build out, and again, we don't know, they didn't say who the customer was, but assume it's OpenAI, who is considered to be the AI pioneer.
Well, Brent, just on that, if I can jump in, because if a chunk, if a chunk of their business, though, is coming from a reported deal with OpenAI, is Oracle essentially a one-way bet right now on OpenAI's ability to continue to raise hundreds of billions of dollars for their build-out? And is that not a concern that it's so concentrated?
Yeah, it's 100%. It's a huge risk. But I think when you you look at what OpenAI's position is as the leader right now, your risk factor is low. If this is the 7th or 8th, on the track and they were 5 laps behind, but OpenAI is in the pole position to crush it. I mean, they're so far ahead. So when you think about that, is there concentration risk? Yes. But look at the rest of the customer base at Oracle now. TikTok, the resolution there, that's good for them. You look at foreign governments that are betting big on their cloud. If you look at the U.S. and many of these corporations that are betting big, if you look at even some of the other what Musk's organization across the board, right? There are multiple organizations that Elon's in. He's obviously very good friends with Larry. You've seen them making a commitment on their properties. So I think that, yes, this is an over-concentrated risk on one contract, but there's also diversification in high-quality companies that are also going after this AI race that helps insulate this. Remember, 2 years ago, I was freaked out. Like, TikTok's going away. Like, it isn't going to exist. All of our kids are going to cry. And then all of a sudden, Oracle has infrastructure. So everyone says, oh, the infrastructure is going to turn off and Oracle's dead. I mean, 2 years ago, that was the wrong bet. It's the wrong bet to believe, in our opinion, that they aren't going to get this done and that there aren't going to be others that are going to come to them. Because what you're seeing is no one in the AI race thought we would go all over. Everyone thought we'd just go to Amazon or Microsoft. No one has enough capacity. So everyone's spreading their bets across all these hyperscalers. And you can count on one hand the number of infrastructure companies that are going to power the AI revolution. It's Microsoft, Amazon, Google, Oracle, and there's a few others. Meta in the consumer world. CoreWeave is enabling this. There's very few companies that can do the scale of what's required. And this isn't just a tech movement. This is healthcare, aviation, financial services, insurance. Every CEO and every board is freaking out right now. No one freaked out about cloud. No one freaked out about Bitcoin. Every board globally is worried about AI.
Brent, great to get your take on this. I hope we can get you back. Jefferies analyst Brent Thill, he rates Oracle a buy. And if you look at the Bloomberg absolute return rating, his recommendations have garnered you the best return over the last year. Early results are in for Eli Lilly's obesity pill. We take a look at the drug's future next.
여기서 끊어가도록 하겠습니다.
This is open
수익 청산
interest.
사인 드립니다. 수익 청산 후에 재진입 사인 드리도록 하겠습니다. 수익 청산 후에 재진입 사인 드리도록 하겠습니다. 안 되는 오류가 발생하고 있어가지고 잠시만요.
주문 청산이 완료되었습니다.
네, 수익 청산했고요. 저희 11차 진입 대기하도록 하겠습니다. 자, 현재 금일 실현손익 327만 원. 322만 원. 수익권 있기 때문에
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
동일하게 3계약 운영할 거고요.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
체결되었습니다. 확인 바랍니다.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Eli Lilly's obesity pill showing some promising results. Patients on the company's experimental drug lost more weight and experienced greater improvements in blood sugar levels than those on a rival drug from Novo Nordisk in the first head-to-head trial of the two medicines. Here with more is Bloomberg Health reporter Madison Muller. Madison, we also had another study earlier this morning that maybe suggested it wasn't as good as Novo. Where exactly do we stand on the studies at this point?
Yeah, I think there's been a lot of confusion about this drug. I mean, there was so much excitement and hype. We've been talking on the show for a while about how pill versions of popular weight loss shots are going to be the next big thing in this obesity market that has really captivated everyone for the past couple of years. But in some of the studies of patients with obesity, the drug hasn't performed as well as investors were hoping. On the other hand, though, in studies of patients with diabetes, because Lilly is testing it for both patient populations, the drug has performed a little bit better than investors were expecting. So it's an interesting scenario right now. I think overall the weight loss is a little bit less than investors were hoping that it would be. It's around 11%. They were hoping for efficacy in line with the shots, so like 15%. And so it's been a little bit of a disappointment, but doctors say they're still planning to prescribe this drug really widely if it does get approved, because a pill would be a huge new part of this market and give patients another option for treatment.
Right, and it's also important to mention that, which Danny laid out, it's not only about weight loss, right? For a lot of people, it's about lowering blood sugar levels as well. Madison relentlessly covers the pharmaceutical companies for us here at Bloomberg. Madison Muller there. You will hear an interview, by the way, some of it with Eli Lilly Chief Scientific Officer Dan Skowronski coming up in the noon hour, and then again on the close, Katie and Romaine did that. Coming up in the next hour, Robinhood's Stephanie Gill joins us on Fed Day.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to this is a wonderful event. This is a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like
주문 청산이
There
완료되었습니다.
has been one instance where I did something that
자, 이어서
was
12차
just for
진입
short-term
대기하도록
stock,
하겠습니다.
and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to
beat the quarter, we were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
자, 진입 후 1계약 기준 약 10만원 수익권 진입하였습니다. 1계약 기준 10만원에서 수익 청산, 자율 수익 청산 사인드립니다. 자, 목표 수익권까지 조금 더 포지션 유지하며 대응 이어나가도록 하겠습니다.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. What's expected to be another fiery hearing is getting underway shortly on Capitol Hill. Former CDC Director Susan Minares will testify before the Senate Health Committee. Correspondent Nicole Killian is standing by.
Minares will tell lawmakers regarding trustworthiness. I cannot define that word for Secretary Kennedy. I told the secretary that if he believed he could not trust me, he could fire me. An HHS spokesperson says Minares' testimony is inaccurate, adding that she acted maliciously to undermine the president's agenda and was fired as a result.
There was pomp and pageantry as the King and Queen welcomed President Trump and the First Lady to Windsor Castle. A military band played the British and U.S. national anthems as the couples crossed the estate in horse-drawn carriages. Correspondent Ed O'Keefe says they exchanged symbolic treasures.
We know that the Union Jack that was flown over Buckingham Palace on the day of the president's inauguration was gifted to the president, while the Trumps gave the king a replica of Dwight D. Eisenhower's military sword to reaffirm the historic partnership.
On his way to England, a Spirit Airlines passenger plane came within 8 miles of the president's Air Force One. That was too close for air traffic controllers' comfort.
Pay attention, Spirit 1300, turn 20 degrees right. Spirit 1300, turn 20 degrees right now.
Transportation correspondent Chris Van Cleve.
Now, at one point, controllers were told to get off their iPad. Spirit tells CBS News the pilots followed instructions and landed uneventfully, adding safety is always our top priority.
The FCC does not consider that distance between the planes unsafe. Prosecutors in Washington, D.C. are dropping an unusually high number of cases from President Trump's crackdown on crime. CBS's Michael Wallace.
Of the 52 people who have been arrested for surge-related federal crimes in the district, at least 11 have had their cases dropped. Yesterday, a judge who dismissed 2 felony assault cases warned prosecutors to stop filing charges before cases are properly investigated.
They've just announced finalists for the National Toy Hall of Fame, and a classic tabletop game makes the top 12.
You sank my battleship, and history is made.
Catan, Connect 4, Spirograph, and Trivial Pursuit are in the running, too. Among cuddly contenders,
it's new Tickle Me Elmo.
So is another 1990s technological icon.
What's that? It's my Furby.
The Star Wars lightsaber, scooter, slime, cornhole, and plain old snow are all finalists. This is CBS News. Scientists say solar activity is heating up after a long lull.
NASA says the sun has become more and more active over the last 16 years. Scientists say the surprising increase could affect space weather and technology on Earth. For decades prior to 2008, solar activity was low. Now, with increased activity, there could be more solar storms and flares, and changes could impact power grids and GPS. During the 1980s and 90s, activity on the sun had reached its weakest point on record. Last year, NASA recorded the strongest geomagnetic storm in more than 20 years. Steve Kathan, CBS News.
Travis Kelce says he and Taylor Swift won't be dancing to a DJ at their wedding. He explained to Jimmy Fallon on the Kelce Brothers' New Heights podcast they're live music kind of people. Still no word on when the couple will get married. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning. You're listening to the Bloomberg Intelligence program. It is Alexis Christophers, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Live Podcast. And that's where you'll find us coming up. We're going to get the latest coming out of the UK. UK politics reporter James Wilcox is going to join us. President Trump's UK state visit. We had a lot of that for you earlier here this morning. A lot of audio, a lot of video. And we'll get the latest reporting from there. Drew Redding's going to join us, Bloomberg Intelligence home building analyst, on housing starts here today. We got interest rates pulling back. Are we going to see a little bit of a pickup in the real estate market? Mandeep Singh is going to join us here. He's global head of technology research for Bloomberg Intelligence. We're going to ask him about China telling tech companies to stop buying NVIDIA chips. I thought we were past all that. I'm going to ask him also about this TikTok sale. Who's going to buy it? What are they going to pay for it? So we got a lot coming up there. Right now, let's kick it all off with Lisa Mateo, and we will get a Bloomberg. Lisa.
You got it. And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. You can learn more at ibkr.com/around-the-clock. Well, right now, stocks are mixed, and this is ahead of a big decision by the Fed on interest rates, with a quarter-point cut at this meeting and 3 more by April already priced in. Now, ahead of that, we had to look into the housing market. Want to get right to that. Housing starts fell last month to the lowest since May. New residential construction, that decreased about 8.5% last month, with starts on one-family homes falling 7%. Let's get to the markets. The Nasdaq now down 0.3%, 74 points. The S&P 500 little change, down about 4 points. The Dow up 0.5% at 251 points. In the yield space, we have the 2-year 3.52%. That's up 1 basis point. Heading over to the 10-year 4.02%, and that is little change. The Bloomberg dollar spot index is little changed as well. Shares of NVIDIA, lower, down 2%. The Financial Times reporting China told its tech firm to stop buying the company's AI chips, terminate all existing orders. We will hear more about that as the program continues. And Apple's smartphone sales, they fell 6% from the year earlier period in China in the weeks that were leading up to the iPhone 17 launch. And finally, doctors saying Eli Lilly's obesity pill, well, that prompted enough weight loss in a large clinical trial to kind of be meaningful for patients. Christina Aquino is going to have more on that coming up in your Stock Movers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Alexis and Paul.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Alexis Christophers, and we're joined by Bloomberg's Christina Aquino. Christine, what are you looking at today?
Well, Paul, let's talk about NVIDIA, because that is the one stock that is on everybody's minds this morning. So ticker NVDA, those shares are down more than 2%, 2.5% at the moment, actually. And that is because we did get that reporting from the Financial Times saying that China's internet regulator has told the country's biggest technology companies to stop buying NVIDIA chips. This is specifically the RTX Pro 6000D chips. Now, this chip isn't regarded as among NVIDIA's marquee products. It's more of a high-end card. They designed it specifically for the restricted Chinese market. But now we have this order from the Chinese authorities telling their biggest companies to not buy the chip. We did get a report from the BBC quoting NVIDIA CEO Jensen Huang saying that he's, quote, disappointed by the ruling and that he would be, quote, patient in responding to it.
All right, also, Christine, General Mills, I guess, benefiting from the fact that more folks are eating at home. They're eating out less. But I'm looking at the stock. It's not doing much of anything right now.
Yeah, absolutely, Alexis. It's down. So ticker GIS, General Mills, shares down just 0.8% at the moment. So clearly, that first quarter adjusted EPS beat not doing much to lift that stock at the moment. But they did get that beat. It's 86 cents, topping analyst estimates. And the company was saying that is indeed the rise of home cooking among value-conscious consumers that are struggling with inflation that has helped some of their segments, including rice and beans. But at the same time, there is kind of a warning in there. They did say that sales in North America retail segment dropped 13% for the quarter to $2.6 billion. So that's probably why.
People are substituting in store brands for name brands.
I know I am.
I know I am.
Yeah,
I never
I
even
am
thought
too.
of that until the last 4 or 5 years.
Yeah, so that's probably why we're not getting much of a lift, because it's a bit of a double-edged sword kind of report from General Mills today.
Well, you spend generations building up brand value, and then poof, gone.
That's what a little inflation will do.
That's what a little inflation will do. LLY, Eli Lilly.
LLY, Eli Lilly. So those shares not up by much, just about 0.4% at the moment. But they did get good news from a trial of their GLP-1 drug. It's an oral drug, experimental diabetes pill, which showed that people on this for the trial lost more weight and had better blood sugar control than those in an older approved rival from Novo Nordisk. So this is a head-to-head drug trial. Patients that were given Eli Lilly's oral drug lost 8.2% of their body weight in 52 weeks versus 5.3% for the Novo drug. So doctors who were kind of, they presented the results to doctors, and the doctors saying that the results look positive. They say that the tablet will make it possible to treat more patients because it's easier to produce and to take, given that it is an oral drug, and that could make it eventually cheaper once they start producing it.
I think that's going to be a game changer for people. If you can just pop a pill, they don't have to worry about the injections, all that kind of stuff. That could be huge. Christine, thanks so much for joining us. Christina Aquino, Managing Editor for Markets Live. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I tell you what, we had in Bloomberg Surveillance earlier today, Alexis, amazing coverage of Trump's arrival to Windsor Castle and the pomp and circumstance and the praise. Tom Keene was all over it. He loves that stuff.
All pomp and circumstance and protests too, might I add.
Yeah. So, and Tom knows his knowledge of the royal family and royal history was phenomenal. So we had some great stuff there. That was a lot of fun. Very interesting to watch. And it looks like the Brits pulling out all the stops to impress President Trump. Let's get to the business at hand there. James Woolcock, UK politics reporter. James, what I learned, at least this morning, is this is the first time that there's been a second state visit of a U.S. president to the UK. Why do you think the UK chose to invite President Trump and the entourage for a second visit?
Well, I mean, one big reason, Paul, is he is the US president. And as kind of what the UK likes to call this is a special relationship. We see this over here in this side of the pond in London as a chance to influence, charm, frankly, flatter the pants off of any world leader who we think over here we can gain economic or diplomatic coups from. So this is in some ways, there are two prongs to this visit. Today is the style. You're seeing the carriages, processions, royal guards, a state banquet this evening, and then tomorrow is the substance. We have already heard of $42 billion worth of investment coming into the UK from the likes of OpenAI, Microsoft, Alphabet. All their CEOs are here. Reverse, we're hearing from GlaxoSmithKline that they're putting in $30 billion into the US. So this is kind of a big chance for the economic tie-ups. We expect stuff on nuclear plants to be coming tomorrow. We're hearing there might be talks around Ukraine happening privately. All the business leaders, that will all be coming tomorrow in the substance part of talks. this is kind of Britain's moment to see how far its status as a soft power superpower still holds firm, and it plans on using all of its royal family to kind of achieve that.
Now, also today, there were the exchange of gifts, right, between President Trump and King Charles III, some more pomp and circumstance. Not everybody's happy, though, let's be honest, about this second state visit. What are the people saying? What were the protests like?
Well, so they're mostly confined. I'll be honest, looking at the pictures coming out of Windsor Castle, Windsor is far outside of London, and that was a choice, because for here, the UK's Foreign Office, who planned this stuff out meticulously along with the royal family, don't want there to be much uproar. So there are protests happening in central London, but the US president is far removed from that. He might see press coverage of it, but there's very little he will see. But I will say here in the UK, the US president is not seen very popularly. Polls put him very unfavorably over here with Brits. But that kind of is what he's being shielded from. I think in terms of the gifts, from the US president, he gave the royal family a replica of President Eisenhower's sword, which speaks of sort of world wars and defense, which is, again, a key theme here. The royal family gave the UK Union Jack, our sort of national flag, the day it was flown on the 20th of January 2025, the day of the president's second term inauguration. I think you can read into the messages there of what both sides see as important to each other in this shared conversation. It's a lost art in somewhat sort of diplomacy, the sort of old school messaging, the private sort of talks that will happen behind closed doors. And in some ways, that's something that I would argue the US president seems to really enjoy. I mean, look, on the plane over here, he told the reporters on the plane I heard earlier today, enjoy yourselves, folks. It's going to be a beautiful event. And that's a quote. And so pomp is a word I wheel out only for these kinds of occasions, and we, the Brits, are wheeling it out, I'm afraid to say.
James, for Keir Starmer, the Prime Minister, what does this visit mean for him? We know that his approval ratings are quite low, and he's had certainly some headwinds.
He's on the ropes, Paul. I mean, look, I have covered UK politics here for 6 years. We have seen Brexit, we've seen COVID, I've seen 3 Prime Ministers in 1 year. It's still news for me. I have never seen a polling collapse in the way Prime Minister Keir Starmer has. 14 months ago, he won a landslide election, the first his Labour Party has won of this size in, 15 years. And within a year, he's polling at something like 20 percentage points, which for the UK is really not good. So in the past 2 weeks, he has sacked his US ambassador, Peter Mountain, on the eve of this state visit, which is a big deal. And he's done it because Bloomberg News unveiled this cache of emails showing his ties, Mandelson's ties, to Jeffrey Epstein, the late disgraced financier. That is going to be a really awkward issue for this state visit itself. He's also lost his deputy Labour leader, Angela Rayner, who was a powerhouse in UK politics. That's both happened in the past 2 weeks. This visit for Starmer is a chance to try and turn that around. He's got money here. He's got one of the most powerful men in the world, US President Donald Trump here. He's going to try and show that he is the leader still in charge and try and use this good news story as a way to turn the page. Frankly, we talked a bit earlier about the public and their perception of Donald Trump. They're quite savvy, the British public. They are looking to see what he can get from the US president. Weirdly, they're very transactional. Like the US president self-proclaims he is too. They want to see deals, they want to see money, they want to see geopolitics. And so tomorrow's press conference in the afternoon is going to be a big moment. And I can warn you, UK journalist press, I will put good money, will be asking about Epstein, will be asking about Ukraine, and may even ask about Gaza too.
Yeah, we think we have some appreciation of the British press and their level of aggressiveness, so that should be quite interesting. James Wilcock, thank you so much. We appreciate that. James Wilcock, he's a UK political reporter for Bloomberg News. He's based in our London bureau. He's the latest President Trump's second state visit in the UK. We're going to have more coming up. This is Bloomberg. Good morning.
자, 여기서 수익 청산 후에 재진입 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 수익 청산 사인 드립니다. 자, 매도 진입권 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
수익 청산 사인 드렸고요. 13차 진입 대기하도록 하겠습니다. 그래서 바로 진입 사인 드리도록 하겠습니다. 자, 매수 진입 사인 드리도록 하겠습니다.
체결되었습니다. 확인 바랍니다.
27.50. 자, 매수 진입 사인 드립니다.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. And yes, this news coming across the terminal. The Caesars Times Square Casino bid ended after a New York City community vote. I mean, this was a huge debate behind it. Would it bring a lot of jobs to Midtown? Would it displace existing workers? But now that has come to an end. To the markets we go right now. We have a mixed look. This is ahead of today's Federal Reserve interest rate decision. Wall Street traders expecting officials to cut rates for the first time this year. Don't forget our special coverage begins at 1:30 p.m., just after 1:30 p.m. Wall Street time. We go to the NASDAQ. It's down 0.3%, 77 points. The Dow is up 0.4%, 204 points. And the S&P 500, it's down about 0.1% or 6 points. The 2-year yield, 3.52%. That's up 1 basis point. The yield on the 10-year is 4.03%, and that is little changed. We have gold falling. COMEX gold down 0.2% at $3,717 an ounce. Over to oil, WTI crude is at $64 a barrel. The Bloomberg Dollar Spot Index, little change. General Mills, they posted a solid quarter but kept their outlook in place. They say consumers, well, they're still being cautious. Their shares down nearly 1.5%. And Lyft has added Waymo as a robo-taxi partner with plans to launch service in Nashville, and that helps it better compete with Uber. We look at Lyft shares, they're now up about 14%. Uber shares down about 4%. And ticket platform StubHub goes public today. It priced its IPO the midpoint of the range to raise $800 million. Ticker will be STUB. Stay tuned because just after 11 a.m. Wall Street time, CEO Eric Baker will be joining us live. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Alexis and Paul.
All right, Lisa, thanks so much. Yeah, keeping an eye on StubHub. Not yet trading here, looking at it on the Bloomberg terminal, waiting for that to start to hit. All right, so we want to get a pulse of the housing market now, and housing starts fell to their lowest level since May. Builders not really incentivized to build because we've got this bloated inventory. Let's break it down now with Drew Redding. He's Bloomberg Intelligence home building analyst coming to us from Princeton, New Jersey. So Drew, I'm looking at this report. I see building starts lower for both multifamily and single family homes. Were there any surprises in this report for you?
To be honest, not really. I mean, as you mentioned, the read on single family construction wasn't great, down 7% sequentially, 12% from last year. But to us, that's not surprising. If you look at the home builder confidence numbers that just came out, you could see that confidence is down because builders are taking a more cautious approach. Typically, there's a pretty strong historical relationship with single family housing starts and builder confidence, which suggests further downside. At the same time, housing starts continue to outpace single family building permits. And then I think most importantly is that housing starts are still running above the level of the pace that builders are selling homes out. And that's what you alluded to. We have the highest level of new home inventory since 2007. So there's really no incentive for builders to be aggressive in putting new inventory into the ground. The approach they're going to take instead is to continue to use incentives and kind of work through that completed inventory. And once we get to more comfortable levels, I think then only then will you start to see a rebound in construction activity.
Drew, mortgage rates, 6.39% on a 30-year fixed. That's down from north of 7%, at the beginning of the year. Is that enough to entice some people to come back into this market, do you think?
Yeah, we actually looked before we hopped on. We're at 6.13 on the 30-year. Nice. That's down from over 7 just from May. So mortgage payments are down about $250 or 9%. So we certainly think that this is going to help on the margin. As we've said in the past, what I think we need to see is stability in rates. We've had a lot of volatility, spikes up and down. But I think as we look ahead to the spring selling season, if we can maintain rates in the low 6% range, perhaps even get a 5 handle, I think that will certainly support the market. That being said, does a rate of 6% return the market to more normalized levels? You have to remember, when you look at the resale market, we're still 20 to 25% below normalized levels of volumes. Because it's not just rates that you have to factor in. When you're talking about the cost of home ownership, you're looking at home prices that are up still 50% from 2019. You have rising property taxes. You have increased insurance costs. So rates will certainly help on the margin, but I don't know at 6% if it's enough to get us back to that normalized level.
And of course, if and when the Fed cuts rates in just a few hours from now, there's no guarantee it's going to impact mortgage rates to the downside. If you remember, in September, the 10-year Treasury yield, I think it rose and ended the year almost a full percentage point higher, despite the fact that the Fed had cut rates. But I want to ask you quick, Drew, before we let you go. Trump is thinking about declaring a national housing emergency. He likes to declare, national emergencies when he can because of what we're seeing in the housing market. If he were to do that, what would that look like?
Sure. So I certainly think it's a valid approach, just because I think we need to place attention on the affordability challenges out there in the market. Now, that being said, in terms of what the federal government can do, we're not certain that they could really move the needle. And that's just because a lot of the regulatory stuff that they talk about, zoning, permitting, a lot of that is done at the local level. We have heard in different markets around the country where local municipalities are making process to kind of help the pace of supply increase. But in terms of just federal reach, it's going to be difficult to see what they can do.
Drew, thanks so much for joining us. Always appreciate checking in with you. Drew Redding, home builder analyst for Bloomberg Intelligence down there in Princeton, New Jersey. Well, it is Fed Day, of course. Here's our timing. We have Bloomberg Surveillance with their special Fed Day programming, Tom Keene and the surveillance team. That begins at 1:30 p.m. Wall Street time. 2 o'clock, we will get a statement from the Fed, and then at 2:30 Wall Street time, Fed Chairman Jay Powell will hold his press conference. Michael McKee from Bloomberg News, as always, is down in Washington, D.C., and you'll have full reporting on that. So that's how we're going to roll there. Let's check in with Dennis Lockhart. He's a former Atlanta Fed president. I'm going to get his thoughts on kind of our Federal Reserve today and maybe what we should be expecting. Dennis, thanks so much for joining us here. What's the balancing act that you think the Fed will try to perform today?
Well, they're looking at a potential stagflationary situation in the coming months, meaning inflation remaining elevated and a weakening jobs market or employment situation. And that means the two sides of the dual mandate are to some extent in conflict, and they're going to have to balance those priorities in some way. I'm certainly of the school that they'll probably cut by 25 basis points at this meeting, but I'm not sure that they will signal what's going to happen in the future much, because they still have the inflation issue to deal with. That story is not over.
Dennis, if you were voting in today's meeting, what would you say, not to just this meeting, but looking out to the rest of the year, if, as you say, stagflation is either here already or on the horizon?
Well, I would be cautious, I think, and I suspect that's what you'll hear from from Chairman Powell in his press conference today. Cautious
자,
about
원유재고
further moves.
지표
It's not to rule
발표되었고요.
out further moves later in the year. And certainly the dots will give some impression of what individual participants on the committee are thinking. But I would be cautious about anything that looks like a strong commitment, because you just don't know what the inflation picture is going to be. Particularly, the questions around tariffs are still looming, in my opinion. They're out there, and there could be a tariff effect in the coming months that could even push the inflation rate higher. So I think you have to be cautious about this and sort of thread the needle, which is what they're doing with 25 basis points.
Dennis, a lot of political pressure being exerted on this Fed, perhaps more than what we've seen in recent memory. Boy, we didn't even know who was going to be seated for this meeting as recently as 24, 48 hours ago. Give us a sense, given your experience in the Federal Reserve Bank of Atlanta, how does that play on the individuals and their teams?
The sitting governors have been around for a while, as well as the presidents are going to do their very best to ignore the political pressure. You know, you don't know what's going on in the heads of individuals, but certainly as the meeting is conducted, it is an apolitical context. It's really not something in which the political pressure will either be mentioned or given much in the way of deference. The meeting will take place, as they always have, focused on the recent data and the reading of the economy, and a mix of opinions as to what the economy's trajectory is likely to be, and therefore what the policy should be.
Dennis, I guess another big question at today's meeting is the dissenters. Who dissents, right? Because we had Governors Waller and Bowman dissent last meeting. The first time in decades something like that's happened. Now we have this new Fed board member, Stephen Myron. Might he dissent given the size of the cut, right? If we get a quarter point, maybe he dissents and says, no, I think we should do a half cut.
Yeah, I think he may very well bring that message to the committee, which of course comes from the White House and from President Trump, and therefore dissent for not doing enough, even though the direction would be pleasing to the White House. So I can see dissents on that side. I can see dissents on the other side, those who advocate holding and continuing to be vigilant as regards inflation. So this is an interesting meeting where you could end up with dissents that reflect quite different opinions.
Dennis, what do you expect the cadence to be if, in fact, the Fed does begin cutting today by 25 basis points? How do you think the cadence will be over the forthcoming meetings?
I think the cadence would have to be consideration of 25 basis point cuts, not after this meeting, some kind of large cut, unless the economic circumstances really change dramatically. I think the cadence could very well be start and stop, meaning maybe skip the October meeting and then think in terms of December. Again, the inflation and inflation expectations have to remain a priority to some extent, and a degree of restrictiveness leans against that trend. So it wouldn't surprise me if you saw a skip and then another cut and a very sort of halting approach to reducing the overall level of the policy rate.
Dennis, thanks so much for your time today. We really appreciate it. Dennis Lockhart, he's the former Atlanta Fed president, joining us down there from Atlanta, Georgia, via that Zoom thing. I'm just guessing his office is on some street called Peachtree Street, because every street down in Atlanta, literally every single one is Peachtree Street, nice. Road, Boulevard, Northwest, Southeast. I don't know. I get confused all the time. Looking at the bond market here ahead of the Fed, let's look at the 2-year, up about 1 basis point, 3.51% on your 2-year, going out to 10 years. Pretty steady here. The 10-year Treasury is 4.02%. We did touch 4% earlier this trading session, so that gets your attention. And longer out on the curve, we got the 30-year down about 2 basis points, 4.62%. So there you go on the Treasury market. Tom from the Upper East Side, writes in and asks for a Bitcoin quote. It's off about 1% today, $115,000 on Bitcoin. S&P -7, Dow up 225, NASDAQ down 95. This is Bloomberg. Good morning.
다소 낮지만 지속적으로 조금씩 상승세 나와주고 있습니다. 추세는 매도이지만 충분히 추세 전환 가능하다고 판단되어서 좀 더 길게 보고 대응 이어나가도록 하겠습니다. 자, 매수주니건 대응 이어나가도록 하겠습니다. 자, 예상치 이탈하였다 판단되더라도 좀 길게 보고 대응 가져가도록 하겠습니다. 충분히 상승을 가져다줄 시장의 호재가 있기 때문에 현재 매수진이건 대응 길게 가져가 보도록 하겠습니다. 자, 일단 캐나다도 동일하게 0.5p 금리를 인하는 게 확인이
Markets,
되고
headlines,
있습니다.
and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The countdown to the Fed continues, with traders expecting a quarter-point rate cut later this afternoon. They're also pretty sure Fed Chair Jay Powell will signal further reduction to kind of support that saggy labor market. Ahead of it, though, we have a mixed look on Wall Street, with the Dow leading the gains up 0.5%, 268 points, but the S&P 500 little change, down about 4 points. The Nasdaq down 0.4%, or 98 points. The two-year yield's 3.52%. That's up 1 basis point. We have the yield on the 10-year 4.03%, and that is little change. And the Bloomberg Dollar Spot Index, not much movement there. Companies making news. We have Bank of America CEO Brian Moynihan telling Bloomberg it's raising its U.S. minimum hourly wage to $25. Then we go to Charles Schwab. They're expanding their branch network, the firm adding 16 new branches. They say they plan to hire more than 400 branch-related roles. And that bid for the casino in Manhattan Times Square, well, it has come to an end. Members of that community advisory committee, they voted down the project, which was backed by SL Green and also, yes, Caesars Entertainment. And Ben & Jerry's co-founder, Jerry Greenfeld, said he's walking away from the company. He's saying that Unilever, the parent, is silencing the brand's social mission. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Alexis and Paul.
Thank you, Lisa. I'm checking NVIDIA right now on the screen, coming under some pressure, down more than 2.5%. We've got NVIDIA's CEO responding to news that China reportedly telling its tech companies, stop buying NVIDIA's AI chips. And you know what? Even cancel your existing orders. Here to talk about it is Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research, joining us here in our New York studio. Mandeep, thanks for being here. Just how big a blow is this to NVIDIA at this moment in time, given how much of its business is tied to China?
Well, if you go back to the guide that NVIDIA gave during their second quarter earnings, it sort of anticipated this, that a lot of the China revenue may not materialize, even though they said it could be 2 to 5 billion. But the guide was almost de-risked that they didn't include any of that. So from that perspective, it's not that big of a deal, and I think the stock reaction validates that. With that being said, they also said that the China GPU market is almost $50 billion addressable market, and it's growing at almost 50% plus growth rate. So when you factor in, you know, the multi-year investment cycle we are in, and not being able to sell into China will be a big kind of factor in terms of...
If it continues.
If it continues. Right. And look, I think when I look at the biggest large language model companies, it's either in the US or in China. And those are the companies that need the NVIDIA chips for training their models. And so from that perspective, once they move away from NVIDIA, they're not coming back.
Isn't this just a political football? And at some point, Presidents Trump and Xi are going to get together somewhere, hash all this out, including chips and TikTok and all that stuff?
It sounds like NVIDIA has been caught in that crosshairs when it comes to the US-China deal. And clearly, there is a lot of sensitivity around the use of their chips when it comes to, you know, the data and how important it is for countries in terms of just how they're thinking through their AI strategy. So with that being said, look, I don't think there is an easy resolution here when it comes to the use of NVIDIA long-term for a country like China, where clearly there are tensions. And I don't think even if there is a deal, the sensitivity around the data is kind of going back to where it was, you know, a few years back. That's why we have the TikTok deal. And, you know, what we are going through in terms of ByteDance having to give up ownership is because clearly the U.S. doesn't want, you know, the data of the users to be stored in China or be accessible in some way. So from that perspective, I think the data sensitivity is big, and chips are a big part of that.
I'm glad you brought up TikTok, because since we have you here, I wanted to ask you about that. More details are now emerging. It looks like there may be a consortium, right, including Oracle, Silver Lake, Andreessen Horowitz, that may take over the U.S. operations. But might there be a bidding war here, and any talk as to how much they're valuing this company?
So when we did a valuation a few months back, because this has been in the news, for quite a while, we thought a good benchmark would be companies like XAI, Snapchat, Pinterest, Reddit. And so from that perspective, TikTok US assets would be valued at somewhere between 40 to 50 billion. In fact, XAI's last valuation before, XAI and X merged, the Twitter portion of it was valued at around 33 billion. So from that perspective, it would be somewhere in that vicinity. But with that being said, given the geopolitical aspects involved in this deal, Oracle seems to be the one entity that will likely be involved in buying the assets because it's running the TikTok backend infrastructure right now. So I can't imagine this deal happening without Oracle. The private equity players are Silver Lake and clearly Andreessen Horowitz. And look, I mean, this would be among their biggest deals. Even if you think about that 40 to 50 billion sort of transaction value, it will be quite huge. So I do think, it's a valuable asset, but because of the geopolitical nature of this, there may not be, an entity among the Mag 7 players that would try and bid for
Talk
TikTok.
about a political football, right, Paul?
Yeah, exactly. So, I mean, but part of a deal, if this thing were to be spun out as a separate company, you'd have to ask all these little TikTokers out there to download a new app and all that kind of stuff. Is that perceived to be a potential problem, or is that not?
Actually, if you had asked me that question 1 year back, I would have said yes. But now with generative AI, a lot of the systems are being rewritten. So when I think about TikTok's algorithm advantage, I feel it's somewhat offset by the fact that we have got all these new generative AI-based recommendation tools and new things that are out there that companies that are looking to develop new AI apps are doing that natively using LLMs. So if somebody was to rewrite the algorithm, they could do that now with all the LLM tools that are available. That wasn't the case 1 or 2 years back when TikTok really had an advantage with their algorithm. I think that's been somewhat offset lately.
You know where I'm a little confused? I don't know if you have any clarity on this, but say you're an influencer who gets a lot of income from TikTok, right? A lot of people do. If you have to download the new app, do all of your followers come along too? Is it just basically your account, but on a new app in essence?
That's true. And you get all the social graphs. It's just the recommendation algorithm changes. And guess what? Google search changes their algorithm so many times. Even in a year, they change their algorithm a lot. So what's the big deal if the algorithm changes? Look, it will impact the creators and how they're used to monetizing once a recommendation algorithm changes, but Meta has changed it. Google search changes it. So I don't think it will be that big of a deal. And that's why I think they are going in that direction where either they license the algorithm from ByteDance or they rewrite their own algorithm. And I think both should be acceptable solutions.
All right, here's the one I have to do every time I see it. My AI is going to kill Google. I'm not clicking on the links, dude. If I put in a search query into Google, Google AI serves me up exactly what I want. I don't have to click and how's that changing their model?
So you're right. The 10 blue links has definitely changed. So the relevance of maybe in addition to AI overviews, the top 2 links has increased. And so because generative AI drives more engagement, that you are going to ask a follow-up question in addition to your first query. So they instead of showing you 10 blue links at once, they'll show you 2 blue links in the first one, 2 blue links in the follow-up query. And even though you are interacting with the Google page a lot more than going to the publisher website, they will show you the top 2 links and charge more for those links to the advertiser. Clearly the model is changing and the algorithm is changing, but they seem to be adopting well.
And clearly I have no idea what I'm talking about. Stocks up 31% year to date, so the market they're not as concerned as I am. They're still clicking. All right, Mandeep, thanks so much for joining us. We can ask Mandeep anything on the tech stack, and he has got some informed research. We appreciate that, Mandeep Singh. He's one of our senior tech analysts. Actually, he's the dude who's responsible for managing all those Yahoos out there all around the world. We've got tech analysts, some of the best on the street out there all over the world, keeping track of this global tech market because it's so important for the economy and for the market. Coming up, Diana Rossetto Pena, Bloomberg Intelligence Consumer Staples Analyst, talked to us about General Mills earnings. I thought they were okay. Stop trading off. This
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alexis Christophers sitting in for Scarlett Fu. I'm Paul Sweeney live here on our Bloomberg Interactive Broker Studio. We're still looking at some earnings, even though it is a Fed day. General Mills is one of them. I pulled up the Bloomberg Intelligence research, which is awesome. Now I'm gone down this rabbit hole where you can get the earnings model for all these companies that the Bloomberg Intelligence analysts have put together right there on the terminal. I'm going down this rabbit hole. I'm changing scenarios and changing margins and all this kind of stuff to see how the earnings are. So let's get back to it, though. Diana Rossetto Pena, she covers a lot of these consumer stocks for Bloomberg Intelligence. Diana, talk to us about General Mills here. How were their earnings recently?
They were mainly in line with expectations. It wasn't that much of a surprise, but still, the stock is a little bit on the soft side. People expected better news than what they disclosed.
Yeah, I mean, North America sales came under pressure. What was the drag there?
It was mainly on volume. We expected volume declines, but not to the magnitude that they did. It was down 4% on the organic part. So obviously consumers are still trading down. They are mentioning that, about eight brands of theirs, it was positive, but it wasn't enough for the whole segment to pull through.
What are they doing? Or what are they saying about tariffs and the impact on their costs versus maybe what they're trying to pass along to customers?
So they are offsetting some of the costs with cost savings. It's usually going to be, they expect it to be about 1 to 2% of COGS this year, which is a little bit lower than, for example, Campbell's expected. They expect around 4%. So, they do not want to raise prices. They want to be competitive because obviously volume growth is not happening. So,
yeah, I mean, they're getting competition from more folks. I mean, on the one hand, they're benefiting from the fact that more people are eating at home, right? But yet, when we're going to the supermarket, more people are choosing those private label brands.
Correct.
So, did they talk about that at all on the earnings call? And what's their sort of plan of attack there?
Yeah, so they're increasing marketing. They're hoping for innovation. They mentioned that 25% of sales growth will come in North America retail, will probably come from innovation this year. And this is what everybody's trying to get to. The problem is, and that was mentioned on the call as well, was that even the price increases are not as significant as it used to be, they're still high. So on a basket size, you're still paying a lot more than you used to 2 years ago.
Talk to us about store brands versus kind of the brands we all grew up with here. Talk to us how that's changed over time. Are store brands becoming a bigger part of the average cart?
Yes. Well, retailers are investing more on their private label. It allows them to bring people into the store. Some of the brands have a cult following, I would say. Hello, Costco.
Mm-hmm.
So
exactly.
So people are going to the store to buy that particular brand. They're more profitable than national brands. So obviously there's still incentive for retailers to deploy some of their own brands.
Yeah, I think some people think it's chic to buy private label, right?
Well, I don't know.
Wear it like a badge of honor.
Well, it's certainly. I was shocked at the price differential.
Yeah, because they have that pricing power, right? These stores is to make their products a lot more attractive. Really quick, Blue Buffalo, it's their pet food. I was surprised to see that was not a leader for them.
Yeah, so Wilderness is not doing as well as they are hoping. Dog food in general has been a headwind, not only for them, but also for the overall industry. Cat food seems to be the leading indicator here, which is surprising. But
so cat food is outpacing dog food?
Yes, correct. Wow. We have seen this for the past year.
What in God's name is going on?
John Tucker had to chime in on that.
Yeah,
it's talk about dog food and cat food.
Well, there seems to be a growth in the cat population more than the dog population.
Wow, interesting. What have we had a good retail sales number yesterday, better than expected. Are your companies, the consumer products companies, what are they saying about the consumer?
Yeah, like I said, they're looking for value. They're still seeing their budget as a whole rather than the price increase or decrease. They're looking for price cuts wherever they can, and they're willing to trade down for it.
All right, so for General Mills, one of the things I liked about your company's nice fat dividend yields, 3-4%. General Mills is like 1 and change. What's their policy?
Yeah, so they're investing in the business. They're trying to be a little bit more assertive on the innovation side. So that is affecting shareholder returns.
I mean, let's be honest. This is GDP at best business, probably less than GDP growth. Yeah. You got to give us a 3-4-5% dividend yield. I don't know. That's just my thoughts there. Deanna, thank you so much. We appreciate it. Deanna Rosero Peña, consumer staples analyst, Bloomberg Intelligence. One of the good ones out there covering these consumers.
You like
companies.
saying her name. I know
I
you
love
do.
saying her name. Yeah, exactly. Since day one, I'm all over. Get the correct pronunciation. Some other people say, Deanna Rosero Peña. Come on.
Put a little something
in
into it.
Exactly, exactly.
I'm with you.
All right, looking at these markets here, as John Tucker darkens the door here, we kind of have mixed here. So we'll stay on top of it here for you. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence, starting in moments. Again, looking at the bond market here, let's call that out. The 2-year Treasury is up a couple of basis points here ahead of the Fed at 2 p.m. 3.52 on the short end of the curve. 10 years pretty much flat here at 4.03%. We had another IPO coming out today, StubHub. Let's see if that thing's open for trade. We'll check out Belly Love Schultz. He supposedly covers the equity markets and IPOs. So we'll see if he's got anything for us. He's coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Alexis Christophers, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to that YouTube thing. That'd be the intraweb for John Tucker. And just ask for Bloomberg Live Radio, and that's where you find us. All right, coming up in this hour, a lot of stuff going on here. Highlighted right at the top of this hour, a couple of minutes, we're going to have the StubHub CEO, Eric Baker, who's speaking with Bloomberg tech anchors Ed Ludlow and Caroline Hyde on the IPO of that company. We're also going to bring you some comments from Bank of America Chairman and CEO Brian Moynihan. He was on Bloomberg Surveillance this morning. We'll bring some of those comments as well. It's Fed Day, which means I only have one request. Danielle DiMartino Booth, CEO and Chief Strategist for QI Research. She'll be with us to kind of preview all that stuff. And Kevin Tynan, he's the Director of Research at the Presidio Group. We'll get the latest news on what's happening in the auto business. He is our go-to guy on the auto business. So a lot coming up in this hour. Let's kick it off with Mr. John Tucker and a Bloomberg Business Flash.
And welcome back. Major stock averages are mixed ahead of the Fed decision this afternoon. You have 8 of the 11 major industry categories in the S&P 500. They are higher right now. Consumer staples, that's in the lead. Information technology, worst performing industry group. You have shares of Workday, ticker symbol WDAY, best performing individual stock in the S&P 500. It was up over 8%. Elliott Investment Management, the activist, disclosing a stake in the human relations software company. Uber, worst performer in the index right now. It was down close to 5%. Meantime, Jeffrey Cleveland, the chief economist at Payden and Regal, says the labor market, the big concern for the Fed at this point.
The balance of risks have shifted since the last FOMC meeting towards labor market weakness, and solid is not the right word to describe the labor market at this stage.
NVIDIA falling just about 2%. You had a report from the FT, but China's internet regulator had banned the country's biggest tech companies from buying its AI chips. And here's one for you. North American airports seeing a boost in traveler satisfaction. This is according to J.D. Power. You want to guess who's number one? I say that with a question mark in my voice. Minneapolis-St. Paul International Airport.
Really?
Ranking first for the second consecutive year. This is in the mega airport category. And they say improved food, retail offerings, and smoother airport navigation are important factors. And I know when I think food, I go to the airport. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. How was your trip?
Trip to Italy was fantastic. People were great. So much history, just everywhere you turn. But I tell you, it was crowded.
No kidding. Even
oh my goodness!
Wow.
You'd think high season would be over, but
no, their high season. We were told their summer high season is now shifted. It used to be July, August. Now it's more September, October. They noticed it starting in the last several years. I mean, if you got the kids, you go in the summer. But people who don't have kids, they just come to September and October because it's just too hot for them.
You ate really well.
Great.
Okay.
Great. Might have had a.
Well, we got to get back to business, I think, right? I could talk Italy all day.
Yes, exactly.
Bailey Lipschultz is in our Bloomberg studios here in New York, senior equities reporter, and you've got your eye on some market drivers today. Workday, I guess, is on your radar?
Yeah, JT mentioned it, starting with Workday, ticker WDAY. Right now, shares are up more than 8% this coming on a bit of news, kind of a burst of news. So not only did they have a strong analyst day that drew at least 2 upgrades from sell-side analysts, Elliott Investment Management came out saying they're one of the largest shareholders in the company, really applauding that they've made progress, talking up the advancement and enhancement of the company's operating model and capital allocation framework. Board also authorized the repurchase of up to an additional $4 billion of stock. Analysts basically saying that the forecast that they called out, signaling strong profitability. There is still that elephant in the room, AI, how that impacts sales and subscriptions, which seem to be slowing, but nonetheless, a big move higher for Workday, still down about 8% so far this year.
When I get my car share, I arbitrage. I go open up my Lyft, open up my Uber, and whatever gives me the best price. Since it's the same driver in the same car, usually in most cases, Matt Miller does not do that. He just goes right to Uber.
He does it because of the credit card points for some reason. I think it's lame.
That would be the implication, but I'm not even sure you just made it that far. Boy, they're having a good day today. What's going on?
Yeah, seeing a big move in shares of Lyft, ticker LYFT, after the company's name, up more than 12%. This coming after unveiling plans with Waymo, the Alphabet-owned driverless car technology company, to unveil and offer robo-taxi service in Nashville starting next year. Big fan of Nashville. I don't know if you've been. This will start through the Waymo app early next year and ultimately spread to the Lyft app. So the next time you're down listening to some country music, you can hop in a
Nashville is the bachelorette party capital of the world.
Is it really?
Yes. It's like surpassing Vegas. I don't know how they do it.
They call it Nash Vegas these days. I was just there for Labor Day.
Okay.
So, but they call it Nash Vegas.
All right.
But that's sending also shares of Uber, ticker UBER, down more than 5%.
I tell you, the stock for Lyft is up 78,
자, 추가 진입
75%
사인
year to date. So maybe the
드리겠습니다.
market's saying, okay,
추가 진입
maybe this
사인 드리도록
driverless
하겠습니다.
partnering strategy is a good one.
And this is a company that's still trading now at the highest level since 2022, but really pales in comparison to the return for Uber. And I want to cap off with NVIDIA quickly. Stock down almost 3%, one of the big drags in the S&P 500 today. This coming, whether it's a sell the news event or being pointed to the FT reporting that the China's internet regulator has advised companies, including ByteDance and Alibaba, to terminate their testing orders of the RTX Pro 6000D. So that's one of their chips. So NVIDIA down about 2.75% right now, ticker NVDA, one of the big drags in the S&P 500.
And in just a few minutes, we're going to have StubHub CEO Eric Baker. He's going to speak with Bloomberg tech anchors Ed Ludlow and Caroline Hyde. And would love to get your thoughts, though, Bailey, on StubHub going public today. We're still waiting for it to begin trading. I guess it tried to go public a few times, right? All right, so finally here we are. But the valuation, I think half of what it had thought it might be valued at when it was first thinking about going public.
Yeah, this is a deal that raised $800 million. And we had been hearing from people familiar, even just a few weeks ago, that they thought this would be north of $1 billion and that their valuation could be closer to that $13, $14 billion bogey as opposed to about $8.6 billion at that IPO price. But this has been a slog for the company. Obviously, we saw one of the busiest weeks in quite some time last week with Klarna and others going public. But StubHub, when I talk to investors, it's a different beast. And that was a big part of this conversation. And my colleague just putting out right now that they tightly allocated this deal to top investors. You've been trying to position this company and set it up to succeed. But again, where it priced versus where investors might have thought it would price, different dynamics than we saw with some of the hotter IPOs last week and even going back into the summer like a Figma and some others.
So we've had it. I mean, it seems like the last, certainly since in Labor Day, this IPO market's picking up. I know you don't, that's not your remit these days, the IPO market, your broader equities, but how's the calendar look for the remainder of the year? Are we going to continue to be busy for the next month or so?
It's interesting, Paul. So last week was the busiest. I'll call it the busiest based on size. We kind of have some ESPN type stats for that. But busiest week since 2021. We have a pretty busy week this week with StubHub today. Netscope will price tonight and trade tomorrow. That's a cybersecurity company. But it kind of falls off. I was meeting with an advisor this morning who was basically saying it kind of looks like a rocket ship. And then right now we're dealing with that return to gravity. Calendar is at play. But nonetheless, when you are seeing some of these deals printing, it should be interesting to see post-Fed what companies flip and what the calendar stacks up like for October, which should be a pretty big window.
I mean, having been in this game for many years, the IPO game, the new issuance game, I got a lot of things in my back. I got markets at or near all-time highs. I've had a bunch of deals that are priced well and traded well.
VIX is at 16.
VIX is at 16. I mean, if you can't get a deal out today, kids, what are you waiting for? It seems like I'm surprised we haven't seen more, but I've been saying that for a while here. Anyway, the ones that are coming out into the marketplace are trading well. So people, what that typically does is stoke more demand from the buy side for more stuff.
But we have seen kind of a mixed performance, and I do want to call out Gemini Space Station, the Winklevoss twins company. It broke issue today. It's down 9%. So for every, figure, they're a blockchain HELOC company. For every company that's up, 50, 60%, we have a few that either are breaking issue or close to that IPO price. So a bit mixed.
Very good. All right, Bailey Lipschultz, always the best equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Looking at stub priced at 23.5. Indication rates here pre-market 25, bid 26 on the offer side. So we look like we're getting closer to getting a market opening here, and that'll be a good thing. Coming up right now, StubHub CEO Eric Baker speaking with Bloomberg Tech Anchors host Ed Ludlow and Caroline Hyde on the company's IPO today and future growth plans. So we'll have to see how the play is for this live event business. I'm going to a live event tomorrow night. So SeatGeek, StubHub, Live Nation. I mean, they're all there in the game. It's a competitive business, but boy, that's where the growth is in the musical business, is in live events. So right now, let's go to StubHub CEO Eric Baker alongside Bloomberg's anchors Ed Ludlow and Caroline Hyde speaking about the IPO for StubHub, ticker STUB. Let's listen in right now.
That values the company at around $8.6 billion. The ticket reseller is the latest company to go public in a US IPO market, experienced a bit of a hot streak. Let's speak with StubHub CEO Eric Baker, who joins us now from the NYSE. Eric, the history. You set up this company in the year 2000, you sold it to eBay, bought it back, amalgamated with a European giant you had already built, and now it goes public. How does it feel?
It's tremendous. A lot of gratitude to reach this milestone for the company. It's certainly been a long journey, as you say, from 2000, but now we're really focused on the next 25 years and the bright future ahead.
Take us to the next 25 years, because there are regulatory headwinds. There are people worrying about bots. There are a way in which you can beef up this business to add more things in secondary market ticket sales. Where do you go? Where do you focus?
Yeah, so our focus really is we've always wanted to make it easier for people to access live events. And so what we started with is, as you noted many years ago, was to make the resale market safe and secure and easy for people to access tickets. What we're focused on now is we realize consumers don't care whether it's a primary ticket or a secondary ticket. They just want to access the live events that they want to go to and discover easily, safely, and so forth. And that system's been pretty broken for a long time, how those tickets are originally distributed. So we're really working on creating a better experience, and we've already had exciting partners like the Yankees and Major League Baseball who started selling tickets directly in this open distribution network.
You looked at going public in a time where Taylor Swift had gone through the Eras tour. There was a lot of hype and momentum, and you hit pause. You're doing it now, and I think a big question everyone's got for you, Eric, whether they're a consumer or not, is what happens next with a regulatory crackdown. The practices of your industry are very much under the microscope at the moment.
Well, I think, first of all, we're always excited to be at the intersection of technology and live events because we're very bullish on the future of live events, and we think that doesn't change. To your question about regulatory focus, I think two of the things really people have looked at, one was transparency in pricing. That we at StubHub have always advocated for. And that all-in pricing that we lobbied for passed at the federal level in May. And that's just a better experience for consumers. And the key is it's now a level playing field for everyone in the market. I think the second real regulatory focus, quite frankly, has been what the Justice Department is looking at with the primary issuance of tickets and making sure that networks are open and fan-friendly. And that is something we certainly applaud because we're on the side of the fan.
Eric, is artificial intelligence a headwind or a tailwind for the secondary ticketing market?
Yeah, we see it as a tremendous opportunity, a tremendous tailwind. And I think if you think about it, again, we're a technology and product company. And I think Alex Karp at Palantir, I don't want to miss a tribute, put it really well that he said the artificial intelligence technology for companies that have tremendous data allows you to provide a better product while increasing your revenue tremendously and reducing costs so that everyone wins. And we're seeing that across the board, how we deal with customer service, how we're releasing new features in the product to make it easier for people to locate the tickets they want. So we're very excited about it. And again, with the leadership position we have and the scale of proprietary data we have, we think the sky's the limit.
We are speaking with Eric Baker, founder, CEO of StubHub, to our radio and TV audiences. You
충분히
say
수익
AI could help
가능성이 있다고
drive
판단되어서
revenue
유리를
tremendously.
지켜보고 있는
Let's
점
talk about your revenue thus far, because in the first half of the year is about 3% growth. That is significantly slower than the previous. Now, we know that maybe we haven't had Taylor Swift on tour this year, but Eric, are you seeing a slowdown in demand?
Yeah, so thank you. No, we're really seeing people continuing to buy tickets and growth. I think it's important to note two of the things that happened that are unique this year. One is Taylor Swift, and her tour is behind us, and there is only one Taylor Swift. So I think she's so tremendous. We even broke her out in the S1, so it's great to be that popular. Second is, as I mentioned, all-in pricing passed in May, and when we lobbied for it, we knew that creates a one-time hit to the market as consumers just adjust. We've seen that already in states like New York that had passed it before. So when you look through those headwinds, the business is growing extremely nicely, north of 20%.
I'm interested, though, on your profitability or lack thereof, Eric, because it's interesting you've gone public without that story to tell. When will it become the story you can tell?
Yeah, no, I think what you're referring to is by the accounting metrics like net income, that it shows a loss. But I think when we went on the roadshow and when investors look, they really look at EBITDA, which is your earnings before interest, tax, depreciation, amortization, as well as your cash flow. And on that dimension, we've been profitable for a long time and generating hundreds of millions of dollars. That's the way we've been able to service the debt that we've had. And obviously now that we're deleveraging and taking the debt down, our cash flow will even go up further. So I think that's one of the many reasons that our story was very well received when we went out on the roadshow and by our new partners.
Eric, Bloomberg did some deep reporting on the FTC looking at Ticketmaster Arrival on the issue of bots hoovering up tickets for resale and their inaction. Have you discussed that issue with the regulator, and how are you addressing the problem?
Yes, we've always, and bots, and it's interesting as you note, is really about how these tickets are distributed in the first place. And so one of the things we've always lobbied for is enforcement of the Bots Act. And that's really because we believe that these tickets need to be distributed in a way that's safe, secure, democratic, through open channels. As you mentioned, they're looking at, I believe, Ticketmaster and others who are handling the primary issuance of the tickets, and they really need to make sure that their technology and safeguards are in place to make sure this doesn't happen. But again, it's something that we're very pro-consumer. That's how we win. So we hope that all that stuff gets cleaned up.
Eric, very quickly, next year's soccer or football World Cup, how big an opportunity is that for StubHub?
Look, we love the World Cup. It's been a phenomenal event. Just think about it. We run the largest global platform in the world for ticket exchange for all kinds of events. And if you had to say what is the largest global event in the world, I think you can honestly say it's the World Cup. It's people from all over the world traveling to come see events. It's going to be in North America. It's extremely exciting. And we're excited to hopefully help as many fans as possible make their dreams come true to access getting to the World Cup. So we're all football fans, so to speak, in 2026.
We're football fans here too. Eric Baker, founder and CEO of StubHub Holdings. Great to have you on the program. Thank you. Now coming up.
All right, that was StubHub CEO Eric Baker speaking with Bloomberg tech anchors, host Ed Ludlow and Caroline Hyde. StubHub went public today. 23.5 was the IPO price, kind of in the middle of the range. It's indicating right now 25.5, 26.5. I've passed this prologue here. These things tend to open up around 11:30, 12 o'clock for trading, so we'll see how that works out there. Bank of America Chairman and CEO Brian Moynihan, he was on Bloomberg Surveillance this morning. He sat down with Bloomberg's Jonathan Ferro and Lisa Abramowitz to discuss his expectations out of today's Fed decision and his view on the U.S. economic outlook. Take a listen.
The tension the Fed has to deal with, and you've been picking at it all day, is the tension between a higher inflation rate and ultimately where Fed funds could settle in at. And so whether they do 25 basis points today or 50, people have to keep in mind the growth rate in the economy was brought down, and now it's starting to go back up. So next year is predicted to be better than this year, and the year after is better than that. So you hear our teammates talk about the economy growing back out. And that then means we're on the other side of it. And so the Fed has to adjust to the inflation picture as it got more in control. They can come down. They came down 100 basis points already. it can keep coming down, but they've got to be very mindful of the inflation side. And so I think when the people get in the room and they see the data, they have to think it through. The big news since that you referenced earlier was the labor market's gotten softer, so that gave them concern. So I think the market believes and our teammates believe they'll cut rates. But I think the key for people is deceleration and growth, and will the growth re-accelerate? You hear our teammates seeing that. We're seeing consumer spending strong and all those things, which would indicate we'd see the acceleration. Next year's better than this year. Unemployment is not expected to go up a lot, even though the employment picture may be softer. But the most important thing is the long-term interest rate scenario people are projecting is a more normal rate environment that we saw before the financial crisis. Say 3% plus or minus on the Fed's fund rate, 4 to 4.5% or so on the 10-year rate, and a curve that's not inverted, that's normalized between that. The important thing is to get back to more of a normal environment, frankly, with maybe a little higher inflation, because the great debate about 2% is something you can get lots of experts talk about. A little higher inflation, a little faster growth, and then, frankly, that'll help with some of the debt carry and other things going on in the U.S. economy.
All right, that was Bank of America Chairman and CEO Brian Moynihan. He was on Bloomberg Surveillance this morning. Bloomberg Surveillance, Jonathan Farrow, Elisa Bromwitz, they were down at the trading floor this morning for their broadcast, for their show this morning in Midtown Manhattan, so they were able to speak with a lot of the leaders of Bank of America, and Mr. Moynihan speaking via Zoom from London. He's there for President Trump's visit in London, so we got that as well this morning. All right, let's get a little bit of a reset here, and for that, we can check in with John Tucker for Bloomberg Business Flash.
All right, the major averages right now, they are mixed to a little change. The Dow up 311 points. A lot of that has to do with American Express, Walmart, Caterpillar, the big gainers, the Dow right now. S&P 500, little change, down 3 points right now, 66.03. And then you have the NASDAQ 100 down 90 points. Of course, all this could change after 2 Wall Street time when we get the Fed rate decision. By the way, this report brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And again, waiting for trading of StubHub, the ticker symbol STUB, as Paul mentioned, priced at $23.50. NVIDIA, they have the biggest weighting in the S&P 500, and it's weighing on the index. It's down close to 3% right now. And then you have shares of Lyft, on the other hand, up over 12%. They're partnering with Waymo for the first time to offer robo-taxi service in Nashville starting next year. Again, 2 p.m. Wall Street time, we'll learn the Fed interest rate decision. Betting is we're going to see just a quarter of a point rate reduction in their benchmark. Weight loss drug developers gaining after Eli Lilly said its experimental oral diabetes medication, which I'm not even going to try to pronounce, worked better than Novo Nordisk drug in a head-to-head study. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alexis.
Thanks very much, John. About 11:22 on Wall Street, and we want to check in with what's happening over in London, across the pond, because the UK is giving President Trump and First Lady Melania a royal welcome in their second state visit. They got a carriage ride at Windsor Castle, dinner shortly with King Charles III. Let's get the skinny on all of it with Anne-Marie Horton, host of Bloomberg Surveillance TV. She is there in London. I guess you're in Windsor right now. I'm looking at you here on our feed, and I see the flags of both countries behind you. Lots of pageantry. Sort of paint the picture for us. What's happening right now?
Yeah, tremendous amount of pageantry here. An unprecedented second visit for President Donald Trump. He said leaving the White House that he was at Buckingham Palace the first time around. He said this destination, Windsor Castle, he's told is the ultimate destination. As you mentioned, there's been a carriage ride. They did lay a wreath as well next to the tomb, on the tomb of late Queen Elizabeth in the chapel inside the walls of Windsor. And right now we are waiting to see is what the Ministry of Defense, the United Kingdom, is calling an unprecedented military display of force and ceremonial welcome for anyone that's been invited to the United Kingdom. And that's when we're going to see stealth jets from the United States and the UK, so F-35s and Red Arrows, join in this exercise over the skies between London and Windsor. So we're waiting for that to happen. And then this evening, there's going to be a state banquet. And that's what's going to get very interesting, especially for our viewers, because we are going to see the President of the United States flanked by the top tech executives, which all announced tens of billions of dollars into the United Kingdom when it comes to quantum computing, cloud investing, and critically, AI, as well as other notable leaders in the finance and business sector like Larry Fink. So that's going to take place this evening. So today is really all about the royal pageantry. And then tomorrow the president will sit down with Prime Minister Keir Starmer, who's in a very different position politically today than he was back in February when he brought the invitation from King Charles to the president for this unprecedented state visit.
Anne-Marie, we know the Windsor Castle is actually outside of the center of London. I know in the center of London there have been some protests regarding this visit. What can you tell us about kind of what's happening for some of the folks that may not be as welcoming for this president?
Yeah, there have been protests in 2019. I don't know if you remember, in 2019, there was the baby blimp flying around London of President Donald Trump. This time around, actually last night in Windsor, you had a group of protesters project onto the walls of this 11th century castle a photo, an image of Donald Trump and the late sex offender Jeffrey Epstein. And then also as well, there was a massive banner that was rolled out in the city of Windsor, a picture of those two men, tennis court size. So that's the protest side. But we should note there actually have been supporters as well, lining up the streets of Windsor. Individuals walking around with Make America Great Again hats. I spoke to one individual here to support President Trump. He said he also was in Washington for the inauguration. He was wearing a hat that said Trump was right about everything. So there's a bit of a mixed bag of individuals who are supportive of this unprecedented state visit. But certainly yesterday on display here in Windsor was those protesters displaying the image of Jeffrey Epstein and Donald Trump, which also is political right now, a hot topic in the United Kingdom, because after revelations of the close relationship between Lord Peter Mandelson and Jeffrey Epstein that Bloomberg News reported about and revealed in these emails, you had the third ouster from Keir Starmer's government in 14 days. And that was, of course, the British ambassador to the United States.
And Anne-Marie, what else do you think we can expect from President Trump's meeting with the Prime Minister in terms of real substance outside of these big tech deals that we know have already been announced?
Well, the big tech deals have been announced, but I think one thing the president might want to discuss, especially given he is getting urged by dozens of Republicans on Capitol Hill, is to really push the UK to drop the digital services tax. And the president may use the fact that you have companies like Microsoft spending $30 billion in the United Kingdom as a reason to bring that up at the table. Leaving the White House, the president also said potentially they could refine the trade agreement. We do know that the UK wanted to discuss bringing down the steel tariff, which right now is set at 25% to zero. They also wanted an exemption on Scottish whiskey. It looks like the United Kingdom is not going to be pushing for that. The president did say there could potentially be some refinement. So trade is certainly going to be discussed. We definitely know tech and digital service tax is likely going to be discussed. And then I think big geopolitical issues regarding what's going on in the Middle East, what's going on with the war in Ukraine. These are all issues that likely will be discussed when the two leaders meet tomorrow. And that will be at the Prime Minister's country estate in Chequers.
Very good. Anne-Marie, thank you very much for your reporting. Really appreciate it. Very helpful to us. Anne-Marie Hordorn, co-anchor of Bloomberg Surveillance Television. She is in Windsor, England, in the UK, covering President Trump's state visit to the UK. We appreciate her reporting today. It is Fed Day, of course. Give you the kind of the lineup here. 1:30 p.m. Tom Keene and the surveillance team will join you. We'll be simulcasting radio and television with the Fed Day. And then at 2 o'clock, we get the statement from the Fed. And then at 2:30, Fed Chairman
조정원 씨에는 충분히 실권까지도 놔주시다고
in Washington,
판단이
D.C.
됩니다.
He'll attend that press conference. So we got you fully covered on the Fed here today. And whenever it's Fed Day, we really appreciate getting opportunity to speak with our next guest, Danielle DiMartino Booth. She's the CEO and Chief Strategist for QI Research here. Danielle, I know you followed this closely with your time at the Dallas Fed. What do you think the Fed should do today, given all the data we've seen over the past several weeks? What do you think they should do?
Well, so I think it's more than just the 911,000 downward revision to the annual benchmark numbers that we saw through the end of March, the 31st of 2025. It really is the downward momentum since then that we've seen. Had the Fed had those real-time revisions in hand, then they would have seen that there was justification for lowering rates in May, June, and July, right? We now know that we've had 3 months of construction job losses, et cetera, because it's more so right now the real-time revisions that really, the pandemic notwithstanding, June's job losses were the first since September of 2010.
Right.
So first time in 15 years. These are kind of like bright red flags. Yep. So it's pretty obvious that the easing cycle should have begun early this summer. And so that's why there's so much in the way of rumblings about will there be a triple descent today between Myron being there for the first time, Bowman and Waller. You know, by the same token, you got the St. Louis, Kansas City duet. Will we see Alberto Musalem? Will we see Jeffrey Schmid? Will we see them dissent in favor of no cut?
Really?
Well, I mean, the more hawkish and uncertain you are about eventual and ultimate pass-through of tariffs into consumer prices, the more hawkish you're going to be. And one can only imagine at a higher level how very awkward and uncomfortable it is around that gigantic wooden oval table today in the Eccles building.
Yeah, talk about awkward meetings, right? This is going to be one of the strangest I think we've seen in quite some time. But Daniela, I just want to jump off what you're talking about in terms of cracks in the job market, because a number that I think is a pretty good current number to look at is unemployment claims, right? And they're the highest they've been in a long time. But at the same time, you know, inflation at 2.9% is moving further away from the Fed's 2% target. So, you know, what's the Fed to do when stagflation is on the horizon?
You know, and that's a great question, but I'm not so sure that it's stagflation necessarily for the consumer because of what we saw in terms of margin squeeze that was very apparent in the producer price index, and the fact that whether it's Walmart or Target, they're telling us we're having to discount furniture, we're having to discount discretionary goods. We cannot get our customers to buy discretionary goods. Bloomberg did a great job of covering Moody's, showing that now 50% of all consumption in the United States is attributable to the top 10%. That other 90%, they cannot afford higher prices because they're already forking out so much for what we call essentials.
All right, so let's assume we get maybe 25 basis points today from this Fed. What do you think the cadence might be over the coming meetings?
So if we are to see, as Goolsbee warned, Goolsbee, of course, does not vote until January when he rotates in. If we were to see continued upward momentum in claims, if we were to see that line crossed of 2 million in continuing claims, which separates itself from initial because that means that people have been approved to become continuing jobless claimants. If we're to see a continuation, 87% of Texas home builders, 76% of Florida home builders are laying off right now. We saw those single family.
Even the great market of Dallas-Fort Worth.
Oh, it's incredible to see how construction has come to a screeching halt, even in Dallas. And we're overbuilt, and a lot of what I call the Airbnb jocks, they can't get financing. Right now, refinancing is really hard, but banks are clamping down on their lending standards. Look what happened with Tricolor last week. So banks are really paranoid about the state of consumer balance sheets. So to the extent that you bought a handful of apartments in during the pandemic, thinking that you'd get rising weekly Airbnb rates, VRBO rates on your property, that isn't happening anymore, and that's going to be highly problematic. On top of the fact that baby boomers are also getting nervous, and they've got gigantic homes that millennials don't have enough children to fill. So housing could be a thorn in the Fed side, and including in inflation for some time to be.
We get these lower rates. We know that one rate cut's not going to move the needle. 2, maybe even 3 if they're quarter-point cuts. But if we're going to be in an environment of lower interest rates, isn't that going to help the housing market?
In theory, it will. My gosh, we saw a 57% jump in refinancing applications because of the decline. And in fact, we saw almost $100,000 increase week over week in the amount of money people are trying to pull out of their homes. the amount of refunds. So people are obviously desperate to monetize what's in their home. We only saw a 2.8% bump in purchase applications. So affordability for people trying to break into the housing market is still prohibitively high. That 25 basis points isn't really going to move the needle. But again, I think you may have enough dissent today that we're going to be talking very quickly about a 50 basis point rate cut at the October meeting.
So do we rule that out for today, 50 today, do you think?
Jerome Hayden Powell, Esquire, is not a man to surprise the markets. And by the way, just total trivia, it is up to the Federal Open Market Committee in its entirety to elect the chair of the Federal Open Market Committee, which is a separate position. You could theoretically have President Trump replace Powell come May, which he will do, and still have Powell at the podium every Fed day until January of 2028. It's entirely legal and possible.
That would be fun. All right, Danielle, thanks so much for joining us. Danielle DiMartino Booth, CEO and Chief Strategist for QI Research, joining us live here in our Bloomberg Interactive Broker Studio on Fed Day. We always make an effort to get on Danielle's calendar to get her thoughts on this Fed here. The market's kind of treading water a little bit here. The S&P's pretty much unched on the day. We've got a Dow moving higher. Some of the big financial stocks, Goldman Sachs and so there's American Express moving higher. That's up 300 points. The NASDAQ off 115 points. So not a lot of direction out there. The Tom Keene VIX sitting right at 16 and change. 10-year Treasury yield, 4.03%. Pretty steady right there. Mortgage rates, I could get close to 6% now. It's getting a little bit better. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash, and we're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Major stock averages, they continue to be mixed. Shares of NVIDIA, which has the biggest member weighting in the S&P 500, they're down 2.5%. It's also the most active. The FT reports China's internet watchdog has instructed companies there to terminate orders for one of their chips. A trader is expecting officials to cut rates for the first time this year and also, probably more importantly, reveal the scope of reductions over the next few months. We're going to get the Fed decision around 2 o'clock Wall Street time. Andrew Hollenhorst, the chief U.S. economist at Citi, says the labor market clearly is in the driver's seat for the Fed.
You look at those payrolls numbers, we had negative job growth in June. I know it was in a revision, so we don't really feel that way, but this is a Fed that would have cut already if we had those jobs numbers in real time.
Right now, the Dow up 306 points, S&P 500 down 8, 65.97, so that's down about 0.1%. The NASDAQ 100 right now 117 points lower. That is down 0.5%. 2-year yield, which I always say is more policy reactive, that's up just about 2 basis points at 352. The 10-year unchanged at 4.03%. Of course, all this could change after 2 o'clock. U.S. regulators issuing a flurry of letters calling out pharmaceutical companies for allegedly misleading ads. They sent letters including warnings about Oprah Winfrey's TV special that said paid consultants for the companies downplay the side effects of their drugs. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alexis and Paul.
All right, JT, thank you so much. We appreciate that. Alexis Christoforous and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Head over to youtube.com, search Bloomberg Live Podcast. That's where you'll find us. You want to talk the auto business. You want to talk to an auto analyst. You want to talk to a guy who's got a little grease under his fingernails. You know, not the guy that sits in the dealership.
What is that background? Has he been kidnapped?
No, his background for Kevin Tynan, he's a director of research of the Presidio Group. He's somewhere in the swamps of Jersey. And he just wanted like a place to work on his cars. And if there's a house for the family and kids, that's fine. But this is what he told his real estate agent when he moved. I just want a place to work on my cars.
All that's missing from that scene are some empty beer kegs.
Yeah, exactly.
They're probably behind the garage, Kevin.
Other side, he's got grown kids. Kevin, thanks so much for joining us here. I'm looking at the stocks, Kevin. GM, Ford, they're kind of up 10, 11, 12, 15% this year. But boy, if I were an investor, I'd have no idea how to play the auto companies because it feels like they're right smack in the middle of, do we go all in on EVs? Do we go halfways in? Do we just say, screw it, we're sticking with the big gas F-150s? Give us the kind of the lay of the land with the auto business today.
Yeah, and the other thing you have to think about, Paul, is that the investment in electric vehicles, which maybe failure is a strong word at this point, but the adoption rate certainly isn't what it was expected to be to this point. And you have to think what that did to future product, in other technology, other drivetrain technologies, whether it's internal combustion, hybrid, plug-in hybrid, or even electrification. So this little bit of reversal or about face on that technology isn't just about that type of vehicle, that platform or those platforms. It's going to bleed through everything. I think it's going to impact strategy and direction going forward for the next couple years. Last time we saw something like that was the bankruptcy period. We're heading into that investment really kind of dried up as you were in a cash preservation stage. And when you look at 2006, 2007 to probably 2012, 2013, not a lot of great technological advance in the auto industry. We're probably not in that long of a window, but we're probably in a similar situation going forward.
Kevin, I want to talk to you about what's happening in terms of people not being able to pay their auto loans on time, right? Delinquency rates are rising, and We saw in dramatic fashion what happened last week with Tricolor, right? Subprime auto lender filing for bankruptcy. Is this unique to that company? I kind of think not. And is it raising concerns that this could be a warning sign, a bigger warning sign, not only for the auto industry, but maybe, you know, for the greater economy?
Yeah, and look, the idea of affordability in the auto industry, it's not coming back, right? It's not an accident. It's orchestrated by the manufacturers.
단기적으로 일목으로 봤을
Everything
때는
is
현재
inflationary.
볼린저 밴드 상승한
So
위치에
they're
있는데요.
building the vehicles that get
하지만
across the line
10분봉,
that are
5분봉으로
profitable
갈수록
for them.
볼린저 하단에서
And you know, the idea of an affordable, call it
중임선으로 이제 나가고 있는 모습이 보여지고
$20,000
있습니다.
vehicle doesn't make sense from a financial perspective. Sure, it puts a car in every driveway.
자,
You
그리고
know, there's a
또한
lure for the first-time buyer,
금리
the
예정되어
entry or
있는
move-up
3시
buyer. But at the end of the day, what
약 2시간 이후
people call affordable,
금리 결정 이후에는
automakers and I would call unprofitable.
큰
And you just
상승세를
can't
보일
do too
가능성이
much of
판단되기
that,
때문에
right? So
조금 더
what you've gotten,
지켜보고
especially from the
대응해
domestic
나가도록 하겠습니다.
manufacturers, is much heavier. We're 84% light truck in this country now, only 16% car. With that comes higher prices, more content, and you know, look,
길게 보고
the
대응해
average
나가도록 하겠습니다.
MSRP in
길게
August
보고
was
대응해
over
나가도록 하겠습니다.
$51,000. That's the MSRP. Now, the transaction price, because of discounting, was just over $49,000. But you're talking about, you know, it takes $50,000 to get into a new vehicle now, and it's not an accident, and it's not coming back. So delinquencies, until the market adjusts and people that probably can't or shouldn't be buying don't, this is what you're going to have, this fallout of delinquencies going forward. Some of the payments are just unbelievable, you know, $1,000 payments, which, you know, to find a $500 payment anymore is almost impossible.
What do you want for that beat-up Mercedes in the background?
That's his winter project.
I'll give you $200.
Kevin, I know you work closely now with the dealer network out there. What are the dealers saying these days?
Look, the dealer base is very different, you know, and a lot of the impact of what we see fundamentally in the auto industry, and that includes things like the China threat or, you know, online sales are very different. The impact to the OEMs versus the franchise dealers. Now, you got to remember, the dealer is basically 4 or 5 businesses under one roof. We talk a lot about the OEMs and the new vehicle market, but the beauty of the franchise dealer base is that there's that revenue diversity that as the new vehicle segment tightens, you do more used vehicles. You're 50% plus gross margin in your parts counter and service base. So there's this ability to kind of shift to where the money is coming from that the OEMs simply don't have. And I've been saying for a while, like, you know, in broader terms, the OEMs, the auto industry from that perspective is almost uninvestable. When you look at the returns of the big OEMs over time compared to the dealer base or even retail auto parts, it's very different, you know, and when if you're playing this space, I would think that the franchise base has much more potential, much more versatility, and revenue diversity that the OEMs simply don't have.
Kevin, I got about 30 seconds left. What are you driving these days?
I still got my V12, you know, and a bunch of other Mercedes and things like that are driving me crazy.
At least gas prices aren't too bad, so.
Yeah, gas prices aren't too, but nothing electric in the portfolio, is that right?
Not yet, but I'm seeing the deals. It's amazing window right now where, you know, there's deals to move those before the expiration of the credit and get inventory manageable. So that's where the deals are right now, are on the electric vehicles.
You got to come back when you buy the EV.
Yes, exactly.
Walk us through it.
I brought my most recent vehicle I bought for my number 4 Offspring was a hybrid. So, Kevin, I'm in the hybrid thing. I think that makes sense.
I did the same thing, by the way.
Yeah,
I like it.
All right, Kevin Tynan, he's the director of research at Presidio Group. He's down there somewhere in the swamps of Jersey with all his car collection, doing that kind of stuff. So interesting, the auto business. You know, car makers, it's funny on the electric side, the prices really got to come down. Because, I mean, I can't imagine anybody really wants to pay a premium for an EV relative to, you know, internal combustion engine. At least I wasn't. And I can't imagine. And so they need to bring those costs down. That's kind of the bottom line there. So, all right, looking at these markets here, we kind of got, again, red and green on the tape. Matt Sheltonhelm, he's going to join us. He's Bloomberg Intelligence media litigation analyst. He's got the latest on what's going to happen with TikTok ban. He's been all over this, giving us some really good perspective on TikTok and how it might play out. Looks like we may have a buyer or collection of buyers, a consortium of buyers. We'll have that coming up. This is Bloomberg. Good morning.
자, 현재 10분봉 기준으로 캔들을 보고 있고요. 다음 캔들까지 지켜보도록 하겠습니다.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
11:53 Wall Street time. I'm Alexis Christopherson for Scarlett Fu and along with Mr. Paul Sweeney, live in our Bloomberg studios in New York. And more details are emerging now on the U.S.-China TikTok deal. We know it is an app that nearly half the country has, 170 million Americans. What might that deal look like? What are some of the hurdles? Let's bring in Matthew Schettenhelm, Bloomberg Intelligence media litigation analyst. He is joining us from Washington, D.C. So, Matthew, just tell us sort of where do things stand right now? We know that there might be this consortium that would take over the U.S. TikTok, but might there be other bidders here?
Yeah, so I think we're finally seeing progress here for the first time. As you know, the Congress passed this law last year. The Supreme Court upheld it in January. It was supposed to take effect and effectively ban TikTok on January 19th, and President Trump has granted extension after extension to prevent that from happening. I think this is the first sign of real progress. It sounds like there are, 2 or 3 bidders involved, and the potential framework for a deal that potentially could be announced as early as tomorrow.
Well, I certainly forgot that TikTok passed a law that says, hey, you either got to divest this thing or shut it down. I mean, Congress is involved here. So whatever deal eventually gets done, it has to kind of hew to those requirements by Congress, doesn't it?
Yeah, I mean, that's right. This is not the way the law typically works. Usually, you know, Congress passes a law. That law is still on the books. And as of January 19th, TikTok is supposed to be banned. And yet it's continued to operate because President Trump's Department of Justice has sent letters basically saying, don't worry about it. So that raises the question, how much is the law going to matter with respect to this deal? Because Congress specifically addressed what sort of divestiture should happen under this arrangement. One of those terms says that ByteDance can't control the new entity. I think they can address that by keeping ByteDance's interest below 20% in the new entity. But the second one might be trickier, and that goes to the operation of the algorithm, which is TikTok's secret sauce. The law that Congress passed said that there can be no operational relationship, no cooperation between ByteDance and any new entity. And that's going to be the really interesting thing to watch as these deal terms come out. How are they addressing the algorithm going forward, and how will that change TikTok as we know it?
And Matthew, one of the stipulations I read is that the U.S. government would have a seat on the company's board. This is not common, right? I mean, usually see this when the government has to come in emergency situations. Maybe there's a sponsored bailout like we saw during the 2008 financial crisis with some of the insurers and the auto companies. Do you think if the U.S. gets a seat on the board, it gets a seat on the board, you know, forever? It's not a temporary situation?
All of this is sort of unprecedented. So it's possible that this is sort of just a temporary solution. It's also possible that it lasts longer than that. We're sort of making it up as we go here in terms of the law. And so it's very difficult to say exactly what shape a deal like that takes and how long any of it endures.
So what are next steps here, Matt, from your perspective?
Yeah, so yesterday, President Trump again issued an extension. The law was set to again take effect and effectively ban TikTok. His extension extends it through the middle of December. And so that gives some breathing room now to make this deal happen. Of course, he could just kick it down the road again if the deal doesn't happen. So it sounds, though, like there's real progress on a framework for a deal. And so I think we should learn more details about it tomorrow and the day after, and potential for a deal that actually resolves this issue and is a genuine divestiture from ByteDance as Congress intended. This may end up actually working out as Congress intended it to work at the end of the day.
Matthew, I think you hit it earlier when you were talking about the algorithm being the special sauce, the most lucrative part of any deal. To be clear, do we know? I mean, the U.S. would not be outright buying this algorithm. They'd be licensing it at the end of the day, right?
Yeah, that's what it sounds like from some of the reporting on the deal, and there's the potential that would be consistent with what Congress intended. What the law bars is an operational relationship and cooperation with respect to the algorithm. So the workaround here may be a licensing of the technology and saying the U.S. entity gets to do all the work on that algorithm. But I'm really curious about the details of how that will work as a practical matter, whether that's consistent with the law, and maybe the biggest question of all, whether anyone's going to stand up and insist that the law be followed.
Matt, great stuff as always. Appreciate you getting your perspective, your analysis. Matt Schettenhelm, media litigation analyst for Bloomberg Intelligence, has been known to walk around and conduct business with no cash in his pocket, just like the kids. That's how they do it down there. So, but interesting. I think if you're TikTok, if you're a TikTok user, you want something to survive, I guess. And so this might be the best. Even if it's a new app, you kind of have to download.
If you can still do your business on it, make some money off it, I think that's what people are looking for.
Yeah, if you can port all your users over and all your advertisers and all that kind of stuff, if they make it simple for you to do that, maybe that'll work. So we'll have to see. All right, so coming up, it is Fed Day. Give you the calendar, the rundown here. 1:30 p.m. Wall Street time. Tom Keene and the surveillance team will join you. Bloomberg Television Radio simulcast. 2 p.m. we'll get the statement from the Federal Reserve. And then at 2:30 Wall Street time, Fed Chairman Jay Powell will hold his press conference. And Michael McKee from Bloomberg News. He's in Washington, D.C. He'll be asking the tough questions, and we'll see what we get from our Fed chairman. And S&P 500 off 6, the Dow up 300, the NASDAQ down 100. Go figure. The 10-year Treasury year, let's keep an eye on that, 4.03%. We'll have more. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Health Secretary Robert F. Kennedy Jr. has told Congress he did not tell his CDC chief to approve vaccine recommendations without studying evidence and said he could not trust her. Now she's telling her side of the story.
Fired CDC Director Susan Manaras stuck by her decision not to rubber stamp vaccine recommendations without seeing the science behind them, warning that if faith in vaccine science is undermined,
I believe preventable diseases will return.
Former CDC Chief Medical Officer Deborah Oury says that's already happening.
As we're seeing childhood vaccination rates decrease.
She'd point to the nationwide uptick in measles cases. Allison Keyes, CBS News, Washington.
For a second day on Capitol Hill, FBI Director Kash Patel is battling with Democrats about the Epstein files, this time before a House committee.
Everything the court has allowed us to
Which
release,
court are you talking about?
3 separate federal courts have come in and said...
We're talking about the evidence you've got. It's got nothing to do with what those courts have.
Do you have any idea how the law works? Do you want me to break the law in a federal judge's order?
No, I want you to follow your own
curiosity?
word, Director Patel.
Suspects in custody after a car was rammed into a security gate at the FBI office this morning in Pittsburgh. No one was hurt. The FBI called it an act of terror. Now to the UK. CBS's Vicky Barker in London has more on President Trump's state visit.
President Trump's been met with unprecedented military pageantry for this unprecedented second state visit. He and First Lady Melania Trump getting a warm welcome from Prince William, Kate, King Charles, and Queen Camilla, all taking place deep within the confines of Windsor Castle amid ultra-tight security.
Georgia's Republican Secretary of State, who defied President Trump after the 2020 election, has new political plans.
Trump called Brad Raffensperger 2 months after the election, pressuring him to find 11,780 more votes so he could be declared the winner in Georgia over Joe Biden.
Fellas, I need 11,000 votes. Give me a break.
Trump threatened Raffensperger with criminal offenses. Raffensperger told 60 Minutes.
Maybe they were just trying to intimidate me and cajole me into something. It wasn't going to happen.
Today, Raffensperger announced he's running for governor of Georgia against fellow Republicans, Lieutenant Governor Burt Jones and Attorney General Chris Carr. Michael Wallace, CBS News.
The government's adding more questions to the civics test that applicants need to pass to become American citizens. Under this version, applicants need to study 128 questions about history and politics and answer 12 out of 20 correctly. Before it was 6 out of 10. Wall Street's right now the Dow is up more than 300 points. The S&P is lower. This is CBS News. Weight loss drugs may be getting good reviews, but they may not be the total answer for everyone.
A new study finds emotional eaters may not benefit as much from popular weight loss drugs like Ozempic, Wegovy, and Mounjaro. Scientists in Japan monitored more than 90 diabetes patients and found people who overeat because of the sight or smell of food do respond well to the drugs. The emotionally motivated, not as much. One of the study's authors says they may require additional behavioral or psychological will support. The researchers suggest doctors consider the reasons behind weight issues before they prescribe GLP-1s. Deborah Rodriguez, CBS News.
Costco shoppers in about a dozen states are being warned about bottles of Kirkland Signature Prosecco. The company's website says bottles could shatter without warning. They're being recalled. They were sold from late April through last month. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Fed Day is here. Welcome to the Wednesday edition as we count down to the big announcement on interest rates, the dot plot, of course, the news conference with no shortage of drama surrounding this whole affair today, as Bloomberg now reports the Treasury Secretary made a similar mortgage pledge as Fed Governor Lisa Cook, who, of course, the president wants fired. We're going to get the latest on that story from Bloomberg's Tyler Kendall. We'll have more on the Fed meeting today from Stuart Paul, who joins us live from Bloomberg Economics in New York. Democratic leaders on Capitol Hill unveil their counteroffer to Republicans' stopgap plan to avoid a shutdown. We're going to get into that and a lot more with Republican strategist Alex Conant of Firehouse Strategies, and it's all after a look at Wall Street. Let's get up to date on the trade. We set the baseline in the noontime hour here on the East Coast with John Tucker at World Headquarters in New York. John, it's your market.
Well, we can give you the update here. It's all going to change probably, Joe, as you know, in just a couple hours. For now, the Dow Jones Industrial Average up 322 points. S&P 500, that's down 7. The NASDAQ 100, 117 points lower. 8 of the 11 major industry groups in the S&P 500, they're higher. Consumer staples is in the lead, and then at the bottom of the barrel, information technology, think technology. This is the biggest drag, and that's home to NVIDIA, down about 3%. China telling companies don't buy some of NVIDIA's chips. And of course, as you mentioned, it's Fed Day. The betting is they'll go for a 1/4 point rate reduction. It's what's ahead. The projections we'll be listening for. Bank of America head of U.S. rate strategy telling us ahead of the Fed decision, this is what he's expecting.
We think the Fed at most is going to send a signal that they'll be cutting twice this year and only twice next year. So in relation to where the market is priced, we do think that that's going to come across as somewhat hawkish. We just think that the market, if they're looking for any justification that this is a Fed that's going to be cutting quickly, won't really get that through the mix of communications today.
And that's what Mark Cabana had to say. He's the Bank of America head of U.S. rates strategy. In the wake of the sudden collapse of subprime auto lender Tricolor Holdings, creditors across the U.S., they're scrambling to stake their claim on the company's remaining assets and contain their losses. In Dallas, regional banks have dispatched teams of employees to use car lots where they're trying to identify and whisk away to safe locations the vehicles they believe are the collateral. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. Balance of Power continues. Joe Matthew, back to you in Washington.
All right, nice to have you aboard. John Tucker, how about it? The building's going to shake at 731 Lexington Avenue right around 2 o'clock when the Fed drops its decision on interest rates. But our special coverage starts before then, 1:30 p.m. Eastern. The full surveillance crew will be here on Bloomberg for the latest. You know how we do this. We'll give you the half-hour walk-up. We'll have the announcement, and, of course, we'll bring you the news conference live. I just saw Michael McKee leaving the bureau here on his way over to the lockup, and I'm sure he's got a couple of good ones up his sleeve. That is not where we start, though. We're going to get there in a moment with Stuart Paul, because Bloomberg's got a screamer out this morning. Pretty remarkable stuff as President Trump moves to fire Lisa Cook, of course, the Fed governor, who is in the room right now sitting next to Stephen Meyer and trying to set the table, it seems, for an interest rate cut. And we're going to be talking about the Fed quite a bit today on this Wednesday edition, so settle in on Bloomberg Radio, satellite radio channel 121. On YouTube, you can watch us, search Bloomberg Business News Live, or on Bloomberg Originals, you can always watch the radio on TV. So Lisa Cook, remember, had 2 mortgages, they said. She claimed both to be primary residences, and that was going to be grounds, that's cause for her firing, referred to as mortgage fraud. Reporting from Bloomberg today suggests that Treasury Secretary Scott Bessent, not unlike Lisa Cook, also made contradictory mortgage pledges in a scenario that seems to be repeating itself all over the place. And I'm glad that Tyler is with us here. We pulled her over from the North Lawn of the White House to join us in studio. Great to see you. Is this basically the same drill that we saw from Lisa Cook?
Well, it's similar, Joe, according to these documents reviewed by Bloomberg News, but not identical.
Okay.
So if we back up, what's happening here is that according to these mortgage documents, it appears that the Treasury Secretary, Scott Bessent, had entered into this conflicting agreement where he agreed to occupy two different houses, one in Provincetown, Massachusetts, the other in Bedford Hills, New York, and listed them as his primary residence. This goes back to 2007, Joe. Two mortgages signed on the same day, issued by the same lender, Bank of America. And further evidence reviewed by Bloomberg finds that Bank of America never thought that Bessent was going to have both of these properties as his primary residences, right? They were signed on the exact same day. In fact, the experts that our colleagues spoke to for this story said that there's no wrongdoing here, but rather, as you're framing this, it does give us insight into how perhaps discrepancies on mortgage applications don't necessarily amount to fraud.
Right.
I do want to add, we did get a statement from Scott Bessent's lawyer. In fact, this lawyer had power of attorney. He was the one that ended up actually signing these documents in question. And he said that Bank of America was fully aware that the Massachusetts property was not a principal residence, waived any requirement that it would be used as such, going on to add, quote, that there was absolutely nothing improper about Mr. Bessent's loan applications with which he was minimally involved, as he had delegated the authority to that attorney.
Wow.
So an interesting situation here, to say the least, but of course getting attention because, much like Lisa Cook, there are some pretty striking similarities here, including that they had both ostensibly agreed to live in two residences full-time. But also that there's evidence that there wasn't intent to mislead anyone.
Sure, got it.
And we've really seen her lawyers, at least, hone in on that idea that if there were errors, they were clerical errors, there was no intent.
And to prove fraud, one must prove intent, right? As we've been repeating here. Well, I don't know where this is going. The administration is still moving to fire Lisa Cook, right? This hasn't changed anybody's mind.
Right, exactly. I mean, as of now, we're preparing for the White House to appeal the latest appeals court decision straight to the Supreme Court. Earlier this week, we saw an appeals court side with Lisa Cook, saying that she can retain her seat while the broader issue of her firing plays out in court. And I'll make an important distinction that we heard from this appeals court. 2-1 decision, majority going in Cook's favor, and the majority opinion said that President Trump very likely violated Lisa Cook's rights to due process, that she wasn't given enough time to respond to these allegations. The administration doesn't agree with that. They point to those 5 days between President Trump calling for her to resign, then posting that termination letter on Truth Social. But the majority opinion did not address this question of whether or not President Trump does have sufficient cause to fire Cook. And that is really what we need to be watching out for here as this goes forward, because that's what could really set a precedent for presidents and their attempts to remove officials at independent agencies, including the central bank.
Boy, it's quite a story here, and I encourage you to go read the full take on the terminal or online. You can find it at Bloomberg.com. It's being picked up everywhere here. Tyler, thank you for walking us through it with the latest on Scott Bessent's mortgage situation. You wonder how it might color the conversation around Lisa Cook's or others we've heard about potentially in the administration based on some reporting here. It may not change Donald Trump's mind on Lisa Cook, however. Be curious to see what Jay Powell is asked about all of this following the meeting. And I want to bring in Stuart Paul here for more on the actual job that lies before the Fed today. Bloomberg Economics U.S. economist with us live from World Headquarters in New York. Happy Fed Day, Stuart. I know that the world is expecting a quarter-point rate hike. That seems to be the anticlimactic finish here. But we've also got questions about the dot plot. And we've also got questions about the drama that we were just talking about. Why don't you start with the actual policy today? Is a quarter point in the bag?
Quarter point cut is in the bag. This is pretty widely anticipated. Powell opened the door wide when he spoke at Jackson Hole. And we have since heard multiple Fed speakers saying that it's time for policy to be recalibrated. Upside risk to inflation is fading, especially as the labor market slows. And I think that the bigger thing we're going to see today, Joe, is an updated dot plot, likely still showing 50 basis points of cuts for this year. We'll probably see some silent dissents which are dots that are not with the median. Instead, they'll probably just show that those members who put their dots on the dot plot want to remain at just one cut for the year instead of an additional cut likely in December. I think it's possible that we'll see 50 basis points of cuts when we see the 2026 dots, but right now the dot plot is just showing one 25 basis point cut. And other than that, we're sitting and waiting with bated breath for Chairman Powell's comments in the post-meeting press conference.
Yeah, we're just a little less than 2 hours away here. The bond market sees at least a half-point cut across the remaining portion of this year. Stuart, are we getting a little ahead of ourselves?
I think so. I think that odds still just favor 50 basis points of total cuts for this year. As you say, bond market expects a little bit more. I think part of it is just the expectation that with another voice at the table, Stephen Myron, there could be some folks who are swayed into cutting a little bit faster than economic conditions warrant. We're of the opinion that the labor market cooling is mostly behind us, and so the Fed will move tentatively and slowly, and we think most members of the committee will expect that. But we know what Stephen Myron is going to be arguing for. He's going to be arguing for swifter cuts. Now that he has a seat at the table, I think the bond market is anticipating that some voting members of the FOMC could get swayed to his position. And when it comes to managing risk, that's exactly what asset managers are doing.
Interesting. Talk to me about the news conference. This is going to go all over the place, I'm guessing, and well beyond interest rates. When you've got Stephen Myron and Lisa Cook emerging from this closed-door session, everybody's going to want to know what happened in the room, what the tone was like, whether anybody's getting fired. Will he answer any of those questions?
I think it's going to be really difficult for Chairman Powell to answer those questions directly. But then again, it's going to be almost impossible to fully dodge the onslaught of questions about the politics that the Fed has to manage. We're going to hear questions about political independence. I'm very confident that Chairman Powell is going to reply by saying the Fed is focused on the data. The Fed is focused on the data. The Fed is focused on the data. They're doing their best to cover their ears and stay insulated from the torrent of insults that have been thrown their way. What's going to be a little bit difficult is that, as we saw earlier this week, Lisa Cook is staying in her role. I think that that's good for the political independence of the Fed. Stephen Myron was sworn into his role, but instead of being sworn in by Chairman Powell, he was sworn in by a judge. That's going to open the door for questions about just how much of a coalition can be on the committee when, again, there's this political influence taking place.
All right, Stuart set the table for us. Stuart, Paul, Bloomberg Economics. If you were on YouTube, you would have seen Stuart in a hoodie. I'm Joe Matthew. This is Bloomberg.
자, 추세전환 충분히 가능하다고 판단되지만 추세전환이 이제 3시 기준금리 결정 이후에 전환될 수 있다고 판단되기 때문에 현재 진입권 3시까지 대응 열릴 수 있는 점 참고 부탁드리겠습니다.
And I'm John Tucker, in the Bloomberg News. With us, Bloomberg Business Flash. So ahead of the rate decision that we get at 2 o'clock Wall Street time, the major stock averages, right now, they continue to be mixed. So let's do the best performing stock in the S&P 500. We'll start there. Workday. Elliott Investment Management unveiling a $2 billion plus investment in the company. Shares of Workday right now up 7.1%. And then on the other side, the worst performing stock in the S&P 500, that belongs to Uber. Lyft and Alphabet's Waymo say they're expanding their fully autonomous ride-hailing partnership to Nashville next year. So that's more competition for Uber. Those shares down just about 5%. Internal Lyft, as a result of that announcement in Nashville, those shares, they're up 13% right now. Overall, the S&P 500, 10 points lower. That's down 0.2%. We're at 65.96 on the index. The Dow Jones Industrial Average is up 245, and the Nasdaq 100 right now, 115 points lower. That is down just about 0.5%. The average FICO score falling to 715 in April, from 717 a year earlier. This marks the second consecutive year-over-year drop. This is according to a report released today by Fair Isaac Corporation. Fair Isaac stands for, that's FICO, if you're keeping score. And Balance of Power continues with Joe Matthew.
John Tucker, many thanks. Great to have you in for Charlie Pellet. Do you use StubHub? I don't know if you're a concert guy, but are you like box office or nothing, or do you play with the secondary market? Because sometimes you show up late, you don't have a choice.
The last concert I think I went to was the Grateful Dead in 1968.
That's a good answer.
StubHub, by the way, still waiting for the first trade after the initial public offering. I don't know what's taken so long, but
I got news for you, man. We're off and running here. It's up 9%, as a matter of fact. Just started trading, which is why I'm looking at you.
You are more informed than I am.
Well, this is important to all of us at Bloomberg. 25.56 right now. It opened at 25.35, just above the IPO price of 23.50. There was no StubHub back then. I thought maybe you'd say Led Zeppelin or something. I didn't have you pegged for a deadhead.
Yeah. Oh, what are you kidding? Oh, by the way,
you and Jay Powell.
Up close to 9% StubHub in the early going.
Yeah.
It's
not going to the moon here, but we'll keep tabs on it. We're like, well, see if we're at 7%. John, thanks. We'll come back around about 15 minutes for more on the markets. From John Tucker, live in New York. I'm Joe Matthew in Washington, where we're counting down to a potential shutdown. You know that. The cable nets haven't started with the countdown clocks yet, right? So it's not really real until that happens. But whenever we talk to lawmakers here, and just in the past couple of days, it doesn't sound like we're close to something. Republicans put out their text for a clean CR yesterday. Democrats don't seem to be in the mood to have any of that, and they're preparing a counteroffer today that will likely include the extension of Obamacare subsidies. There might be more where that came from, maybe tinkering around with Medicaid following changes in the big, beautiful bill. Speaker of the House is ready for it. Mike Johnson talked about it just yesterday. Listen.
Predictably and unfortunately, there are some Democrats who are openly pining for a government shutdown. In spite of this obvious and necessary step, they're grasping for straws as a party, and so some of them apparently believe that shutting down the government will be some sort of life raft for them so they can regain the support of the American people. I just think that is a fool's gambit.
A fool's gambit. Alex Conant, tell us if this is true. The Republican strategist principal at Firehouse Strategies is back here in our D.C. bureau. You've seen this movie so many times, it almost feels silly to talk about it until like the day before.
Right.
But, I mean, lawmakers don't have time for a shutdown on either side of the aisle, do they?
Well, certainly Republicans don't. I mean, I think Republicans really want to enact Donald Trump's agenda, and having the government shut down is just a huge short-term distraction for that, which is why they've effectively already conceded this fight by saying we will do a clean CR. Traditionally, conservatives hate clean CRs, especially CRs that continue the funding at Biden levels of funding. I mean, we're basically continuing Biden's fiscal policies with the CR. They've conceded that. They're like, we'll do this for another 6 weeks. The Democrats are feeling so much pressure from their base that they have to make Donald Trump fight. They have to make Donald Trump lose, suffer. And so they're coming up with these things that they want to include in the CR that Republicans are never going to agree to. Ironically, they're related to Obamacare.
Yeah.
I worked in the Senate when we were in the minority and Obama was president. And we shut down the government over Obamacare stuff. And I remember very vividly going into that fight saying, there is no way we win this fight. Wow. It's going to cost a lot of political capital, but our base is demanding it. So we shut down the government, and a couple weeks later, we relented. The government reopened. It was a big win for Obama. I think the Democrats are setting themselves up for a similar failure here, where they could very well shut down the government in a few weeks, making unreasonable demands on Trump. The public is not going to go along with them on this, and they'll eventually concede. The only way that doesn't happen is if the moderates in the Senate, of which there's a handful of Democrats, don't realize that this is a political loser and agree to break with Schumer and keep the government open, which I think is a real possibility.
Secretary Kennedy demanded.
The idea of extending Obamacare tax credits is something that can be handled at some point between now and the end of the year.
Right.
The CR ends Thanksgiving. Mike Johnson this morning said, a policy debate at the end of December has nothing to do with a funding proposition in September.
Right.
That type of messaging might make some sense to people, but would that suggest that there is a concerted debate over Obamacare?
Oh, I think there absolutely is.
Subsidies?
I think that there are a lot of Republicans in the House and the Senate who are concerned about ending these subsidies going into
because you know how that polls.
Of course,
it's brutal.
Like, whenever you take something away from somebody, that's going to be unpopular. And so I think that there are a lot of Republicans in both the House and the Senate. While they don't like these tax extenders, they're not really looking, or these tax credits, they're not looking to cut them going into a midterm cycle. So I think there is interest in extending them. They just really don't want to do it as part of a standalone CR. They want it to be done in the context of funding the overall government.
Got it.
So I do think that this is going to be on the table this fall. Look, whatever happens the next couple of weeks here with the government, with whether or not we shut down the government, there is going to be a big funding fight before the end of the year. And you're going to have healthcare drawn into it. You're going to, including these Obamacare tax extenders. There's going to be a lot on the plate. And so I think this is not the fight, right? This is the fight.
You're
not scheduling the ski vacation for Christmas, it sounds like.
Yeah, I mean, we could very well be here on Christmas Eve.
Yeah, it sounds like
which it would not be unprecedented.
You've done it before, no doubt.
Exactly.
Interesting conversation with Senator Fetterman, of course, a Democrat from Pennsylvania, who's on with Brett Baer on Fox News talking about all that. Let's listen to what he said.
I absolutely fully support extending the tax credits for the ACA, but I refuse absolutely to vote for anything whether that's to shut our government down. You know, I can agree and strongly believe in something, but that it's unacceptable to hold the government, you know, opening or closing as a hostage, and I refuse to be part of it. So that's going to be where we're at, and I've been very clear on that.
Is John Fetterman actually on the leading edge, or will he end up being for Democrats?
Fetterman represents that moderate bloc. Now he's obviously the most vocal and outspoken of them, but there are a handful of moderates in Senate Democrats that are facing re-elections in the next few years that just aren't looking to shut down the government over a fight that they know that they can't win. If you've been in the Senate for a long time, you know the minority always loses these shutdown fights, especially when they're the ones making demands. Look, this is a political loser for them. I think Fetterman recognizes it. I think a lot of them recognize it, but they feel the pressure from the debate to at least show some fight. I've been there. I understand the pressure that they're feeling. And it's hard to tell your base that they're wrong, but their base is wrong.
Interesting. The conversations, I can only assume in the coming days, are going to decide this, right? You've got another week off essentially with holidays next week, and then when they come back, they'll have like 3 days to figure this out.
The Republicans are going to push forward the clean CR. It's going to pass the House. You know, Trump might have to twist a couple of arms amongst Republicans, but it'll pass the House. They'll bring it to the Senate floor, and then we'll see if the Democrats blink or not.
Okay. There is a backdrop here of corrosion in relationships on Capitol Hill between Democrats and Republicans, just like we're seeing nationally following the shooting of Charlie Kirk. And I wonder where your head is. I think we all consider you a pretty balanced, moderate guy yourself, an old line Republican. Maybe you can check that. I know you want me to call you a conservative Republican.
Yeah.
But a conservative maybe in an older sense, if you know what I'm saying here. When it comes to Republican politics, the blame game that's going on right now is one we can all probably agree is pretty dangerous. I just wonder how it impacts policy making. There's a dual censure effort underway against Ilhan Omar right now. Maybe that takes out some of the poison on the floor, but where's the catharsis here? How do we get around it?
Look, I've been working in politics my entire adult life, worked on lots of presidential campaigns, Bush White House, the Senate, lots of presidential campaigns. And you're right. Like this is not just happened in the last week. It's not Donald Trump's fault. This is the rhetoric, the personal nature of politics has been getting exponentially worse for the last 20 years. And I don't know how it turns around. I don't know what would cause it to turn around. But clearly, last week was, just poured fuel on a fire.
Feels like a new low.
Yes, and I think for a lot of conservatives who have felt targeted, it became incredibly personal. And, I think a lot of Democrats, not all of them, I think most Democrats' response was totally appropriate, but obviously some of them weren't. And I think they're feeling the backlash now. Where this goes, I don't know. The future is very hard to predict, but clearly it's a very toxic environment, and it does make governing harder, right? Like when both sides are have made the debate as personal as it is, it's just harder for lawmakers to craft bipartisan policy, because at the end of the day, to craft lasting policies in this country, you need bipartisan support, and that's really hard to do at this moment.
You remember the Capitol Hill shooting back in 1999, I believe it was.
Yeah.
That really shook the Capitol, shook the city. We weren't really used to. Anybody could walk in the Capitol back then. Remember, you could go to anybody's office. Didn't even need a chaperone or a badge or a credential at that point. And that was the beginning of the change. Things tightened up a lot more after 9/11,
A lot more security, yeah.
But what do we need now? Do lawmakers need details? That's what they're talking about this week.
I think that's totally appropriate.
Yeah.
I mean, I think, look, there's a lot of crazy people in this country and a lot of angry people in this country.
Yes.
And so...
would you put your candidate in an outdoor event if you were on the trail?
I know a lot of people in public life, and they're scared, right? Like they're like the environment is very toxic right now, and so I think the minimum we can do is make sure that our public leaders are safe.
Does this require leadership on a political level to get us out of this, to get us to a different tone and a different conversation, or is it something, I guess, more bleak than that? That in 2 or 3 weeks, everybody moves on, the news cycle churns, and we're not talking about it anymore.
Well, it's a chicken and an egg argument, right?
Yeah.
Like I think leaders reflect the public opinion, and so look, Donald Trump was elected because that's who Republicans want as their leader.
Sure.
And you look at the sorts of Democrats that are being nominated right now in state and local elections. That's where the Democratic Party is headed as well. This is like we're getting the leaders that we voted for. And so I think it's a bit of so obviously I think national leadership can help set the tone for environments, but at the end of the day, that national leadership's, I think, reflecting the broader public sentiment. In
the meantime, we're at the beginning of what looks like a spiral of 5-year gerrymandering here. Is the redrawing of congressional maps and the positioning we're seeing Democrats and Republicans only going to make the partisanship more extreme?
I think it's going to be interesting to see how this plays out. I mean, ironically, what we're doing is making a lot of these districts way more competitive. You're taking very safe Democratic districts and turning them more purple, and the way you do that is by taking very safe Republican districts and turning them more purple. Right. Both parties here are gambling that the political environment is going to be very good for them next year.
Yeah, how true.
But if it's not, this could backlash on one of the parties. So if at the end of the day we get a lot more purple districts, that's not necessarily a bad thing.
So we're back to dummy mandering or something like that in the meantime.
We'll see.
This is why people hire Alex Conant. Great to have you back. Thank you. Firehouse Strategies, live with us in Washington, D.C. We'll assemble our panel next. Rick Davis and Jeannie Shanzano up next on Bloomberg.
현재진입권 약 1시간 뒤에 있을 금리 결정까지 지켜보도록 하겠습니다. 금리 결정은 거의 확실시된 상황이기 때문에 잠시 후 1시간 약 20분 뒤에 있을 금리 결정까지 현재진입권 대응 이어나가도록 하겠습니다.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start with the shares of the ticket platform StubHub. After their initial public offering, 64 cents higher right now for shares of StubHub. Another IPO, $23.53 to trade right now. So it's not to the moon, but they're still up. The New York-based company is selling 34 million shares. It was priced at $23.50 after marketing them for $22 to $25. That was the initial range. Of course, the Federal Open Market Committee, the Fed, widely expected to lower rates by 25 basis points today. That's a quarter of a point cut for those of you who don't speak Fed speak. In the new dot plot, that would be the summary of economic projections. The median should show about 0.5% of cuts this year, 0.5% to more. That is according to Bloomberg Economics. Sarah House, Wells Fargo senior economist, tells us, let's not forget, it's not just the jobs market that the Fed should be focusing upon.
So I still think that we have some room for inflation to move higher. That's coming largely from the goods sector, but also the fact that services disinflation has at least temporarily stalled in our view after a pretty swift slowing in the first half.
And Gemini Space Station, this is the company founded by the Winklevoss twins. The share is extending declines today. Right now, shares of Gemini down close to 13%, falling below its initial public offering price within days of debuting as a public company in the U.S., tracking some of the cryptocurrency-related stocks lower as well. Once again, the S&P 500, 16 points lower, 65.90 on the index. The Dow Jones Industrial Average up 230 points. The NASDAQ 100 right now down 147 points. And we continue. Joe Matthew, balance of power. I would love to be a fly on the wall of this Fed meeting today.
Can you imagine? Michael McKee was telling us yesterday it's entirely possible that Lisa Cook and Stephen Myron are sitting shoulder to shoulder, like actually at the seats right next to one another, because it's based on seniority where you sit around the table. So how about that for a little awkwardness?
That's a big table. Is it the Eccles building? Yeah. I mean, the Eccles building is undergoing the renovation. Is that where they're meeting?
Correct.
Or maybe it's across the street. Anyway.
I think they're in that Hart building behind it, because, Eccles building's like a bunch of cranes and plywood right now, as you saw when the president went there himself.
I mean,
John Tucker.
They're all professionals, no fisticuffs.
No, I bet there's no fighting. Actually, I don't look. It's a pretty close club, right? Maybe they close the doors, everybody gets along. It's a very small circle. John Tucker will have more on the markets for us, by the way, at 1 o'clock. At the top of the hour, as we get ever closer to the Fed decision. That'll be at 2, but our special coverage begins at 1:30 here. Yeah, that's right. Producer James, you save the fighting for Scott Besson. This program is produced by America's producer, James Mahoney, and a team of workers behind him on this Wednesday in Washington. I'll tell you something. You talk about Washington, D.C., they call it Hollywood for ugly people. And what they're doing today on Capitol Hill might bring us a little bit closer to L.A. Don't stop me when there's a car chase on TV. You know, this is pretty good stuff for ratings, and we might have more of them around here, it looks like, as the House considers legislation related, once again, to crime in the District of Columbia, including today a measure authorizing the Washington, D.C. Police Department to again engage in car chases. Then again, since it takes me about an hour to drive 9 miles home, I'm not sure they're going to get very far if they try to outrun the police. Also happening on Capitol Hill today, a series of hearings. We had Kash Patel yesterday, director of the FBI, back today for round 2. But so too is the former director of the CDC, the one who was fired by RFK Jr. This is Susan Monterez, former head of the Centers for Disease Control and Prevention, for basically an oversight hearing, if you will, by the Senate Committee on Health, Education, Labor, and Pensions. They call it the Health Committee. They call it HELP. It's been a couple of weeks since she's been fired, and the chair of this committee, a physician by the name of Bill Cassidy, the senator from Louisiana, has been on this program before, not real happy about the way this played out. And so it was a pretty interesting conversation. Monterez opened with some of these remarks. Let's listen.
Secretary Kennedy demanded 2 things of me that were inconsistent with my oath of office and the ethics required of a public official. He directed me to commit in advance to approving every ACIP recommendation, regardless of the scientific evidence. He also directed me to dismiss career officials responsible for vaccine policy without cause. He said if I was unwilling to do both, I should resign. I responded that I could not pre-approve recommendations without reviewing the evidence, and I had no basis to fire scientific experts.
Pretty wild stuff. Monterez says Kennedy became very upset, attacked the CDC as corrupt, saying that employees were responsible for, quote, killing children, unquote. Not sure what this hearing leads to, but this is an interesting moment in Washington that we play before our panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us right now. Jeannie is, of course, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, Bill Cassidy feels like some promises were made in RFK Jr.'s confirmation hearing, and they have since been broken. Is there any recourse that came from this hearing today?
First, Joe, I have to say that America is demanding that America's producer get on camera so we can see James, the great James. So
I've been working on that for a long time. I'll stay at it.
I know you have.
He's the man behind the curtain, Jeannie.
He is the great wizard. You know, it was quite a hearing. It is still going on. When I came on here, and you know, some really dire information came out. At one point, the question was, is there anybody left at the CDC who is not a political appointee? In other words, a scientist, a physician, somebody who is apolitical and a career official? And the answer was no. You know, we heard about the health secretary trying to gag the head of the CDC, angry that she would dare to talk to the senators or communicate with the senators who confirmed her. So much for radical transparency. And both of the witnesses were asked about their worst nightmare and what keeps them up at night. And they talked about the for what can happen. And of course, we all just experienced COVID, so a lot can happen. And then I think the worst part is that Americans are being left with a lot of questions about vaccines. And there is no question that vaccines have saved millions and millions of lives. And all of that is being questioned today, and a lot of distrust out there, hence the gunman we saw not that long ago.
Yeah. Well, I'll tell you what, Secretary Kennedy has a friend in Rand Paul, the senator from Kentucky, went toe-to-toe with Monterez about the safety and effectiveness of COVID vaccines as part of this hearing, and in fact tweeted about this. Kennedy on X after thanked Rand Paul for this exchange. Let's watch and listen.
Does the COVID vaccine prevent transmission?
The COVID vaccine can reduce viral load in individuals who are
Does it prevent transmission?
When you have reduced viral load, you will have reduced transmission.
But in other words, it doesn't prevent transmission. You can still transmit the virus if you've had the vaccine. Does the COVID vaccine reduce hospitalization for children under 18?
It can.
It doesn't. The statistics are inconclusive, and the reason you can't prove that it does is there's so few people under 18 that go to the hospital. Does the COVID vaccine reduce the rate of death for children under 18?
It can.
Once again, it can. That's a ridiculous answer. No, it doesn't, and there is no statistical evidence that it does reduce the death rate.
There you have it. Of course, an ophthalmologist, Dr. Rand Paul. Rick Davis, what do you think about the back and forth here today, and should Americans expect anything to come from it?
Yeah, it was pretty much an opportunity for everybody to exercise their preconceived attitudes. One, as you point out, toward COVID. I mean, the Republicans have had a burn their saddle on COVID for a long time, which is ironic because if it was the Donald Trump administration that was able to find the vaccine, produce it, and distribute it in an almost Herculean way to the entire world. You'd think that we'd all be taking credit for that and not undermining the success of one of our greatest accomplishments. So in addition to that, I think the politicalization of these institutions was on the hot seat today. And it echoes a lot of other hearings. You mentioned that the FBI Director Kash Patel is on his second day. I would say almost half the questions associated with him is the politicalization of the FBI and promises he made in confirmation that he's not keeping. By the way, promises that Secretary Kennedy made to senators like Cassidy that weren't kept on keeping his hands off of vaccine policy. So promises made, promises not kept is kind of the theme this week in Washington.
Wow. Well, that's saying a lot, Rick. Jeannie, it's not just today. Something really important is going to happen tomorrow in Atlanta. And this is one reason why Senator Bill Cassidy is upset. The vaccine advisory panel that RFK Jr. has repopulated with people who in many cases doubt vaccines or are skeptical of the vaccine program. They start 2 days of meetings that could potentially change recommendations on vaccines for not only COVID, but hepatitis B and chicken pox. Bill Cassidy requested when the firings on this panel took place that this meeting be postponed. Jeannie, they're doing it anyway. Does Congress just not matter?
It is. That's been the frustration, I think, of many people during this Trump 2.0 administration, and even going back a little bit earlier, but certainly in this administration, that the administration and people in the executive branch are plowing ahead, and Congress certainly can assert itself if it chooses to, but the problem is it has not. And on the issue of this meeting, it is critically important. You know, Dr. Menares said today she was open to changing the schedule for childhood vaccines if there was data and science behind it. Her problem was that the health secretary asked her to preemptively agree that she would take the recommendations before they came out, before the meeting was held, regardless of the science. And of course, that would be, something that no scientist could do and no public officials should do. And so that is the problem here. And, Kennedy is somebody who described the COVID vaccine as the deadliest ever made. That is absolutely factually untrue. He is a longtime vaccine skeptic. And the reality is that certainly if science leads you in a new direction, you follow it. But the reality is that vaccines have saved millions of lives, trillions of dollars, and millions of hospitalizations in the United States and around the world. And so this idea that we should all be skeptical of vaccinations is going to lead to death. And that is where we are in this country, and Congress should step up. And Senator Cassidy should be deeply alarmed by what's going on.
He's got to worry about re-election, right, Rick? I don't know what Senator Cassidy can do or will want to do here, but you bring up a pretty good point about Operation Warp Speed. At what point does President Trump tire of this conversation as it runs against one of the great accomplishments of his first term?
It's a little bit baffling to a lot of people around Donald Trump, as his supporters and folks in his administration. Donald Trump cut a deal with, Bobby Kennedy to give him authority over health policy in the United States if he endorsed him. I mean, Kennedy has said that repeatedly. I'm not making this up.
Wow, yeah.
And so that's what he's getting. And Donald Trump got the advantage of having the Maha movement sign on 100%, helped him win the election, and now it's Kennedy's job to rule, even if he undermines some of the great accomplishments of Donald Trump's first term. I would say in Cassidy's case, there's actually a direct application of harm. There is an outbreak of whooping cough disease in Louisiana right now. And you're right, he wants to get reelected. What's he got to do? He's got to make sure that doesn't spread any further than it already is. And he could not get any kind of satisfaction from the health secretary on attacking that, with a more aggressive vaccine policy. And so, whether it's measles or whooping cough, these are what's affecting people's lives today, and it's going to affect his reelection if he's not careful.
I talk about local politics. It's really just amazing stuff. Rick Davis and Jeannie Shanzano, great conversation. Thank you. Our great panel will be back in hour 2, both of our politics contributors, as we get ever closer to our special Fed coverage. Coming up on the 1 o'clock hour on the East Coast, that means we're 1 hour away from an announcement on interest rates. This is Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
We'll know 1 hour from now. Welcome to the Fed Day edition of Balance of Power as we count down to the big announcement on interest rates, of course, the dot plot, and then the news conference that will follow with high political drama surrounding all of it today in Washington. Thanks for being with us. I'm Joe Matthew alongside Kriti Gupta in for Kaylee today in Washington. Kriti, a quarter point seems to be the expectation here. That won't really be the news. Dot plot will be interesting, but also the news conference following with news today that Treasury Secretary Scott Bessent, this is Bloomberg reporting, may have had similar complications with mortgage applications to Governor Lisa Cook.
We'll see if any comments are even made on that. The comment itself might just be no comment. I think what's going to be interesting about the rate decision is whether we get a dissenter. Is 50 basis points on the table? Is Stephen Myron that 50 basis points? Who knows?
There'll be questions, too, I'm sure, about the tone and tenor in the room as Lisa Cook and Stephen Myron sit together. We're going to get to this in just a moment and have more with our political panel, Rick Davis and Jeannie Shanzano, as well a conversation with economist Emily Dickens, who's going to be with us a bit later in the hour. But we also have our eyes on the UK right now, technically home for you, where President Trump and the First Lady have just landed for a unprecedented second state visit.
I think he just doesn't want to be around me. He went when I came. We're ships in the night, it seems, but plenty on his agenda, so he wouldn't have had time for me
That's true. Yeah, it's more of the pomp today and the policy, I guess, tomorrow when he gets to checkers with the Prime Minister. But Bloomberg's Anne-Marie Hordern is traveling with the President, and we'll have a live report for us coming up from the UK. It's all after a look at Wall Street. Let's set the baseline right now ahead of the rate decision in 1 hour. John Tucker in for Charlie Pellet in New York. John, how's it look?
Mixed right now, at least as far as the major averages are concerned. Let me start with this because this is interesting. StubHub Holdings, the ticketing platform, it did raise $800 million in the initial public offering, priced in the middle of the market range at $23.50, and it's now trading this afternoon, and it's moved lower from where it was priced, down just about 1.8% in the early going, the first day of trading for this stock. And as we wait for the Fed decision, 2 p.m. Wall Street time, again, the major stock averages are mixed. S&P 500 down 14 points, and that is a decline of 0.2%. We're at 65.91 on the index. The Dow's up 199 points, a rise of 0.4%. The NASDAQ 100 down 132 points. That is a decline of 0.5%. And as we wait for the Fed decision, 2 p.m. Wall Street time, as Kriti mentioned, it's kind of written in stone at this point. We're expecting at least a 0.25% rate reduction. Ahead of that, also the more policy reactive Treasury, the 2-year yield, that's up 4 basis points. That is at 3.54. General Mills, they make Lucky Charms, those shares falling 0.7%, even after the company reported adjusted earnings per share for the fiscal first quarter that topped estimates. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Balance of Power continues. Joe Matthew and Kriti Gupta. Happy Fed Day.
Yeah, you too. Don't mess with the Lucky Charms. John Tucker in for Charlie Pellet. Thank you, sir, as always. And we'll have another update on the markets in about 20 minutes, with John keeping his eye on things as we talk politics here in Washington. We will then hand things over to our Fed special starting at 1:30 p.m. Eastern. So keep it right here on Bloomberg TV and radio. We have a lot to learn over the next couple of hours, and we're going to start in the UK, where President Trump and the First Lady are now embarking on a full day of pomp and circumstance, having arrived last evening for an unprecedented second state visit. Traveling with the president, Bloomberg's Anne-Marie Hordern, who joins us from Windsor Castle. Anne-Marie, how's it going so far?
Well, there's been a lot of pomp and circumstance, as you say, Joe. A ton of theater on display today between a flyover, a luncheon with the royal family, as well as laying a wreath at the tomb of late Queen Elizabeth, who, of course, the president met on his first state visit to the United Kingdom in 2019. Before departing, the president did say outside the White House that it is unprecedented that he got this honor to come back to the United Kingdom for a state visit. He also talked about how last time it was at Buckingham Palace in the center of London, and this time it's outside the city in Windsor. And he called this setting really the ultimate setting. So the president is very excited about this visit. He said he was going to visit his friend, saying that he has had a decades-long relationship with King Charles. We should also note that slowly the state visit will start to feel a little bit more substantive on the economic business front. This evening, when the president attends the banquet, he's going to be flanked by a number of American executives, the likes of Larry Fink, tech executives like Jensen Huang. Notably, reports that Tim Cook of Apple also going to be one of those individuals attending the state banquet at Windsor Castle today. That is really notable because, of course, he was absent when the president made that trip to the Middle East, and the president made sure everyone was aware, kept bringing it up, that Tim Cook did not join him on that state visit, and he's going to be there for this evening. And then, of course, tomorrow he'll be sitting down with Prime Minister Keir Starmer, where there'll be a lot more discussions about a host of issues.
Anne-Marie, outside of the agenda that you've just laid out, outside of the very warm welcome that we were just showing our television audience and our YouTube audience on the screen there, he wasn't necessarily welcomed just with that. There were plenty of protests, I believe, on the scene as well. Walk us through what we know there.
Well, last night what we saw projected onto the walls of Windsor Castle, this 11th century castle, was a photo of President Donald Trump and the late sex offender Jeffrey Epstein. There was also protesters that had a tennis court-sized banner outside the castle of the two as well. So there have been moments of protests and individuals using pictures to protest for the President of the United States coming here, especially with a hot topic in the United Kingdom, such as Jeffrey Epstein, given the fact that the third departure in just 2 weeks was British ambassador to the United States, Lord Peter Mandelson, after the revelations in Bloomberg News emails about his close relationship with Jeffrey Epstein. So this can make quite an awkward moment, of course, as well as Jeffrey Epstein's relationship with, as well, one of the individuals, Andrew, in the royal family. But we should also note, because I've been outside the castle the entire day, there also have been individuals here excited for President Trump to visit. So it has been a mixed bag. I saw a lot of Make America Great hats, other hats that said Trump was right about everything, and T-shirts, some dogs walking around with MAGA wear as well. So I would say there has been some mixed responses right outside the castle gates.
Well, that's fair reporting, Anne-Marie. Just quickly, do we know if there's going to be a bilateral news conference? Are these two going to take questions from the media tomorrow? There was some concerns that Epstein would be a featured topic. Do we know if that'll happen?
Well, at the moment, we are expecting both of these leaders, Prime Minister Keir Starmer and President Donald Trump, to address the press tomorrow after they have a bilateral meeting at the Prime Minister's country estate in Chequers. We should note the president is walking into a very different political environment right now in the United Kingdom than it was 7 months ago when Keir Starmer visited Washington, D.C. and handed the president this letter from King Charles inviting him on this unprecedented state visit. You have a prime minister who has been dealt a number of blows over the course of the last 2 weeks. He is absolutely floundering in the polls. One recent YouGov poll has his favorability just at 22%, one of the worst favorabilities we have in all of Western European leaders. So he is really struggling right now. So for Keir Starmer, it couldn't have been a worse time for this state visit to happen, even though 7 months ago, a lot of onlookers were saying, look, this was a very clever diplomatic move for the UK government to pull out, because what happened after that? The United Kingdom was jumped to the top of the queue when it comes to the trade relationship. I was in the Oval Office in May when the president was on speakerphone with the prime minister announcing the trade agreement, which they then signed on the sidelines of the G7. But it's a completely different political environment right now for the prime minister, and really not the most opportune moment for him to have this state visit with the president of the United States.
Anne-Marie, it's great to have you with us from Windsor Castle Live, Bloomberg's Anne-Marie Hordern, who we'll be hearing more from over the course of this visit. Again, the President and First Lady will be there through tomorrow. We want to assemble our political panel for more on this and the other stories we're tracking today in Washington. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, our Republican strategist and partner at Stone Court Capital. Rick, would you have the president hold the news conference? You saw those images of Jeffrey Epstein projected on the massive tower at Windsor Castle last evening. It's a conversation the administration would prefer not to have. Can you trust the British press, never mind the Americans, to keep that quiet?
Yeah, I think I think that the Prime Minister is just as concerned about having to answer questions. As Anne-Marie pointed out, he's just lost his U.S. ambassador, Peter Mandelson, to some of the scandal. But yeah, I mean, obviously that's what they're going to try to avoid. Donald Trump's pretty good about wandering around in an answer to keep it from becoming a dominant theme. And his traveling press will be also looking for opportunities to curry favor with the president. And so it's not likely to be a major topic. And there are interesting things, you know, whether it's what's the standing currently of negotiations for ending the war in Ukraine, to what's happening in Gaza, to immigration. They just had a massive rally opposed to immigration in downtown London. The visuals were amazing. I'd expect that to be right down the center for Donald Trump to want to take a swing at. So yeah, there's going to be an interesting opportunity to hear exactly how these two politicians, under siege a little bit in both their countries, are reacting to the world events.
Well, Jeannie, weigh in here. I mean, we know Rick just mentioned those immigration protests as well. There were some questions around free speech and the enforcement of free speech around that as well. Something J.D. Vance has previously brought up in London. From your perspective, what might we hear when it comes to a relationship, a transatlantic alliance that could potentially see some strain this week?
Sorry, can you hear me now, Creedy? Sorry about that.
We absolutely can't. Go for it, Jeannie.
So for all the pageantry and the beautiful pictures that we're seeing, and you know, you were just talking and Rick was just talking about this Robinson-led protest, which was, I believe, the largest far-right demonstration in UK history. And who was there to speak, at least via virtually, was Elon Musk. And what did he say? He said, whether you choose violence or not, violence is coming for you. And of course, the Prime Minister condemned those remarks. But that is quite a stark reminder of this split screen that the people of Great Britain are seeing, and of course, Americans are seeing. While the president is enjoying all this pageantry, there is the split screen of the Kirk assassination, issues surrounding hate speech and free speech, what's happening to public health in this country. And even the president this morning out on social media ranting against the far left. And so I think there's something almost unbelievable for a viewer watching all of this. It just all doesn't seem to add up. And the real question is, when they get down to policy, where are they on Ukraine? Where are they on the Middle East? Where are they on immigration? Where are they on tariffs? And what do they do with the likes of the wealthiest man in the world who's going out talking about violence coming for you to the people of Great Britain?
Rick, the idea that we've got executives along for the ride again tells you what about the president? Is this just the go forward when it comes to international travel?
Absolutely. You know, he is trying to basically run a mercantile government where we're out there promoting U.S. businesses and we're demanding that if you want to do business with the U.S., you have to basically become a U.S. business. And you know, companies all over the country have made common cause with that. And they realize not just because the federal government is a massive customer and in some cases now making investments in their businesses, it does you no good to ruffle the feathers of Donald Trump and the environment that Trump has created with the tariff regime has made it even more important to be in good stead with the government in order to get carve-outs when you need them. So if Donald Trump says, hey, the posse is going to Great Britain, I think they're going to saddle up and head in his direction.
But Rick, what about the regulation question here? I mean, famously, a lot of these international companies that have tried to do acquisitions, that have tried to really embrace some of the loosening of regulatory scrutiny from Washington, have found a lot of pushback in the UK. I'll give you an example. Microsoft's takeover of Activision was really given clearance in the States, was pushed back very aggressively in the UK. This has been a sticking point in trade negotiations. Do you think this is the moment where they might make some progress on that kind of stuff?
I think that there'll probably be a thorough conversation about European reform, both from the commercial sector, but also from the military sector. What are you doing to put more pressure on the Russians? You saw Donald Trump in advance of this trip start talking about how the Europeans need to match what he's willing to do and, stop buying Russian oil. I have no doubt that conversations will take place, even if it's at the Scott Bessent level, around liberalization of rules governing mergers and acquisitions. As you point out, banking. Europe has a very protective banking sector. We know from people like Jamie Dimon in the past at JP Morgan that they'd love to have a better presence in Europe. So, yeah, I think there's going to be a fulsome, certainly staff level conversation about some of these reforms. And I think Europe has learned that they need to engage with the Trump administration and find common cause in some of these things, because otherwise, you're just going to be held over the barrel when it comes to future negotiations.
Jeannie, President Trump and the First Lady are overseas while some pretty high drama, political drama, I should say, unfolds here in the nation's capital, all waiting for him when he gets back, not the least of which is a potential government shutdown. A week from now, we've got the Jeffrey Epstein affair that seems to have followed him to Britain, and any number of other stories that he's going to have to deal with, including just a day or two after he gets back, the funeral for Charlie Kirk in Arizona. He's going to sit down today with Fox News for an interview. Apparently, a couple of hours from now, we'll hear some of his remarks. And I don't know if all of these stories are going to factor into it, but what do you make of the timing while we watch him take a ride in a carriage with the king and salute the troops, watch the flyovers, and spend the day at Windsor Castle? What's the sort of storyline, if you will, that's going to be waiting for him when he gets back home?
I think the big story is how much this is just a cognitive dissonance for anybody watching this, and what the president can do to address some of these issues. He has gone abroad. We've seen this in the modern presidency. Presidents go abroad and oftentimes, like he is, enjoy this type of pageantry. But the reality is, for Donald Trump, he has so many challenges at home, from the budget to political violence to healthcare. I mean, the list goes on. And then you look abroad, almost everything he promised to do has not been done as you look abroad, including, importantly for the Europeans, what's going on in Ukraine. So these are all issues that are waiting for him. And I would hope that the anchors or the reporters who are talking to him from Fox ask him about all of these. But the last time he sat down with them, much of his rhetoric was particularly inflamed, finding an enemy on the left that he could point to and blame for what is happening. And that is not going to do much to address any of these situations. And indeed, it makes the challenge of political violence worse.
Well, we'll see if he's going to be watching what comes out of the Federal Reserve today. Maybe we'll get some truths from the UK. Jeannie Shanzano and Rick Davis, thank you so much. Bloomberg Politics contributors on our panel today. On our Fed Day, in fact, just about 10 minutes from now, a little more than that, we're going to start our special Fed coverage live from New York alongside Preeti Gupta. I'm Joe Matthew in Washington. We'll have more from our panel tomorrow here on Balance of Power. In the meantime, we turn our attention to the matter at hand, the Federal Reserve. It's all next on Bloomberg.
자, 현재로서는 금일 마지막 확실한 상승의 이유인 금리 결정까지 지켜봐야 한다고 판단이 됩니다. 자, 금리 결정까지 40분 앞두고 있고요. 지켜보고 대응해 나가도록 하겠습니다. (3시) 이후 이전 트레이딩 사인에 집중 부탁드리도록 하겠습니다. 약 앞으로 40분 뒤 금리 발표될 예정입니다.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages, they're mixed ahead of the Fed decision. You have 7 of the 11 major industry groups in the S&P 500 higher. Consumer staples, they're outperforming right now. Now, the biggest drag that's coming from information technology, and that is home to shares of NVIDIA. The stock has the biggest weighting in the index. It's down almost 3%. China banning the sale of an NVIDIA chip to companies in China. Uber, the worst performing individual stock in the index, down right now just about over 5%. It's facing competition from Lyft and Waymo. Those two are teaming up to offer driverless rides in Nashville next year. Lyft getting a lift, almost 13% higher right now, 12% make it. And after its initial public offering of the first day of trading for the ticket platform StubHub, priced at $23.50 a share. Right now it's down 58 cents a share, so that would be down just about 2.5%. S&P 500 down 13 points. The Dow's up 218 points. The NASDAQ 100 down 126 points. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Balance of Power continues now with Joe and Critty.
All right, John Tucker, many thanks for being with us today. John will be watching markets following the Federal Reserve special here, so a lot could happen in the next little bit. Just about 7 minutes from now, we'll be throwing things back to New York for our special Fed coverage, The Fed Decides. I'm Joe Matthew alongside Kriti Gupta in Washington. It's interesting as we consider the dual mandate of the Fed today, Kriti. It's really the weakness that we've been seeing in the job market that brought us to this point.
That's coming into direct conflict with the other mandate, which is keeping prices stable. If the job market's showing weakness, you address that now. Does that decision haunt you 6 months from now when prices maybe aren't as stable as they are right now?
But could be a question posed to Jay Powell in the news conference a bit later, which of course we'll also bring to you live here on Bloomberg TV and radio. It's a great opportunity to introduce Emily Dickens. We've been looking forward to talking with the Chief of Staff, Head of Government Affairs at SHRM, the Society for Human Resource Management, specifically with our eyes on the job market here. Emily, thanks for joining us as we walk up to the Fed decision today. Your thoughts? There's an expectation here for a quarter-point interest rate cut. That seems to be the foregone conclusion. What is the most direct impact that lower interest rates will have on the job market?
Whoa, that's a big question. Look, I'll say the job market has consistently had three things that we deal with at SHRM: a workforce participation gap, a talent pipeline gap, and a skills gap. And so no matter the numbers, we still are going to need new talent. And even with the onset of AI, we're still going to see new talent. And so those issues will remain no matter what the numbers look like.
Emily, what does a rate cut not address when it comes to the labor market? What is left wanting, perhaps, at 2:30?
Well, what's left wanting for us is the fact that we have a pipeline that is not producing what we're going, the skills, people with the skills that we're going to need once we see an increase in productivity, and once we're able to move forward with the creation of new jobs that will come about, and then of course once we move forward with jobs that will be displaced by AI. We're looking forward to that. So right now it's the issue of making sure we have the skills so that when the market is ready, we'll have the talent ready to help with productivity.
We hear a lot about the weakening labor pool that's been exacerbated by the immigration purge in this country. Emily, deportations have begun to hit employers in a number of sectors, from farming to manufacturing. When you combine that with the lack of incoming skilled workers you're just referring to, what is the result?
So 77% of HR professionals say they face difficulty filling full-time positions. And then 75% are struggling to find qualified candidates for emerging roles. So clearly, and then again, we've also got 25% of organizations who hired for roles that are requiring new skills just last year. And on top of that, outdated degree requirements, which are excluding skilled candidates with alternative credentials. So that's what right now, when you think about what the labor market is looking like and what we need to be thinking about when we don't have talent coming in from outside of the country, is how do we reskill and upskill the talent we have here? And unfortunately, we've got an education to employment pipeline that is leaky, busted, and broken. It's still the best in the world, but we still are natural feeders into that pipeline: K-12, higher ed, and then trade. And then, of course, the untapped talent pools are struggling right now.
Well, Emily, talk to us a little bit about some of those talent pools, because even though perhaps some of the data doesn't show outright layoffs necessarily, we're not in that recessionary crunch period, we are hearing anecdotally about hiring freezes. We've heard about it on Wall Street. We've heard about it on Silicon Valley. Is that a temporary dynamic, or is that kind of the new status quo for the next couple of years?
Well, I still think, and I think the data does show that we will still need people working in this country, just in different jobs. And as we're all trying to balance the onset of new technology and how that can help us do jobs more efficiently with less people in some areas, there will still be people where we need, as SHRM, we call it HI, we'll need that human intelligence in addition to that artificial intelligence to do some of the new roles that are created by the new technology. So this is there's a temporary decline that you'll see, and then you'll see this need to find talent, to get the talent reskilled and upskilled for the new jobs. And then also, there's a wait and see approach right now with the economy. And of course, you all are going to talk later about the Fed rate. And then not knowing, some businesses just right now don't know whether they want to hire. And so they're taking a wait and see approach, but they're continuing to think about what the future of their workforce will look like. Simultaneously, they're just not hiring right now, but there will be a point. And for those who are looking for a new career or have been laid off, it'll be incumbent upon them to make sure that they are being reskilled on their own, or finding support through education in their community to make sure they have the skills needed in the new future of work.
Emily, speaking of, you used two key words there, which is education and reskilling. It's a fascinating one. It brought me back to a conversation we covered a few years ago when Intel was really looking to increase their kind of labor prospects here within the States instead of outsourcing it. And they did it by reskilling via local colleges and community colleges in Arizona around their fab. Is that a model that people can use, that corporations can use in this new world where an emphasis is being put on local hiring and local reskilling?
It's not an old model. So when we talk about this education to employment pipeline being leaky, busted, and broken for years, you've seen states who are, through their community college systems, are quickly able to get talent reskilled and upskilled once you hear that a new employer is moving into your area. We just have somehow lost our way a little bit with the connections. And the same with our K-12. As you all know, we don't do as much training in trades in K-12. There's not the shop class and those classes like that. And I don't know about you, but a car that was manufactured in 1998 cannot be fixed the same way that a car that was manufactured in 2025. And so there are all those skills that are more technical that we need to be introducing our students into earlier, as early as middle school. And so you're right, we have the infrastructure here to some extent. We've got to reconnect that infrastructure. So our community colleges, our trade schools, and programs through our institutions of higher education and K-12 are all critically important to that.
Emily, it's great to have you with us. Emily Dick is Chief of Staff, Head of Government Affairs at SHRM. Thanks for being with us on Bloomberg. We're just about a minute away from our special coverage, so keep this conversation in mind as we get the jobs in the news conference that will follow the Fed decision. A half an hour from now, we'll know, Creedy, but the market seems pretty well intent on a quarter-point percentage cut. That would be a shocker if we got anything more or less.
Absolutely, but the real kind of canary in the coal mine might just be that 50 basis point. Mike McKee, our chief economist, was kind of warning about this idea of, do we see a dissenter? Do we see a case for more aggressive cuts? And what that messaging would look like, not just to Wall Street, but to the American people about the state of the American economy.
The dot plot will factor into this too, with the market looking for a half a percentage point here this year. And then, of course, just the drama surrounding Lisa Cook and Stephen Myron. Michael McKee, we caught him on the way out of the newsroom. I'd be very curious to hear the questions that he's going to be posing to the Fed chair. You'll hear it and see it all right here on Bloomberg TV and radio starting in just a moment. We'll meet you back here at 5. The late edition of Balance of Power starts 5 p.m. Eastern. Right now, a special edition of Bloomberg Surveillance. The Fed decides. It starts right after this on Bloomberg TV and radio.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Live from New York City this afternoon. Good afternoon. Good afternoon. For our audience worldwide, their decision 27 minutes away. It's not about if they cut, it's how much they cut by, 25 or 50.
And how do they signal the path ahead? Do they give a sense of a neutral rate that might look a little bit lower than what we have seen before, given the composition, given some of the pressures, and how do they understand the dueling mandate of inflation versus the labor market?
You're way too technical for me. To me, it's just absolutely historic. I mean, John, you and I, the ECB emailed us one day with a love note saying snooze fest. It's not. There's never been a meeting like this. That's all there is to it. This goes back to McChesney Martin in 1951.
There's nothing sleepy about this one. Three-part act, statement, forecast, news conference. Can this Fed meet this market?
This market has priced in a much greater degree of rate cutting, not just at this particular year, maybe not at this meeting, but throughout the year, maybe 3 rate cuts, but also this question of the terminal rate.
Let's start with this market. Equities doing nicely since the Fed last met, just off all-time highs on the S&P 500, negative this afternoon by just 0.1%. In the bond market, this is a very, very different bond market compared to where we were when the Fed last met. That 2-year was closer to 4%. This afternoon, 3.53. That 10-year, closer to 4.50. This afternoon, closer to the 3s.
Yeah, and do we see a ratification, as you say? Do we get a sense that that is what a lot of the Fed officials are thinking. Coming up shortly, we'll get the views of PGIM's Greg Peters, Kathy Jones of Charles Schwab, and SocGen's Subhadra Rajappa. They'll be taking us up to that Fed rate decision at 2 p.m. Eastern. As John said, it is a three-part act. Immediate reaction as we wait for the press conference with JP Morgan's Bob Michael, Diane Swank of KPMG, and Deutsche Bank's Matthew Lazzetti. And finally, breaking it all down, Chair Powell's news conference has already happened, and we will be speaking with former New York Fed President Bill Dudley and BlackRock's Jeff Rosenberg.
That is a stacked lineup right there through the next few hours. Joining us around the table, Greg Peters of PGIM Fixed Income. Greg, good afternoon. It's good to see you.
Great to be here.
Can this Fed meet this market?
Doubtful. There's a lot of drama around this current meeting. It seems to me it's almost like a B-rated drama with interesting subplots. So I think 25 is obviously assured. There is a remote chance of 50, but it's all about kind of inside. What does the SEP look like? How do we parse out kind of the new participants? How political is it? How much gamesmanship is going on? So that's the interesting twist of it. But the end result, I think, is uneventful, honestly.
So the B-rated drama, I want to get into this. Mean Girls, is that essentially what you're going to be looking for?
I was thinking more like Sunday night movie at midnight type of thing.
Well, hold on a second. Yeah. But this is important. How do you view the B-rated movie aspect of this, given that some of the personalities and projections might actually become the mainstream, the sort of core of the Fed's opinions come 2026?
Yeah, no, that's quite right? So, I think we'll learn more over time. And so we'll see how, quite frankly, politicized the Fed is internally. And we'll see that through the SEP and the forecast. Increasingly, you'll see it through the speeches. But I guess the point today is you might see it through the dissent side, right? And so it feels like most people believe there's 3 dissents to ease more, but there's also a possibility of dissents on the other side. So that could actually really show some bedlam kind of within. I personally don't think it's a bad thing. I think just having consensus all the time isn't constructive, but how this is manifesting this time might be a little different because it's playing a different game, maybe a little more political than normal.
Anna Wong's watching the Kansas City Fed chief, the president, I should say, to see what he does. I want to go where Lisa was.
현재 금리 결정까지 약 24분을 앞두고 있습니다. 현재 매수세 쉽게 나와주고 있습니다. 자, 충분히 실전한 이후에 목표 수준까지 충분히
because you at PGIM have priced
도달할
bonds
수
to
있다고 판단이 되고
perfection,
있습니다.
price up, yield down. Does he have to address today the bond market asset
자,
bubble
긴
and the
대응이었던
equity market
만큼
asset bubble? We're seeing
실망시키지
China
않는
stocks to the
수익권으로
moon and the rest.
보도하도록
I don't think
하겠습니다.
that's part of the calculus,
자,
honestly.
현재
I think the clear focus
6개월
is on
기준 약 80만 원 손실권에 있으며
and labor.
금리 결정까지는 약 23분을 앞두고 있습니다.
Not, I think, part of the thinking at this current point. You go back to Greenspan, and it took years for that irrational exuberance to play out.
금리 결정 전 나오는
I think there was a
금리
a
결정
lesson
전
there, but I do think the
목표
mandate
수익권
is more
도달시에는
tilted towards
수익
growth
청산
than
사인 드리도록
inflation.
하겠습니다.
And what that means for 2026, what I don't think enough people are talking about is what does 2026 look like? So if you have an environment where you have a fiscal thrust coming through, which is expected, you have a more accommodative central bank, you have kind of the pull forward of AI productivity. What does that do to inflation? And what does that do to growth? And so if you run an economy really hot, then that could change how the Fed thinks about the rate path next year.
I'm very, very pleased you've brought up this issue. This could well be the last time we get a forecast from Chairman Powell without knowing who the next Federal Reserve Chair is actually going to be. By the time you get to December, we can have a pretty good idea of what the post-Powell world looks like. Mark Cabana of Bank of America asked a really provocative question this morning, and he's asked it a few times. Why would they stop at 3? Why would they just stop at 3%? How hot is this Fed with new leadership willing to run things?
Well, you have to count on, hope for, the credibility factor, right? And so I think there's two different minds here. So there's a mind of, getting into the role, but then I think ultimately your reputation is bond, so to speak, right? So, I don't think anyone wants to taint their own reputation or really taint the reputation of the Fed itself. So I do think they'll be contained by that. But it is an open question. We don't know. So there is a bias to be more easy, I think, but where neutral is or where, being accommodative is always an open question. And I think we'll test that thesis in 2026 for sure.
This is a compelling point, the idea that the discipline will be imposed by the bond market. And ultimately, the bond vigilantes will come back, particularly at the long end, and will impose a sense of restraint on the Fed and on the administration. Do they still exist if there's, say, is yield curve control or, say, some sort of creative balance sheet use?
That's exactly the point. I actually don't think there's such a thing as a bond vigilante. I think that's an artifact from the past. But I think from a bond investing standpoint, it is really difficult to lean in continuously into the steepener view because of that risk, right? That risk of changing the issuance in the back end, doing buybacks, some form of financial repression. And so it's a very, treacherous place to be given that. And that is why the U.S. has kind of outperformed other global markets because of that. They've done a better job on the debt management front, number one, and then number two, investors have a keen eye on changing that dynamic to, keep back-end yields down.
The inflation-adjusted rate is a residual. Sometimes it's hard to guess. We've had the 10-year real yield come down. I'm going to call it at the bottom of the range. You're the pro on this. What is the significance of, with the chit-chat today, we get a real yield that really breaks down?
I mean, real yield is an interesting measure, right? One measure, high real yield means like that's a very good growth environment. That's one that you should do well in from a risk standpoint. Post GFC, it was inverted and perverted in a way where negative and low meant it was good for risk taking. So I think we're in a much more kind of normalized zone, which is to say, having real yields, kind of the 1% type of zip code is where we're supposed to be. I think that's a truer measure of economic activity than the previous kind of regime.
We've got about 60 seconds left in this segment, at least, and we can continue this conversation. How are you thinking about the relationship between the debate at the front end of the curve and the story further out along the curve? Are the two things connected? Right now, if they drop yields at the front end, what happens to the long end?
Well, they're connected and they're not all at the same time. So the front end of the curve is a much cleaner place to invest, right? Because it is clearly driven by central bank policy. So the closer you get to that central bank policy reaction function, the cleaner it is. As you go out the curve, yes, it's driven by central bank policy action, of course, but it's driven by so many other factors that are beyond your control, right? It has to do with inflation, of course, growth expectations, and this pesky term called risk premium.
Brilliant. John, does Dr. Myron know that?
I think Governor Myron does. I've got some respect for Governor Myron. Going into this meeting, he doesn't strike me as the kind of guy who takes big swings in the meeting. Would he take big swings when it comes to the dissent? I think that's a very, very different question today. I don't think he's going to go in and be rude to people and tell them they're all doing a horrendous job. But he could well be a little bit more aggressive with that dissent if we do indeed get one.
In other words, 100 basis point rate cut, is that what he thought it was deserved? Is that what we're going to come out and speak to later today? That, I think, is really
I'm not sure how much credible a number closer to 100 would be.
Does that rule him out for any kind of Fed contender?
Greg Peters is going to stick with us. Greg, it's good to have you with us. Up next on the program, Kathy Jones and Subhadra Rajappa.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it on Daybreak Europe,
What does it mean if you're an entry-level coder? How much trouble do you think you're in?
Everyone in the age of AI really have to relearn which tool to use when. And if you are technical and you know how the coding works, you're actually more productive with Lovable. Anyone can learn to be productive talking to the AI, but there's an advantage for technical people.
Don't miss Daybreak Europe live every weekday.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It does look like the Fed will cut 25 basis points.
A 25 basis point cut.
If they do 25 bips or if they do even 50, the market should be able to take it.
The Fed will still probably be looking for 2 cuts this year.
3 cuts this year and more to come next year.
Somewhere between 5 and 6 25 basis point cuts out to 2026.
If you continue to see this kind of momentum on the labor market, to get several more cuts in the back half of the year.
There are signs that you'll continue to see that weakness in the labor market data.
If you look at the trend, it's weakening.
In the balance, the Federal Reserve will look at the labor market for now, but they have to keep one eye on inflation.
Chair Powell better sound relatively dovish.
He's going to provide very limited guidance.
The decision 15 minutes away. The consensus view, a move of 25 basis points. 2 outliers. SocGen, Standard Chartered, looking for 50 in about 15 minutes' time. The scores into it look like this on the S&P 500, not far off all-time highs. We're down 0.1% this afternoon. In the bond market, 2s, 10s and 30s shaping up as follows. Your bond yield curve looks like this. Yields higher by 4 basis points to the front end, 354. We have rallied a lot at both the front and the long end over the past 6 weeks.
Yeah, and we've seen even a rally in credit. Just to give you a sense of just how much 10-year yields have rallied. They are down from 4.37% as of July 30th, the last Fed meeting. They are now at 4.03%. Just giving you a sense of that momentum.
A couple days ago, we popped 3.99 in the 10-year, and this morning we made a dash toward just for a cup of Sanka. But the answer is yield space is moving. Greg Peters is exhausted.
Go further out. Go to 30s. Only a few weeks back, we're at about 5.
Yeah.
Come all the way back down towards 4.5%. And the way the curve has evolved through August into September. August, we had a bull steepener, big rally at the front end. September, it's been completely the opposite. We've had a bull flattener led by the long end.
And the reason for it has been different depending on the person you've spoken to. Some people say it's because of the threat of yield curve control or some sort of machinations in the balance sheet. Other people saying, look, if you have all these people in cash, you cut rates, well, they want to lock in that yield, so they're going to go out the curve. That's a new argument, and we're hearing it more.
Joining us now to discuss, Kathy Jones of Charles Schwab, Greg Peters of PGIM Fixed Income, still with us. Kathy, let's start with expectations. What are you expecting in about 13 minutes' time?
Yeah, we're looking for 25, which is the consensus. I guess there's an off chance it'll be 50, but given that inflation is still pretty high, I think it's going to be difficult to have a really aggressive rate cut at this stage of the game, even though the labor market's showing signs of deterioration. An unemployment rate in the low 4s is still not that far from what's considered full employment. And then you've got inflation at 3-ish and edging higher. It's very difficult to make the case for 50 in this environment unless you have a really negative view of where the labor market's going.
Given that backdrop, Kathy, why do you think there's been such a rally in the long end of the yield curve since the last Fed meeting?
Well, we've had the rally because, the expectation, we've had weak economic data and we have a greater expectation for rate cuts. And so, the market has a lot of rate cuts built into it out to 2020. 27. So the long end's been pulled down by that. But I would point out that the curve is still steep and steepening. We're still looking at a steeper curve as we go forward, even even if it's somewhat lower rates. I don't know that the long end can kind of get out of its way if we still have inflation pushing higher, and the dynamics behind inflation are still not great.
Kathy, what's your action plan to put cash to work? I understand we're before the meeting. Let's go after the meeting, but let's take it out into next year as well. What's the Kathy Jones action plan given Fed chaos?
Well, we're hoping people aren't too heavily in cash at this stage of the game, because we've been encouraging them to be intermediate term on the curve and up in credit quality. And I think that is still our plan. We'll see how Fed policy evolves. We'll see how the economy evolves. But we're really looking for a fair amount of volatility going forward. There's a lot of things on the horizon policy-wise that can shake up the market. So we don't want to go super long, but we don't want to sit in cash, because I think the bias is still to cut rates.
Greg Peters, let's get to you on some of this. Why are so many people so comfortable just sitting and waiting in the belly of the curve?
Because they're positive carry, right? You positive carry and roll. It's the bond investor's dream. And so you look at just the level of yields, the steepness of the curve. It's it's a very good environment for just being in bonds, and I would say that's a global story, just not a U.S. story. So I don't think the bond quote unquote bull market goes away. I think it's a very robust environment for bonds. One point I want to just make though, just on volatility.
Sure.
What's really important to watch is the trend in volatility. Typically, what you see as the Fed enters an easing cycle, volatility broadly comes down. It pulls volatility down. So if you actually see vol actually move higher in this rate easing cycle, that could be a sign that there's concerns around, Fed independence, risk around the economy, all these other types of things. So it's something to watch for. It sounds like an arcane part of the market, but it's a really important one to get a view into.
Greg, how crowded is the long bond right now? The shorts were pretty crowded, and they got stopped out, and that was probably a significant part of it. At this point, how balanced is positioning?
Yeah, so positioning is much more balanced. So you're quite right. The move was around positioning. Right. I think at the end of the day, we're fitting a narrative to the positioning trade more than anything else. But the positioning side is much cleaner. As a consequence, I think there's room again for the curve to kind of gently re-steepen here. But positioning has played a part. It will continue to play a part. And so this is how we invest these days.
Kathy Jones, are you writing a strategy as a Fed cut, as a one-off, or is a series of rate cuts on the edge of Greenspan? What strategy are you writing right now?
Yeah, we do think there'll be a series of rate cuts, but we're not expecting the cycle, so much as we can tell at this moment in time, to be as deep as the market has priced in. So, and that's because our view on inflation is that it's going to remain stubborn, because of tariffs, because of immigration policy, you name it, there are a number of reasons. And so we're looking at a series of rate cuts, but not as deep as what the market has priced in. Another reason we're being kind of cautious and anticipating volatility is because we think the market's gotten pretty far ahead of where the Fed is likely to go. And then you add in all the uncertainty about who's running policy at the Fed and the future, and it becomes a stew pot of factors that could cause vol to pick up.
And this is something Brian Moynihan was essentially alluding to earlier on this morning, that in 2026 you could have a sticky inflation story that may constrain that easing bias of the Federal Reserve.
Yeah, speaking not only to Brian Moynihan, but all of the people under him and the acceleration you're seeing in consumer spending, and then speaking to Scott Kirby over at United and hearing the same thing, this reacceleration in consumer consumer spending. It doesn't scream some sort of slowdown or recessionary condition.
They're talking about resilience. We're talking about an equity market near all-time highs, investment-grade credit spreads near multi-decade tights, and yet we're having a conversation about whether this Fed, in 7 minutes' time, will cut interest rates by 25 basis points or 50. Subhadra Rajapra of SocGen is with us now for more. Subhadra, I want to get to you on that. The 50 basis point view, is that what you and the team are looking for, and ultimately why?
So I think the spirit of the call from our economists is the fact that given the information we have on the job market and the revisions, quite dramatic, the Fed has some catching up to do. So the idea is that the Fed is going to have to front load some of these cuts between now and the end of the year. So whether it's a 50 basis point cut at the September meeting and then another 25 basis point cut or a series of 25 basis point cuts, these cuts coming earlier and sooner makes a lot more sense given the fact that we now know that there's a decent amount of weakness in the labor market. That said, I mean, I am sympathetic to the market pricing of cuts, which is calling for, 3 cuts, but kind of more spread out as opposed to 50 basis points at the September meeting. The data, especially recent data, the retail sales data has been very strong. And outside of the labor market, most of the other data points that we've gotten, ISMs, et cetera, have also been somewhat surprising to the upside. So given the fact that, the economy is in a relatively good spot, the Fed does have a little bit of luxury in spreading out those cuts.
Subhadra, you're talking about the evening special on Sunday on C-SPAN. We want to talk about the B-movie, at least as Greg Peters was talking about earlier, the sort of drama in the background. In other words, to put it bluntly, how much does it really matter to you as a bond strategist what Stephen Myron says, given that he is a new governor and he has the full backing of the president?
It does matter. I think words do matter. I think the fact that if you at least optically, when you have maybe 3 governors dissenting for the first time since the late 80s, I think that that's really going to stand out. And what will be interesting is if you actually have dissents on the hawkish side. And that'll really make the meeting very colorful. I mean, if I could, I'd love to be a fly in the wall in these discussions over the last couple of days. But again, I think that these statements and sentiments do carry value. I think broadly speaking, I think that's what the market's trying to suss out as well, because if you look into the end of next year, you're looking at pretty decent amount of cuts being priced in. So the market is assigning a higher probability for a much more dovish, Fed committee, FOMC committee next year.
So, Badra, Societe Generale is a Paris bank in a nation in a complete total uproar. We all know the French story, the politics in all. This Fed meeting is invaded by politics. Does Jerome Powell have to speak to the non-financial America out there?
Yeah, he always does. I think that the messaging has always been very clear and simple. They do look at policy for all Americans, all sectors of the economy. They are going to take into account that there are certain sectors of the economy that are particularly coming under, pressure, especially if you look at, the employment side of the picture. We still have haves and have-nots economy. So Powell, I think, is going to be very, very focused on trying to keep basically all constituents of the economy in mind while changing policy. And that's part of the reason why I think it makes sense for them to front-load cuts, this year.
Kathy, for 4 minutes, less than 4 minutes until we get that decision. If you were in the press conference, what would your one question be to Fed Chair Jay Powell if you had one?
Well, I'm going to assume that whoever went before me asked about squaring up the dual mandate with the rate cut. And I would go on to ask a bit more about the concept of maturity matching on the balance sheet. This is something Governor Waller has talked about, and I think Stephen Myron might embrace as well. And I think that has some implications longer term for how the Fed proceeds and how the market develops. So I would definitely ask that question if I had the chance.
Balance sheet management, Bramo, keeps coming up, doesn't it? Yield curve control,
right?
All of these things. These questions keep coming up.
Yield curve control under another name. I mean, people start tuning out and they hear, tweaking the balance sheet and maturity matching. That is another way of backdoor yield curve control that a lot of people are trying to understand.
Kathy Jones of Charles Schwab, Subhadra Japa of SocGen, to the both of you, thank you. That decision is about 2 minutes and 30 seconds away. We've talked about this three-part act. We got a statement, the forecast, the news conference. Let's just sit on the forecast. The Federal Reserve has to project and forecast not payrolls, but unemployment. And going into this, I wonder if we're going to be surprised more by how much the SEP changes or by how much the SEP actually remains the same. How much can these forecasts around things like unemployment for inflation actually change? And that's what's interesting about the moment. Typically, when the Fed is projecting more interest rate cuts, you'd expect a big downgrade to growth. You'd also expect an upgrade to unemployment. We might not get that in 2 minutes' time.
Especially given the fact that we're at a pretty neutral pace. Just taking a look at where we were, the projection was for 4.5% at the end of this year in terms of an unemployment rate and a 3.1% core PCE. It wasn't expected to shift that much on either front over the following couple of years.
John, I think what you bring up is a really, really important point. What confidence do we have in our guesses out to June of next year, December? Liz Ann Saunders had the map of the day. It was household insurance across America. Let me tell you, half of America is flat on their back.
금리 결정 이후에 나오는 사인에
This is the question, I think, for the committee today, and for the news conference too for Chairman Powell. And there was a key difference between how he addressed this question in July and how he's thinking about it over at Jackson Hole in August. What is anchoring your view on the labour market right now? Is it the unemployment rate? Is it measures of slack? Or is it payrolls growth? Because the Chairman Powell of July was very different to the Chairman Powell of August.
Who said that it was really important back in July to look at the unemployment rate and then the payrolls headline figure. The problem is, right now, people really dispute the idea that we have the same kind of labor market that requires the 150, 200,000 jobs created per month, and that this is more of a 50,000 a month kind of break-even rate that we should be looking at.
Do you get lulled into a bigger conversation, a bigger decision than you
금리가
otherwise would have made?
확정났습니다.
And
자,
that's something that
예상대로
this Federal Reserve has to
확정났습니다.
confront
자,
today
모두들
and for the next several
수익
months.
청산
That decision
사인드립니다.
is
수익
20 seconds
청산
away. The question is not if they'll cut interest rates. The question is by how much, 25 or 50, and how much can you project in the guidance, the forecast. Equities going into it just about unchanged in the S&P 500. In the bond market, 2s, 10s, 30s.
주문
Look like this.
청산이
Your 2-year bond yield
완료되었습니다.
up by 3 basis points with your Fed decision. Here is Mike McKee.
이후에 큰
The answer to your question, John, is a quarter percentage point cut as expected.
대응단 잘 수고 많으셨습니다. 해당 부분 노리고 트레이딩이었기 때문에 실망 없는 트레이딩 중요하다고 판단해야 됩니다. 자, 금리 인하를 지금까지 발표되었다고 해서 끝난 게 아닙니다. 자, FOMC 기자회견이 남아있고요. 자, 14차 진입표 대기하도록 하겠습니다.
Bottom dot for next year is at 2.75%, suggesting once again that is Stephen Myron. The committee sees that the risks to they are attentive to the risks of both sides of their mandate, but they say the risks to the downside for unemployment have increased, and that's the reason that they are cutting rates today. They also adjust the forward guidance in the statement to drop the word extent and just say in considering additional changes to the target range in the future, they will consider all kinds of options. There is no real change to their economic forecasts, but we don't know exactly why that is, whether it's because Myron contributed different numbers than others, or Anna Paulson, the new Philadelphia Fed president, contributed different numbers than others. But the growth rate is marked up for this year to 1.6% from 1.4%, and the unemployment rate is unchanged.
확인 바랍니다.
Inflation at 3% is unchanged from their July forecast, and core PCE inflation unchanged at 3.1%. There's no change overall to the balance sheet. And once again, there was one dissent, Stephen Myron, the new member of the board from the Trump administration. The rest of the board, including Mickey Bowman and Chris Waller, satisfied with moving the rate down to the range of 4 to 4.25%.
Mike McKee, thank you, sir. Stay close. We'll take some time to internalise what we've just heard from the Federal Reserve. A lot of information. Equities off the back of it, still just about positive by 0.1%. In the bond market, yields just a little bit lower at the front end of the curve, down by 2 basis points on twos to 348. And foreign exchange, some euro strength, some dollar weakness. We approach 119 on euro dollar, which is its own story, which we'll get to later, 118.84. I want to do a couple of things. Let's take the forecast and just focus on 2025 and 2026. And I just want to focus on where the projections were in June and where they are now. And just go through this piece by piece. For GDP, compared to June, that's an upgrade for this year and for next year. For the median dot, we've gone from 3.9 in June down to 3.6 for now. So we're looking for another 2 cuts. For next year, we've come down from 3.6 to 3.4. And PCE has remained pretty stable, I've got to say, for this year. For next year, they're looking at around 2.6%, up from 2.4. So just get into this a little bit more. What an odd decision we've got here, Bramley. This Federal Reserve, and you don't usually see this, has cut interest rates by 25 basis points, has increased by just 1 interest rate cut relative to where we were in June for this year. At the same time, they've upgraded growth, kept unemployment basically unchanged, and basically projecting CPI to be sticky and close to 3%.
And saying in their statement that inflation has moved up and remains somewhat elevated, as their S&P, their statement of economic projections, suggests. So then why is the bond market rallying? Why are yields down, even at the long end, if this is basically the projection that inflation will remain high and they will cut into that inflation? And what this hints at, and this I think is really going to be interesting, is this clear desire by the Federal Reserve to overweight the economy, even allowing inflation to run hot, and they will keep cutting despite that inflation. That is what is getting translated into this market.
I want to cross back over to Mike McKee if he's still with us and hasn't run off to the news conference just yet. Is Mike there? Good. Mike, I want to come back to you. How original it is to see this, to see a rate cut, to see the projection of more to come, at the same time all these other things are happening with the forecast. How can you explain that?
Well, I think there's 2 possibilities, and they both center around the new members on the board, Anna Paulson from the Philadelphia Fed, and most probably Stephen Myron. When you look at the range of the forecasts for GDP, they moved up the bottom range and the top range, and the same is true with the unemployment rate. It didn't move at all, but inflation didn't move. And it seems that Myron probably put in stronger growth, lower unemployment, and at least unchanged or lower inflation going forward, and that probably accounts for the changes in the forecast. What's really interesting is the wide dispersion in 2026 dots. There's clearly no consensus yet on how many rate cuts they're going to want to see, except Mr. Myron thinks rates will go down to the 2.5% to 2% range.
Mike, I know you've got to run, but when you go into that news conference, you're starting to think about questions already. What do you want to know from Chairman Powell?
Well, I think you guys were phrasing it well there in your reaction.
체결되었습니다. 확인 바랍니다.
Then why are you cutting rates is sort of a basic fundamental question here.
Mike McKee, with the latest, you get ahead to that news conference. It starts in about 25 minutes' time. So we got 25. The Federal Reserve ultimately met the market for 2025. 2026 is a little bit more interesting because this market, Bramo, as you know, is much more aggressive on rate cuts for next year than this Federal Reserve, based on the median dot in the Federal Reserve's projection, because as Mike McKee just indicated, the dispersion, which is something you talked about, the spread of the dots for next year is incredibly wide.
And it makes one wonder if a certain dot has a greater weight than other dots, given the fact that the market is moving on the idea of more cuts, even though some of the other dots suggested only 2 cuts this year and relatively few next year. And the Statement of Economic Projections talks about a Fed funds rate that ends next year well above 3%. We are now below that in the futures market.
Something you're interesting, you got a median, you got a central tendency, you got a home in the range and all that. Guess what? There's not a median statistic here above 2%. Is sub 2% economic growth politically acceptable coming up on an election in 2026? I don't think so.
The answer to that is no.
No,
which is why
this
the
is
administration...
Asia Europe is what I'm looking at.
To your point, TK, which is why this administration would like this Federal Reserve to be a lot more aggressive than these dots would imply.
Which is the reason why the market is hearing exactly what you're pointing out, that that is not an acceptable kind of reality. And that's why I think it'll be very interesting to see how Fed Chair Powell really gets behind this.
Greg Peters, you're following the story as it evolves. What's your initial takeaway?
Yeah, so the initial takeaway is definitely prioritizing growth. Not surprised that Myron was far afield. I am surprised by only one dissent, though. But I think most people thought, myself included, you'd have 3. But I think the question that we're not asking is inflation itself. So is embedded in that forecast, is it still a, I'm sorry to say, transitory inflation component driven by tariffs that roll off over time? And so if indeed that is factoring in to the Fed, forward thinking, then that does mean there's more room for cuts because they're not as worried about that inflation component. So I would just be hesitant to look at the inflation number in abstract. I think what's driving it underneath is the key.
To your point, there is a very clean, dare I say, convenient glide path back down to 2% in the forecast from 3.1 to this year, 2.6 for next, 2.1 after that, down to 2 for core PCE.
Yeah, there's a big rebuttal on that, and that is in the dollar. And you mentioned this earlier, and the idea that long-term bonds yields are falling. You're seeing a rally across the board in everything but the dollar, which just hit the lowest levels going back for the entirety of this year. That is speaking volumes about exactly what you just pointed to.
We just took out 119 on euro dollar. Let's head over to Europe and catch up with Bob Michael at JP Morgan in the heart of foreign exchange in the city of London. Bob, great to get your thoughts. You've had about 8 minutes to go over this one. What jumps out to you, sir?
A couple things jump out. Greg's right. One dissent was surprising. We certainly thought there would be 3 pushing for 50 basis point rate cuts and possibly 2 suggesting nothing. And then also the fact that 2 rate cuts were pulled forward into this year. We thought there would just be 1 more for this year, so more or less where we were last time. It tells me that this is a Fed that locked arms, felt this was time to reduce policy from what was surprisingly restrictive to them. They were probably shaken by the labor market revisions and thought, wow, we've kept policy a lot more restrictive than we thought. Let's start getting to neutral and let's do it in unified fashion. I think this is good for the markets.
Bob, good for the markets. Let's talk about which ones. It might be good for risk assets. How much can this keep being supportive for long-term bonds, given that theoretically higher inflation would come on the heels of a prioritization of growth, and typically higher inflation is bad for long-term bonds?
Well, I wonder if the indication of higher inflation is just a suggestion to us not to expect 50 basis point rate cuts in here, but 25 perhaps every meeting for the next few meetings. Maybe they don't get down to 3% right away. They pause somewhere around 3.5 either side of that. I get that. I'm sort of with the Fed. We don't really know the shape of inflation until we see the final shape of tariffs. Right now, the evidence is pretty good. Businesses have absorbed some of it, and the consumer hasn't really pushed back all that much, and there's been signs of disinflation. So I'm not that concerned about inflation.
Bob, your colleague Michael Feroli made global headlines a long time ago talking about a sub 2% potential GDP. Without COVID, tri-stimulus, and all the rest, and the legislation, these median growth estimates today, do we have to get used to this? Sub 2% real GDP?
It doesn't feel like we're going to have to get used to it. It feels like we live in a world where policy will be generous on the accommodative side, both fiscal and monetary. We're looking at dots now, but we also haven't weighed in. Forget about tariffs. The One Big Beautiful Bill Act, that starts to hit in earnest in the first quarter. So I wouldn't be surprised to see GDP estimates go up next year.
For those of you just tuning in, about 10 minutes ago, 11 minutes ago, the Federal Reserve made the decision to cut interest rates by 25 basis points. There was one dissent, an individual looking for a 50 basis point cut. That was the newly minted Governor Myron sent over from the White House at the Federal Reserve. I want to get to something, TK. Check this out. Go to the dot plot and the projections. And if you go to the dot plot and you look at 2025, there is a very lonely dot at the very bottom of the screen, and it's sub 3%. Not for next year, but for this year. There is a dot there, just below 3% for 2025. Now, we're all asking, and of course, when you follow those things, there are no names on the dots. You don't know who they belong to, but I think we've got a pretty good idea who this might have come from. We've been asking how aggressive Governor Myron might be. The descent is one story. The push for a whole lot more for the year ahead.
You mean 125 basis points of rate cuts by the end of this year seems a little bit aggressive? Look, to me, that is notable, and it might be exceptional for people to hear that and absurd if you think about the growth in the economy. And yet, how much is the market trading off this? And I wonder, how much does this have disproportionate weight in the market? Because this is someone who really is coming with the backing of the president and could be some sort of signification of who he might pick next year.
I can see this picture out the corner of my eye. So let's take this picture. And for our audience at home, I'm just going to articulate what we see on the screen right now. So you've got this lonely dot for 2025. And then in 2026, you've got this additional story to think about. This massive spread in expectations from individual policymakers at the Federal Reserve. Lisa, they have got absolutely no idea what 26 brings, what 27 brings. Correct. This is a low conviction Federal Reserve, and you've got to bear that in mind when you go into this news conference. These guys are not gods. They haven't got crystal balls. They are clueless going into next year.
We're all clueless. And when we were speaking today to some of the heads of retail banking, what we have seen is retailers themselves don't know how much they can pass along inflation, how much there will be this elasticity in terms of demand.
Greg Peters is not clueless. I'm looking at the Bloomberg Total Return Corporate Index, and it is a miracle price up and yield down. Do you predict that we will see these acclaimed indices, the Lehman, Barclays, et cetera, now the Bloomberg Total Return Index, they're going to break through and go through the highs of pre-COVID? I mean, we can have a new low-yield regime that we just didn't think would occur.
I don't think so. I think that's heroic. I think the world has changed post-COVID. I think the environment of zero interest rates, negative interest rates will continue to be looked back on as a bad idea. That drove those rates to those levels. So
but can we go on the edge of Myron? I guess that's the question. Can we find that dot?
I don't think you can get there without a recession, honestly. And I think it's important to remember, the starting place is above neutral, right? So we're not even at the top of neutral yet. Yeah. So, the Fed still has room. They still can get to 4%, and they're neutral, right? And so we have a long way to go. As you get much lower, though, that's where things become really quite accommodative, and I think that's a different question. So I think we're all kind of hot and bothered by this move, but the truth of the matter is we're not in neutral territory yet.
In some ways, this was the easy decision, and every decision after this gets a little bit harder. In equities right now this afternoon, equities rolling over on the S&P 500, so negative now by about 0.25%. Check out the Russell, up by 1.24%. The rally for small caps continues. Bond yield still a little bit lower at the front end, lower at the long end. 30s are down by 3 basis points. 2s are down by almost 2 basis points. We've got Bob Michael at JP Morgan still with us. Bob, I want to come back to you. You've just heard from a Federal Reserve, and I don't know what we get in the news conference, but let's just go with what they've told us so far. They're telling us we can upgrade growth, not bring down the projections for inflation, and ultimately offer you more rate cuts. How bullish does that make you as a bond investor?
Aren't they magical? It's all dependent on their policy. If they bring rates down to where they say they're going, they think they are going to cause greater growth and maintain stable inflation. Look, I think there are so many policies in flux on the fiscal side that we don't know yet. I think what we do know is that the labor market was starting to struggle by a greater degree than we all had thought, and we saw that revision and went, and it's time to start relieving some of the pressure on corporate America now.
John, it's 2:16. We've yet to mention tariffs. I find that extraordinary.
So I'm pleased you've brought this up, TK, because I think still a lot of people are talking about the tariffs of April as an event and not a process. And I think it's far more important to be open-minded about the process and the potential of pass-through still to come. We know based on the data so far that we aren't seeing the exporters drop prices aggressively. You can see that in import prices. We know based on the data so far that a lot of companies domestically are absorbing this on margin.
Right.
What we don't know is whether they pass on those costs in the next several months and change this inflation picture entirely.
Exactly. And when I look at the Excel spreadsheet from the Fed here and the sub 2% growth, my question is, are we seeing a decline in purchasing power? And that's why you see, the curve coming down and yields coming down right now.
I think what we've seen, Tom, without a doubt, is that we've seen a massive step down in payrolls growth.
Yeah.
That has clearly spooked some members of this Federal Reserve. But Lisa, I think it's key to point out, not all members of this Federal Reserve. There's some members of this Fed will still be anchoring their labour market view around what's happening with unemployment, which has been pretty stable through all of this, through the whole of this summer. And look at the forecast from the Fed. They're still forecasting pretty stable unemployment around 4.5%.
Yeah, which is the dispersion. And going back to that is the reason why I'm struggling to interpret the move in markets right now. Because is the market taking their guidance on Myron or on the idea that there are Fed officials who are pushing back and saying, actually, we need to be tighter? Right now, is this a trial balloon for what it would be if there was a Fed that was being more aggressive? Or are we not there yet? I mean, that I think is going to be a tell in terms of, does the bond market behave if it believes that a Fed is willing to really prioritize growth in a significant way over inflation?
Hey, Bob, good to catch up as always. Bob Michael there of JP Morgan. Lisa, let's turn to Diane Swong of KPMG. She's standing by. Diane, welcome to the program. So much to process here going into this news conference in about 12 minutes' time. What's your number one issue going into the presser?
Well, first of all, it's really clear that Powell corralled the cats, and I assume that Waller and Bowman did not dissent in part because of the strong retail sales data, which also revealed inequality and something else that's going on out there, and that is that spending on restaurants went up after adjusting for inflation. Spending at grocery stores actually fell after adjusting for inflation and the retail sales numbers. And so you've got this sort of, the K-shaped economy we keep talking about, the bifurcation, but that masking the underlying weakness in lower and middle income households. So this was clearly an acknowledgement that, yes, the labor market has weakened and they want to shore up the labor market. What surprised me as well was that we had heard the Fed talk about a reduction in what they thought the neutral rate was. Powell had referred to that there had been some discussion about that in previous meetings. That did not show up in the forecast. And I think that's important as well because they're removing restriction now. It's not just calibrating down because the neutral rate has moved down. They're trying to say, listen, we're removing some restriction, acknowledging the weakness in the labor market, want to shore up the labor market. But if you really do read this sort of through to next year with a major change in leadership at the Fed, you could have a situation where you overstimulate and get a more pernicious and self-fulfilling prophecy on the fact that consumers and firms now expect inflation to be higher. And I think what the Fed is struggling with is that consumers are also telling them in their own surveys that the job market's the worst it's been on record since 2013. That's something that has got to have startled the Fed as well.
Diane, this is without a doubt a very confusing economic time. It's also a very confusing time when it comes to the Fed's reaction function. Do you have a clear sense of how the Fed is going to prioritize incoming data, whether it's retail sales or jobless claims or whether it's the payrolls report, and decide how much to ease?
자, 추가 매수 진입 사인 드리도록 하겠습니다.
It's really hard. This is, it's one thing for the Fed to have forecast the stagflationary mild bout of stagflation that they did since March. That's gotten
체결되었습니다. 확인 바랍니다.
That was hard to forecast. It's another thing to live it in real time. And that's what we're doing. And unfortunately, it is very hard to not. You have to shore up the labor market a bit. That said, you don't want to remove so much accommodation that you allow these waves, as we heard earlier. I mean, the idea that these are an uneven rollout of tariffs, so it's not just one and done. And Powell was careful in his Jackson Hole remarks on that too. It's not all at once. It's coming in waves. That reinforces the idea that we're going to normalize inflation, which becomes its own self-fulfilling prophecy, and the Fed really has to be quite cognizant of that.
And Diane, in the study of Michigan, Chicago, and down south down the Mississippi River, the mail I get is people are flat on their back in this K-shaped economy. How does Jerome Powell address the have-nots of America? They don't have AI. They didn't buy NVIDIA like John 3 years ago. What do we do with the people that aren't participating in the system?
Well, it's really the inequality is getting worse. We know that. Actually, Moody's just came out with an updated estimate on some of the inequality, and the top 3.3% of households are really doing really well. The top 20%. A little bit better in terms of gaining spending since 21 relative to inflation. The rest of the economy, the bottom 80%, pretty much flatlining it since after adjusting for inflation on their spending patterns. That's a really tough position to be in, and it gets to the heart of what we're still dealing with is the embers of the pandemic inflation were still smoldering when you added on the tariff-induced increases in prices, and that's what's really tough for the Fed to deal with and for the average American, because remember, even when the labor market was much more robust, when inflation flared, the majority of Americans believed we were in a recession because their purchasing power was eroding and they were losing ground. And I think that's very important because it really gets to the corrosive nature of inflation. And at the end of the day, you cannot get full employment sustained unless you really derail inflation. What we don't know is if this will just be a couple steps up and then just come off, or if it will be more persistent, and that's what he's going to have to emphasize at the press conference today, is that they're going to be mindful to watch what's coming on in terms of how persistent the inflation becomes and how much inflation expectations, to get jargony, get unmoored.
NVIDIA. That's my biggest position, TK, at Hindsight Capital.
You killed it.
I wish.
You just killed it.
Diane Swank of KPMG. Diane, thank you. Appreciate it. Matt Lazzetti of Deutsche Bank standing by. Matt, welcome to the program. What an interesting forecast mix. More rate cuts in our future. Growth apparently okay. Unemployment not a problem. Explain that one, Matt.
Yes, I think for the near term, it's pretty clear. They talked about increased downside risks to the labor market. And so this is all about risk management. It's not about modal forecasts at all. As you noted, growth is stronger, the unemployment rate unchanged for this year, inflation unchanged for this year. You can see it at the back of the SCP, their forecast. There was a little bit of a shift in the distribution of risks. Those officials that are more worried about downside risks to the labor market, less officials that are more worried about upside risks to inflation. It's basically in line with what we were anticipating. The Fed shifting in a little bit more dovish direction today, close call on the 2 versus 3 dots. I think the key question for Chair Powell is how much does he lean into the near-term signal of cutting at each meeting this year?
Do you get a sense, Matt, of how much the reaction function has shifted? John's done a really great job of talking about how from July to August, there seemed to be a shift from the unemployment rate to the headlines, payrolls report. Do you have a sense of just how tolerant this Fed is going to be of inflation well above 2% for years on end and keep cutting?
Look, I think they're showing us that they're pretty tolerant above target inflation. In fact, if you look at their forecast for next year, they actually raised their inflation forecast by 0.2. They raised their growth forecast. They lowered their unemployment rate forecast, and yet we see a lower Fed funds rate. I think the reality is we are now projecting at 5+ years of inflation being at least 50 basis points above their target, and yet they are cutting rates into that environment. So I think it's a Fed where, as long as there are no worries about the labor market, they can be hyper-focused on inflation. But once some of those concerns about the labor market really manifest, you see a pretty dovish shift. And I think that's what we saw from Chair Powell at Jackson Hole, and we're seeing it manifested now through the dot plot.
Matt Lazzetti, Diane Swank brought it up, and many others have as well. We're all focused on tariffs and substitution. Are we seeing a decline in purchasing power here? Is there an income effect from tariffs that the Fed has to fold in? And what is this, John, 50 more beeps they're going to do by the end of the year?
Potentially, yeah. Widespread of estimates, though, TK.
Win one of them.
125.
TK, Spurs are doing all right.
Yeah, they are.
They're doing all right.
Matt, purchasing power here. This is a huge issue for Americans, isn't it?
It is, no doubt. But, I think the main area where you would first see that is through consumer spending data. And I take Diane's point and the points earlier that there's great dispersion around that data, with that being driven by higher income households. At the same time, GDP growth is tracking above 3% in Q3. It was above 3% in Q2. Retail sales are robust. CapEx growth was strong. So I think it's a Fed where, even if you are seeing it eat into disposable income growth, consumer spending growth in the aggregate is strong, and monetary policy has one blunt tool, which is the Fed funds rate. So really, they're not apt or really able to get at a lot of those distributional issues. I think Chair Powell and the Fed would probably tell you that is more up to fiscal policy, tax and spending policies that we would see from the administration. So I don't think that this is really about trying to alleviate some of those distributional concerns. I think it's concerns about the aggregate labor market, which is not being manifested in strong growth at this point in time, and them just trying to get ahead of it and taking out some insurance against that.
Matt Lazzatti, appreciate it. One of the best, Matt. Thank you, sir. Matt Lazzatti there of Deutsche Bank. The news conference a few minutes away. We often hear people come on the programme and say, I expect it to be dovish, and really the response to that should always be dovish to what? Relevant to what? Relative to who and what and where? Relative to the market, this isn't dovish. Of course, we were looking for really bullish expectations for rate cuts in the next 12 months or so. But it's their own forecasts that make this dovish. The fact that the Federal Reserve is coming out and telling you, you know what, Lisa, next year, I expect a better picture for growth. I expect a slightly higher inflation print than we did a few months ago. But you know what? I give you some rate cuts to the mix as well. That's basically what the Federal Reserve has communicated in these forecasts today.
Yeah, the currency markets are hearing that loud and clear, and I think that is the biggest tell, and I keep going back to that with the Bloomberg Dollar Spot Index now at a new post-2022 low. We have seen it completely weaken, fall versus some of its counterparts. Why? Because of this prioritization of growth over inflation by the FOMC and a reiteration of that in this SEP.
Greg, I got to ask you a basic question. You've been doing this for a few years. When you read sell-side literature right now, economic think tank literature, can you trust the forecasts?
Well, yes. I mean, I think forecasts are always fraught. The dot plot is no different than a sell-side forecast. It's not like they come with any additional information. But I think in this particular period, when there's so much going on, and I hate the word uncertainty, but it is the right word. I mean, we've been talking about tariffs as an example. We have a Supreme Court decision coming. We don't know what the shape of tariffs is going to look like after that, just as one example. So, so it's a really difficult environment. So you should expect to see more dispersion.
자, 여기서 수익 청산사인
What the markets are trying to suss out, what I'm trying to suss out is what's real and what's political. And I think that's an open question, and time will tell on that front.
Is the political real?
수익 청산 후에
Political is driving the real.
They're going to be the same thing next year, aren't they?
Yeah, no, absolutely. And I think this is the world,
주문 청산이 완료되었습니다.
investment realm that we have to deal with. And so it's not going to change anytime soon. But this was an incredibly dovish SEP and dot plot, and the markets are responding in kind.
We don't know for sure who that dot actually belongs to at the Federal Reserve. You can have a decent guess. Sure. They're not going to tell us, but here's my point.
I bet